was appointed by President Trump, no doubt, in the hope that this would be a new dovish era. Where do you place the odds of his first move to be presiding over a rate increase?
Well, you know, if you force me to make a decision between a hike and a cut, I think there are sufficient factors to justify a cut, actually. And that's where I think the biggest mispricing is relative to market expectations. The market's expecting a hike. I think, you know, some of the tailwinds in the U.S. economy certainly suggest a strong economy. There's AI capex. But at the same time, you know, that capex is oriented around labor substitution. So I think in a forward horizon, there is going to be some pressure on the labor market that could suggest either doing nothing or a cut. Now, why do I say doing nothing? You know, in the absence of any certainty around whether the economy is strengthening or weakening on a, say, one-year horizon, the safest thing to do might be to do nothing. And I don't think that's crazy. For the first couple of meetings, for Kevin Warsh to sit back, wait for the data to come in, and make a more informed decision about which way to go.
If we move over to your territory, Asia Pacific, I mean, you've spoken before about this idea of desynchronization. We have inflation pressures in the US on the one hand, some disinflationary pressures in parts of Asia as well due to excess manufacturing capacity. So when you think about this sort of divergence, which Asian sovereign or corporate debt markets, you know, look like they're going to offer the best uncorrelated yield cushion against US risk?
Look, right at this moment, almost all countries and all assets have become highly correlated with oil. So I think even in Asia Pacific, while we do think the desynchronization story is real and the longer term story, that's the right thing to focus on. It stems from policy divergence, easy fiscal policy in the US, more conservative in Asia, trade policy, tariff policy that has driven a wedge between the economies on either side of the Pacific, creating an inflationary backdrop in the US, but a deflationary backdrop in Asia. I think all that is real, and we are getting a very good entry into Asian yields. But for the time being right now, most Asian bonds have become correlated with oil, and again, that's providing quite a good entry right now to buy into Asian yields. The best stories I can think of right now are where the market is pricing an excessive degree of hikes into the forward yield curves of certain sovereign bonds. You know, the places that have been hit hardest, the biggest net oil importers, those have been hit the hardest by the Middle East crisis and the oil shock. But those bond curves have also, the market has responded by pricing those yields to quite extreme levels. I'd call out India, Philippines, Indonesia to some extent, Australia to some extent, as having a lot of hikes priced in. In fact, I would say that mix of countries, including Korea to some extent, are pricing in hiking cycles that take the policy rate to new highs above the prior cycle's high. Now, when those kinds of extremes are embedded in market pricing, I think you get some valuation support that you can use to start accumulating the bonds of these countries, even without that much certainty, you know, on the crisis front. And of course, if we do get certainty in the Middle East, that's just a tailwind for this trade.
What's the pricing of hikes like, though, when it comes to Japan? Because my real question is, do you feel like the window for the BOJ tightening is either closing very rapidly or may have even closed?
It's a great question, and I think Japan is just another example of how diverse and how much differentiation, how much diversity you can get just within APEC in terms of a bond portfolio. So the Japanese yield curve obviously is much steeper than the other yield curves. Japan is coming from a place of not having gone through a proper hiking cycle when most of the other countries I mentioned did. So the Japanese front end is very low, and I think for Japan, the next move is probably rightly a hike. It helps to solve a number of problems or address a number of problems, including a weak currency and inflation that's above the BOJ's target. So while I think that in most of the rest of APEC ex-Japan, the right place to be is probably the belly to the longer end of the curve, for Japan, I think being short the front end and buying the extreme long end is it has better convexity or better risk reward. So the flattener trade is where we're in Japan.
All right, Navin Sehgal, Head of Global Fixed Income for Asia Pacific at BlackRock. Thanks so much for your insight today. Well, US Secretary of State Marco Rubio has invited Indian Prime Minister Narendra Modi to visit the White House. Rubio is on a 4-day visit to India aimed at improving bilateral ties. Tomorrow, he's also going to join talks with the Quad, a strategic grouping that includes Japan and Australia. Let's get more on this now from New Delhi with our government reporter, Sudhi Ranjan Sen. So, Sudhi, what are the main takeaways so far from Secretary Rubio's visit?
So to begin with, there was this drift in the relationship that we have seen over the last 1 year at least. Because of India kind of sensing that the United States is not too keen. The trade deal was going through rounds and rounds of negotiations. The final negotiations are still going on. So one of the main things that we see as an outcome is both sides trying to arrest the slide in the relationship, and that is where the invite from the Secretary to Prime Minister Modi to visit the United States comes in. That is where it is being placed in that context in India. That is one. And also yesterday, what we could make out, after the meeting of the two ministers, Secretary and Minister Jaishankar, is discussions on energy, with India kind of clearly saying that the United States is a very, very reliable and a very important partner in the energy matrix for the South Asian country, which is one of the biggest importers of energy. And also in that discussion, we saw India very clearly saying that US sanctions on Russia is distorting the oil market, and that is not the best. So free and frank discussions to a great level. But what we understand is that India will, despite the invite, despite the bonhomie that we saw, India is going to watch out very carefully as to what actions the United States takes. Mind you, this visit is happening on the backdrop of President Trump meeting Xi, and India-China ties are not at the best. So India is going to look out and see what practical actions are coming from Washington. It's a good development, but a lot more road needs to be covered.
What can we say at the moment about the current state of US-India ties?
Well, US-India ties, India always kind of agrees that it's one of the most important relationships for the South Asian country. We saw a similar assertion by the Secretary of State yesterday, saying that the India ties is perhaps the most important relationship. So the intent is there on both sides. It now needs to be turned into practical actions. So, and arrest the drift, as I was kind of mentioning earlier, the drift in the relationship, with both sides feeling that the other side is not doing enough. So that the visit is in a way trying to arrest that, trying to rebuild on the ties. So that is where the relationship is.
All right, government reporter Sudhi Ranjan Sen there. Thank you. Still to come, China ramps up its biggest crackdown on cross-border trading, with as much as 250 billion Hong Kong dollars of assets seen at risk. We'll discuss what this means for brokers and flows with Grow Investment Group's William Ma. That's up next. This is Bloomberg.
एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल देखोगे मार्केट अभी आज बैंक हॉलिडे है यूएस में, यूके में, तो वहाँ पर तो मार्केट कंप्लीटली क्लोज्ड है। इंडियन मार्केट ओपन है, एमसीएक्स ऑलरेडी ओपन हो चुका है। नेचुरल गैस क्रूड ऑयल देखोगे गैप डाउन ओपन हुआ है, अभी फिलहाल चार्ट ओपन नहीं हुआ है, पता नहीं क्यों, स्टिल नॉट शोइंग द चार्ट. लेट्स सी इंडियन मार्केट वेयर द ओपन. परसों सेलिंग अच्छी आ गई थी नेचुरल गैस में, 1% का गैप डाउन लग रहा है. नेचुरल गैस में चार्ट चेंज कर लेना, एक्सपायरी हो चुकी है. ठीक है, थोड़ा सा गैप अप लग रहा है निफ्टी, बैंक, सेंसेक्स दोनों में ही. यूएस क्रूड ऑयल देखोगे गैप डाउन है, अभी इंडियन मार्केट ओपन नहीं हुआ है. परसों जहाँ पर क्लोज हुआ था वहाँ से लगभग 5% गैप डाउन ओपन हुआ था, अभी लगभग 7% डाउन चल रहा है फॉरेक्स में, करंटली एट $93 यूएस क्रूड ऑयल. एम सी एक्स भी देखोगे अभी ओपन नहीं हुआ है यहाँ पर, ऐसे हो जाना चाहिए था अभी तक, बट 8688 के आसपास. क्रूड ऑयल जून फ्यूचर 8686, लगभग 5% डाउन, ऑलमोस्ट लोअर सर्किट लगने ही वाला है इसमें भी, ऐसा लग रहा है. एंड नेचुरल गैस में देखोगे, नेचुरल गैस की ऑप्शन की एक्सपायरी हो चुकी है मई मंथ की, तो जून मंथ का ही चार्ट यूज़ करना. जून मंथ में नेचुरल गैस 1.48 पॉइंट डाउन टू 86 पे चल रहा है करंटली. ये जून मंथ का ही चार्ट है, मैंने कॉन्ट्रैक्ट चेंज तो कर दिया, देखते हैं ओपन होता है, तो अभी कॉन्ट्रैक्ट ही ओपन नहीं हुआ है यहाँ पे, फिर नहीं तो फॉरेक्स का चार्ट ही यूज़ करेंगे. गोल्ड 1% पॉजिटिव, सिल्वर ऑलमोस्ट मॉर्निंग पे तो ठीक ठाक पॉजिटिव था, अभी थोड़ा डाउन चल रहा है. फॉरेक्स में स्टिल 2% अप है. सिल्वर एमसीएक्स में लगभग 1%, 5% के अराउंड अप था. लेट्स सी द इंडियन मार्केट क्या सिनेरियो रहता है. परसों न्यूज आई थी दैट यूएस एंड ईरान विल क्लोज अ डील टू स्टॉप द ईरान वॉर, उस वजह से क्रूड ऑयल के प्राइस भी डाउन गए थे.
The market fallout is likely to be manageable. That is because the affected assets are spread across different products, and any equity selling would probably, be spread or be gradual during the 2-year period. So, so there's sort of a lot of a long time period to digest the news, I suppose, for investors. Plus, there are still many questions about how regulators will execute this. For example, whether mainland investors' offshore stock holdings will need to be liquidated in 2 years, or are they merely restrained from trading offshore stocks while they are in mainland China. We've also heard from market participants that they saw clients starting to shift their trading of offshore stocks to banks such as Bank of China Hong Kong branch or HSBC, where such trading activity is still allowed. So we don't know how long that's going to last, but what we can see is people are really looking for other ways to go around it without having to liquidate their stocks.
All right, Managing Editor for Asia Equities, Lian Ting Tu. Still many more questions there, so let's unpack a few. We'll get more on the impact of this on Hong Kong and mainland stocks. William Ma, CIO at Grow Investment Group, joins us. William, I want to get to some of those unanswered what-if questions in a moment, but first of all, are you surprised by this sudden crackdown, or was it always going to happen one day?
Well, actually, it's not a total surprise to the market, participant. If you recall, the first so-called rules and announcement was back in 2022, in which I think the government has made it very clear. But what really surprised is, it takes 3 years to make the formal announcement and then the penalty. So as such, I don't think there is a huge impact to the market at this moment, given the time horizon is about 2 years. But to be honest, to the brokers, they got penalty, the earnings definitely will be impacted. So to the broker, the impact is higher, but to the market, I don't expect, big correction in the next few days.
Yeah, well, Lian Ting also referenced some of the Bloomberg research that we've done. A record 1.04 trillion in hot money leaking out of China last year. Does this crackdown have a whiff of panic about it from regulators?
Well, I think it's not just from the regulator perspective. It's about there are push factor and pull factor. Actually, if you look at the turnover on the China-Asia market, it has been increasing. I think part of the reason is because of the lower rate environment in the China market starting last year. For example, at CrudeOil, when we are seeing, other fund manager, they are seeing decent inflow. So I think the push factor, if you like, is the lower rate environment, and the recovery of the economy, encourage investor to put more money into the market. And then the second point is a global diversification. I think the domestic retail investor are at a stage that they also realize we have to invest in global diversified, asset classes. Like in the US, 20% of their asset is outside US. In Europe, 35 to 40% is outside Europe. So I think in the China market, investors are following the same footpath. They want to globally, diversify, invest in different areas. Last but not least, in an uncertain world, I think people would like to invest in AI, in tech, in which some of the global companies, they offer more clear play. So not just Hong Kong, Korea, Taiwan, and US are all the usual suspect when investors invest in global from China.
Well, we're seeing the CSI 300 up by about 0.9% at the moment, so it's having a pretty nice start to the week. You mentioned you don't anticipate a huge effect on Hong Kong listed stocks due to this 2-year deadline. So plenty of time there, but we are seeing the Nasdaq Golden Dragon taking a bit of a hit on this news. Could we see any meaningful re-rating of some of those China tech names?
I don't think so, because when I talk to some of the other funds, including us, the China tech names, the buyers is quite diversified. There are some U.S. pension fund, European pension fund. They cannot find enough pure play, globally in this sector. I think the short-term sell down, in the Dragon Index is part of the global investor that they worry about. There will be more regulations overall in the financial sector, not just, on the broker side. That is the short-term correction. But in terms of growth opportunity, I believe in a so-called volatility increase. Tech and AI is the most promising theme. So any correction, at least from growth perspective, we would, add to our exposure.
Well, you're a global investment manager. Are you facing any compliance risk from this, or is it a bit of a minefield for anybody who might be facing a compliance risk from this?
I think the compliance risk is mostly for the brokers, themselves who are trying to operate in China and then trying to do China-related business. But again, I don't think this is a new rule, from the Chinese government. So that will impact, some of the companies that is doing business in China. But even for firms like Futu and other firms, if you look at the announcement, the revenue and net income and percentage of client from them in China is mid-teens, to 10%. So I believe, from a sell-down perspective, 20 to 30% sell-down of the stock is a little bit stretched, from my perspective, given they are expanding. And at the end of the day, I believe, in a low-rate environment in China, investors want to invest. So I think there are also other channels that is potentially positive for the Hong Kong market. For example, Stock Connect, Hong Kong Stock Connect, there are about 536 firms listed in Hong Kong that domestic Chinese investor can use Stock Connect to buy, and that cover 80 to 90% of the market cap. So maybe one direction change impact to the market in the near term is we will see a speed up of domestic Chinese company wanted to list in the Hong Kong Stock Exchange so that, the investor can invest, through Hong Kong, Stock Connect in a Hong Kong listed company.
Yeah, okay, so Stock Connect is still there. Are there any other paths, though, that are still open for Chinese investors wanting to invest overseas? And what's the risk of those being closed off?
I don't see it's a close, rather the regulations is trying to pull the money, if you like, to a more regulated, environment. There are mutual fund connections, that investor can investing in. And then last but not least, I would also say, think about why Chinese investors want to invest in global companies. Because they want to have a more diversified global revenue source, meaning that the Chinese company, if they listed in Hong Kong, if they got more revenue from non-China related business, that create a portfolio diversification on that. So I believe those global companies listed in Hong Kong or listed in Asia will have a premium when the domestic investor, so-called, they have limited access in global revenue stream for global diversification portfolio.
Do you feel this might signal a permanent transition to a more closed, more tightly insulated Chinese financial system?
I tend not to, think about that way, because if you look at what the, Hong Kong Stock Exchange, Hong Kong government and the Greater Bay Area has been doing, I do see policy trying to encourage, the cross-border, activity. But again, it has to be a more regulated environment, more clear. To be honest, as a market participant, I welcome the more clearer, regulations so that, people can do business that way. I believe the mutual fund connection could be a big thing. If you look back in history, to be honest, it's quite unhealthy at certain times when some of the China ETF, listed in China investing in, S&P and 500 and NASDAQ, they're trading at 40% premium. No one should pay 40% premium in buying an ETF globally. So there is demand. That's why I think the regulations coming in to promote the Hong Kong Stock Connect, the Mutual Fund Connect, and then the Greater Bay Area wealth management market.
All right, William Ma, CIO at Grow Investment Group, thank you so much for joining us today. Before we go, here's a look at tomorrow's show. We're going to be talking global market strategy with Ionic Asset. Plus, Madhut Finance is going to join us to discuss the rising demand for gold borrowing in India. Horizons Middle East and Africa up next. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Closing in, oil slides below $100 a barrel and Asian stocks climb as the U.S. says it's nearing a deal with Iran that would reopen the Strait of Hormuz. Congo suspends flights as regional health ministers warn of escalating cross-border risks from the spread of Ebola. The DRC says there are more than 900 suspected cases and more than 200 probable deaths. And Turkish police raid the main opposition CHP party's headquarters amid an escalating leadership battle. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg, in for Jumana Bersachi. Happy Monday to you. And plenty again for the markets to digest, especially some of these comments over the weekend about potentially nearing a deal between the U.S. and Iran, as I was just mentioning there. Let's check in on how markets are dissecting some of the news headlines from over the weekend as we start the week. We have Abir Abu Omar in Dubai with us. Abir, what are you watching?
Good morning, Jen. Look, I mean, perhaps unsurprisingly, the broader risk sentiment in the markets is turning upward. Today, we're seeing S&P futures 0.9 higher, Asian equities 1.3% higher. Now, something to bear in mind is that a lot of markets around Europe, Asia, and the United States are closed today, but this is perhaps a reflection of what we're going to see in markets when they open. And this is due to what you have mentioned about nearing a deal between Iran and the United States. Now, the latest we have is from Secretary of State Marco Rubio, who was in New Delhi this morning, speaking to reporters, saying a deal is possible today. He doesn't want to get things spoken about before it actually happens. But we saw the slew of news that happened yesterday with President Trump and the Iranian side saying that there are some last details to speak about when it comes to nearing the deal. So you're seeing the upside in equities futures in the U.S. Again, Memorial Day off in the United States. S&P closed on Friday today, the 8th week in the green. Now, when it comes to Asian equities, both Hong Kong and the Kospi in South Korea are closed. So MSCI Asia Pacific is trending upwards because of a surge in the Nikkei in Japan that is open 3% higher. Now, the story is obviously oil markets. We know still that the Strait of Hormuz is closed. The physical movement of ships is still constrained, but the positive news is leading to a decline in Brent crude prices below $100 a barrel for the first time since April 24th, Jen. So we're seeing that in oil prices again as this positive news comes from the Middle East. U.S. Treasuries, cash trading on those is closed today because of that holiday. So we're looking at the Bloomberg Dollar Spot Index turning lower. Now, again, the dollar was seen as a safe haven throughout this conflict over the past 10, 11 weeks or so. Today, the dollar is trading lower among G10 currencies, and that brings prospects for those hawkish Fed tilts we've been speaking about, which turns me to the chart that we've chosen for today. If we flip the board, we take a look at the terminal chart we're seeing today, and that plugs the implied probability of a Fed interest hike instead of a cut. Now, we went into this year, Jen, thinking the Fed is going to cut rates. Kevin Warsh was sworn in on Friday. Now, the market traders are pricing in a hike by December. So I said last week, Kevin Warsh has his job cut out for him, and that definitely seems to be the case. Again, traders pricing in a hike by the end of the year instead of a rate cut. Similar policies seen around central banks in Europe as well. So definitely something to keep an eye on, Jen.
Yeah, and we'll get into some of those comments we did hear over on Friday from the swearing in of Kevin Warsh. Abir Abu Omar, Abir, thanks so much. Let's stick with our top story, though. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz, but it may take several days for both sides to get final approval. Meanwhile, in Truth Social posts, President Trump says the U.S. won't rush into a deal with Iran. He adds that bilateral relations are becoming more productive, but reiterates that Tehran will not be allowed to have a nuclear weapon. Speaking in India earlier, U.S. Secretary of State Marco Rubio said a deal could include no tolls for the strait.
We've made some progress over the last 48 hours working with our partners in the Gulf region on an outline that could ultimately, if it succeeds, leave us not just with a completely open straits, and I mean open straits without tolls, and with addressing some of the key things that underpin what has been Iran's nuclear weapons ambitions in the past. So we think we've made some progress on the outline of something that, if it works, could give us that outcome. Obviously, that will require full Iranian acceptance and then compliance, and it will require some future work on negotiating the details.
Stuart Livingston Wallace, our executive editor for the Middle East, North Africa, and Russia, joins me now. So, Stuart, we just heard there, it seems like we're making progress, at least towards a preliminary deal. Catch us up to speed, though, on what we heard over the weekend and how that could inform what's likely to be in the deal, and more importantly, what might not be in it.
Yeah, good morning, Jen. So there was a change of rhetoric over the weekend. You know, there were very, very bullish comments on Saturday, and I think the expectation was that we could perhaps get something signed by Sunday. That definitely changed over Sunday, and people became a little bit more guarded. Notably on the Iranian side, the language coming out of the official and semi-official news agencies there were much more guarded, I would say, than what was coming out of particularly the White House. And then on top of that, I think some of the national security hawks in Washington started to weigh in as well on when it became clear what the outlines of this preliminary deal would be. So where things stand now is that the expectation is something maybe in the next couple of days. The timeline's really, really hard to tell. But it will only be a preliminary deal. What seems to be getting cooked up is effectively an extension of the ceasefire, some sort of preliminary opening of Hormuz, and one would assume a temporary lifting of the blockade on both sides, basically to feed energy back into the market. And then after that, it's the tough negotiations over at least basically the nuclear file, and then after that, we'll see.
And Stuart, you were mentioning a bit of what we did see over the weekend about the signing being imminent, and then it seemed to back off quite a bit. How much should we read into this? Does this signal to you potentially there's still quite a few sticking points between both sides?
Yeah, I think that's absolutely right. And based on what we've heard, and remember, this is all stuff coming out of officials and out of official news agencies and so on. So we've not actually seen the document, and that document, the final document at least, may not actually exist. Based on that, I think there's some concern that it doesn't really address any of the main things. Effectively, what the centre of it seems to be is some reopening of Hormuz, which in effect is unpicking one of the major consequences of launching this war in the first place. And then you're going to get on to the matters which sort of underlined this conflict, and that's going to be much more difficult. If you recall, under the Obama administration, it took the better part of 2 years to negotiate that nuclear deal. Here we're talking about a handful of weeks. But what is interesting is that when the Gulf Arab states started to weigh in on that mediation, and Turkey and Pakistan as well, obviously, it seems to have made a lot more headway than when they were perhaps less involved. So that's kind of interesting as well in terms of their ability to negotiate with the Iranians.
And Stuart, we have our chart up there showing energy and the reaction right now at this point. Oil selling off pretty heavily. It seems like the optimism, the cautionary optimism, is already being reflected in the markets.
Yeah, I think that's fair. So, I mean, oil is the big one, but also if you look at European gas futures, they're down by a similar sort of magnitude. You know, the dollar's a little bit weaker, not so much movement elsewhere. The other one you could look at is the prediction markets. Look, it is only a data point, and we always say that it is not a massive market. But if you look at, for instance, the odds of a comprehensive peace deal by the end of June 30th, the odds of that on Friday were at 23%. As of this morning, they're at 42%. So take that for what it's worth. But I think that is a fair reflection of that growing optimism that perhaps we're moving towards at least the early stages of a deal.
Stuart Livingston Wallace, our executive editor for the Middle East, North Africa, and Russia. Stuart, thanks so much for starting us off. And as we were just speaking there with Stuart, oil dropped as the U.S. and Iran edged towards a deal. White House National Economic Council Director Kevin Hassett says he's confident lower energy prices will open the way for the Fed to cut interest rates.
Again, we expect energy prices, as soon as there's a deal, to plummet. And when that happens, then there'll be a lot of room for the Fed to do the right thing at lower rates. But again, I respect the independence of the Fed and the intellect of Kevin Warsh, and I'm sure that he'll work it out on a data-dependent way.
And it's not just war-related inflation fears playing a role in longer-term borrowing costs. Rising real yields explain most of the moves higher in overall U.S. yields. Joining us now is Stephen Major, Global Macro Advisor at Tradition Dubai. Stephen, thanks so much for joining us. So let's just start here, because as we were just talking to Stuart there, a bit of cautious optimism already feeding into the market. How are you assessing how the market is interpreting where we're at right now in this conflict and potentially a resolution to it?
Yes, and good morning, Jennifer. There's so many things that the bond market has to worry about. That the conflict in this region is only part of the story. But clearly, lower oil prices, a reduced inflation pressure, taking some of the need to hike rates off the table. That can only be good news for bond markets and assets in general. In fact, it's good for equities, good for everything. But the real challenge is that this crisis has only put the focus back onto fiscal policy that was already strained. And so many countries are running big deficits. They're going to have increased defense spending. That's not going to go away. I think the number in the US that Trump's been looking at is $500 billion. So already strained budgets are going to be pushed right to the limit here. And so the bond market is anything but stable and is becoming a bit unpredictable, which I think explains these elevated yields. And in the opening segment there, you mentioned the high real yields. I think that's the explanation.
And Stephen, you actually say in your notes, stagflation is now the base scenario for bond markets rather than the risk scenario. Yeah. What we're seeing in the longer end, can you just explain how that really translates into that comment?
Yeah, so the yield curves move through phases. In normal times, you have a gently upward sloping curve from left to right. It's called a positive or normal curve. When central banks have to respond to the inflation pressure, and there is inflation, so it's actually being printed. You saw in the US 3.8%. So there is actual inflation, not just expectation. When that happens, the curve tends to invert, so the front end yields go up more than the back end. But then there's this looking through into afterwards. If you have a recession or you have growth pushing towards recessionary levels, then central banks have to make a complete U-turn. That's why this yield curve is anything but predictable. And I talk about the stagflation scenario becoming more like a baseline, means that in fact the curve could start to bow in, and that means the belly, the middle part of the curve, should do better than it has been.
Does that completely box Kevin Warsh into a corner now?
Yeah. So, Jennifer, I think we have to give him some time. And I think, like in any new job, we should allow the new person some weeks or months to get their feet under the table. But there is this paradox or inherent contradiction in what we know about him. So what do we know? We know that, number one, he wants to cut rates, or at least I presume that was part of the interview process for this role. And secondly, he's known to want to shrink the balance sheet. But the Fed's actually expanding through the purchase of T-bills at the moment. So there's something contradictory there, the easing on the one hand and tightening on the other. Markets are priced at the margin. If the Fed starts to shrink the balance sheet rather than expand it, that's a tightening of policy. Cutting rates is obviously an easing. So there's that one question I would have for him, really.
Stephen, how are you advising your clients then, not just when it comes to the bond market, but also for equities?
Well, yes, and I think a great number of questions have come my way just in the last few weeks about the stagflation scenario and what it means for equities. The short answer is I don't really know, but I'll have a go as I'm here. I think that the equity market seems to be able to ignore higher yields, whether they're real or nominal, because of the good earnings that are coming through, especially in the US. So that really absorbs the rate shock. Meanwhile, GDP is okay, again, in the US, less so elsewhere. Now, at some stage, these high yields might start to expose leverage in the system. You might get some stress. And if the earnings numbers start to fade and if the GDP weakens somewhat, then the bond market could be part of the explanation for equities starting to correct. But how many people have come on the show and called a correction in the equity market these last few years and been found wanting? It seems that equities have got their own momentum right now, but one factor that would start to challenge those valuations is the higher bond yields.
Yeah, and that's what we'll wait to see play out. Stephen Major, Global Macro Advisor at Tradition Dubai, joining us there in our Dubai studio. Stephen, thanks so much for joining us and for your insights this morning. Now, coming up, Turkish police raid the main opposition CHP party's headquarters in Ankara using pepper spray. We'll have more on that next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. Turkish police have entered the main opposition CHP party's headquarters in Ankara using pepper spray. The police acted to seize control of the building after Kemal Kılıçdaroğlu, the party's court-appointed chairman, had sought government support to oust rival Özgür Özel. Bloomberg's Simin Demokan joins us from Istanbul. Simin, walk us through what's happened over the past few hours and days.
Yes, on Sunday, we saw dramatic moments outside the main headquarters of the CHP party. That's Turkey's main opposition party based in Ankara. The police flooded the building with tear gas in order to remove Özgür Özel, CHP leader, from the building. Now, of course, last week, an Ankara-appointed court said that the Congress that took place in 2023 was null and void, and Özgür Özel was no longer the party leader and was replaced by the former leader, Kemal Kılıçdaroğlu. Özgür Özel initially refused to leave the building, but once he did, he tore up the eviction notice and said, "We are leaving, but we will be coming back." Now, of course, Kemal Kılıçdaroğlu ruled the CHP for 13 years. However, he didn't have any success in elections against President Erdogan or AK Party. Özgür Özel is 51 compared to Kılıçdaroğlu's 74 years old, and he was seen as a more dynamic leader. But of course, this unrest within the political party could help President Erdogan grip his hand in power. Of course, Erdogan has been ruling the nation for more than 2 decades.
Right. Simin, what does this mean for the financial markets at this point?
Well, investors hate uncertainty, and it's exactly what they're seeing with this political uncertainty in Turkey once again. We saw a lot of volatility in the markets on Thursday and Friday, and it's worth noting that the markets here in Turkey will be closed for most of this week for a religious holiday. However, ever since the unrest in the Middle East, the Turkish central bank has been flooding the market with dollars in order to support the lira. And this, of course, has put a huge strain on its reserves. And we saw the similar action last week due to this political uncertainty. So, of course, economic challenges are also seen. Turkey has one of the highest inflations in the world, running above 30%. Right.
Bloomberg, Simin Demokan. Simin, thanks so much for the latest there in Istanbul. Appreciate it. Now, coming up, Investec Group CEO Fani Titi explains how applying for a license in Ireland will help the bank push further into Europe. That's next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Investec has applied for an Ireland banking license as it seeks to boost its presence in Europe and tap one of the world's largest financial systems. Group CEO Fani Titi told me the bank's application for a license in Ireland signals its ambitions to expand further into Europe beyond its existing UK presence.
We are investing heavily in this market. Clearly, there has been some disquiet about some of the outcomes, particularly with respect to the motor finance sector. Thankfully, we were very small in that sector. Our provision was the sum total of £30 million, and we haven't revised that provision because we were conservative in the first place. So for us, while regulation is quite tight, we've always placed our clients at the center, and as a consequence of that, we haven't really been affected as severely by the tightening of regulation, particularly around customer duty. So we see opportunity here, and we will continue to invest in our private client capability despite those recent developments. And as I said, they don't affect us as severely.
Fani, you mentioned you're looking at hiring. Is that just related to the UK, or could that potentially be related to other ambitions that the bank has across Europe?
We have an increasing presence in Europe. We have applied, for instance, for a banking license in Ireland. That will allow us to work a lot more front-footed in Europe, given that with Brexit, UK banks were not able anymore to operate as freely as they did before. So we will be doing more in Europe, following our clients and supporting them. We have a wealth business in Switzerland, for instance, that supports our South African wealth business. We are hiring there and investing more in our capability. In fact, we had a small bolt-on acquisition last year in Switzerland. We have started to operate in the Middle East, in Dubai, on the wealth side. Obviously, with the war in the Middle East, we've had to scale down our plans in the short term, but in the long term, we continue to be interested in that region. So overall, we are on our front foot. We are investing, we are expanding, and we are hiring. Obviously, we're also investing in technology to augment the work that we do for our clients.
When you talk about Ireland, have you already applied for that license? What does the timeline look like?
Look, we've been in discussions with the regulator there for quite some time. It takes a bit of time to go through these processes. We do expect that in the immediate future we will be successful, and we are quite excited about the opportunity that opens for us in Ireland, in the rest of Europe. So it is a short-term outlook in terms of when we will be able to operate with a fully granted license.
That was Investec Group CEO Fani Titi speaking with us earlier. Now, coming up, we'll unpack the economic outlook for South Africa and the country's interest rate path next. This is Bloomberg.
Hey guys, crude oil chart, natural gas chart is open now in trading view as well, MCX में, इंडियन मार्केट देखोगे गैप अप ओपन हुआ था, कंटिन्यूसली मोमेंटम में पॉजिटिव ही है स्टिल। निफ्टी अप्रॉक्सीमेटली 1% काइंड ऑफ पॉजिटिव, सेंसेक्स 1%, बैंक निफ्टी 1.5, मिड कैप भी 1% पॉजिटिव ही चल रहा है। देखते हैं होल्ड करता है या फिर नहीं, या फिर प्रॉफिट बुकिंग में आ जाता है वापस। ठीक है, ओपन होते ही थोड़ी सी वॉलेटाइल कैंडल है दोनों ही जगह पे, क्रूड नेचुरल गैस। ठीक है, निफ्टी भी गैप अप हुआ था, अपसाइड गया वापस, ऐसा लग रहा है ऊपर से सेलिंग का प्रेशर अभी भी बना हुआ है। काफ़ी बड़ी रेंज ब्रेक करी है, देखना पड़ेगा फेक ब्रेकआउट ना हो। सस्टेन करता है 23,850 के ऊपर तो बेटर है। ठीक है, ग्लोबल मार्केट तो क्लोज है, सब जगह पे बैंक हॉलिडे है। यूएस में, यूएस के अलावा यूरोपियन मार्केट को भी देखोगे, देर आर ऑल देयर क्लोज टुडे, बैंक हॉलिडे। स्विट्जरलैंड में, फ्रांस में, जर्मनी में, यूके में, यूएस में, ऑल मार्केट्स आर क्लोज बिकॉज ऑफ द बैंक हॉलिडे। तो देखना पड़ेगा, वॉल्यूम हो सकता है थिन रहे काफ़ी ज़्यादा। अब तो इतनी बड़ी रेंज बना दी है, नेचुरल गैस का तो निकलना मुश्किल है इस रेंज के बाहर। न्यूज आएगी तो मार्केट मोस्टली उसी में रिएक्शन देगा, अदरवाइज आई डोंट थिंक सो चांसेस हैं कोई बहुत बड़ा मोमेंटम होगा नेचुरल गैस में स्पेसिफिकली।
and throughout the month in general, actually. So easing tensions around Iran really do bid well for emerging currencies. So that does see the rand trading quite strong going into this week as well.
But it still doesn't, as we've been talking with a number of our guests, ease any of the inflation concerns right here in South Africa. How does that factor into what we are seeing here and what we might see from the SARB then later this week?
So the SARB had said that they're seeing oil at about 80, and the worst case scenario was if oil is about at $100 per barrel and the rand is trading at 4% weaker, 5% weaker. The rand is now 4%, if not less, weaker than the SARB had bidded for. But going into this week, I see the SARB probably hiking rates by about 25 basis points, and this is just to curb the second round effects that come with inflationary pressure from oil prices.
Does the SARB, though, risk potentially falling behind the curve? We could, we were talking about what we could potentially see from the new Fed chair later on. What do you expect the SARB and the governor then to telegraph to the markets later this week?
So the SARB has been very clear in terms of their stance going into even the last meeting, right? They did say that it's very important that they hike rates in terms of bidding credibility for their 3% inflation target. So inflation came out at 4% just last week, core inflation at 3.6%. This is way above what the SARB is targeting. So in order for credibility to stand for the SARB, they do need to make sure that they're curbing that inflation in order for the market to actually take them as serious in terms of the inflation target, yes.
And you say the inflation narrative is becoming more concerning. How much of that is triggered because of the fuel price that we're looking at right now?
A lot of the inflation right now is triggered because of the fuel price. I mean, when you look at that 3.6 versus the 4%, that 0.4% is basically fuel and food prices. So in terms of inflation, the fuel is playing quite a big role in terms of that, yeah.
So then how does that factor into what we see from the SARB longer term, then?
Longer term, the SARB is saying if oil is above $100 per barrel, if inflation is about 5%, then obviously they are to hike. We're seeing the peak for the repo rate to be about 7.25%. At the moment, we're at 6.75%. So a 25 basis hike this coming meeting, a 25 basis hike the coming meeting. And if the oil price story doesn't stabilize, we do see a risk of another hike in terms of the SARB, yes.
How much is contingent on what we do see from the Fed, though?
I mean, the inflation story is a global story. Yeah. It's not specific to South Africa. And everybody's looking to see what does the other central banks do. But we're all facing the same thing. We're all facing inflationary pressure from the oil prices. So, yeah, I don't see the Fed, I don't see the SARB necessarily looking to the Fed, but also just they probably will look more towards what is the impact of that oil prices on inflationary pressure in South Africa.
And so then when you're looking at what you're doing for your clients in terms of how you're advising, how do you advise in the short term versus the long term? But it seems like there's still quite a bit uncertain, especially as it pertains to the global inflation picture, what's happening in the Middle East, and more broadly, the hiking cycle globally.
So in terms of advising of clients, I think at the moment, headlines continue to drive the currency. 1650 was a proper support level. Now we're seeing dollar rand at 1630. We were projecting to see dollar rand at 1650 in June. And now we're probably having to revise our currency expectation in terms of the rand. So 1625, 1620 next support, and then we see what happens from there. Mainly will be driven by headline, what happens in terms of the US and Iran.
What's the risk here for you? What is it that you're watching for that could derail some of these projections that you've outlined here?
I mean, the risk is that things blow up in Iran and we see dollar rand spike all the way to 1685 and break that 1685 level. 1685 has been a strong resistance level for us, right? If we see it break above that, then 17 is on the cards. So that is mostly what is at risk at the moment, yes.
But that's not your base case at this point. All right, we'll leave it there with you. Kgotsatso Baloyi, trading structure at RMB here, joining us to break down some of the impacts on the South African economy. Thanks so much. Now, for a look at some of the other stories we're following in the region, Uber has offered to take over Delivery Hero in a deal that would value the German delivery company at about $11.6 billion. This comes as the U.S. tech giant works to ramp up competition with DoorDash globally. Uber has offered approximately $38 per share. Uber, which which owns 20% of Delivery Hero, would be on the hook for about $9.31 billion under those terms. The ride-sharing giant also has options for another 5.6% of shares. SpaceX upgraded Starship has completed a key test flight, deploying mock satellites in orbit before returning largely intact. The spacecraft released 20 dummy Starlink satellites and 2 test units for next-generation hardware. The test comes as the company gears up for a public offering that seeks to raise as much as $75 billion. Sources say Anthropic is set to close a funding round as soon as this week that may top $30 billion. That would give the company a valuation above $900 billion. Such commitments would see Anthropic's valuation leap ahead of rival OpenAI, which reached $852 billion in a funding round completed in March. OpenAI is said to be preparing to file an initial public offering in the coming weeks. Now, coming up, the world is losing the Gulf's petrodollar stimulus. We'll take a deep dive into how the war with Iran is draining cash, cutting into the region's economic power, and shifting global influence. That's next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The ongoing war with Iran has severely disrupted the Middle East's energy exports and trade routes. As a result, the supply of petrodollars that have funded massive overseas investments are under threat. For more, we're joined now by Ziad Daoud, Chief Emerging Markets Economist at Bloomberg Economics. Ziad, thanks so much for being with us. Let's just start here. How exactly are we seeing the closure of the Strait of Hormuz hitting the Gulf's bottom line?
Well, the Iran war and the closure of Strait of Hormuz is doing a few things. The first thing it's doing is that it's reducing the volumes of oil and gas that the Gulf is exporting to the world. Now, the picture differs by country, but the aggregate one is that the Gulf countries are receiving lower income from their oil and gas exports. So that's the first thing. The second thing it's doing is that the Gulf countries are spending more at home. They're spending more on defense, they're spending more on repair, they're spending more on building new pipelines that bypass the Strait of Hormuz, and they're spending more on economic support for the sectors that are affected domestically. You combine these two facts that they're receiving lower income and they're spending more at home, and that basically means that the pool of Gulf money that's available for external investments is shrinking as a result of the Iran war.
Ziad, when you take a look at which markets and the sectors that could potentially be hit as we see this petrodollar investment dry up, which ones really stand out to you?
It's hard to exclude any market or sector. Gulf sovereign wealth funds invest in all sorts of things. They invest in U.S. tech companies. They invest in African mines. They invest in Egyptian real estate. They invest in English football clubs and Turkish bank deposits. In fact, if you even look at the biggest and deepest market in the world, the U.S. debt market, we estimate that the flows from the Gulf to the U.S. debt market over decades have helped suppress U.S. interest rates. And if these funds start to dry up, then a significant force that has helped to keep U.S. interest rates and borrowing costs low might basically fade.
Ziad, can we just talk about some of the details that you and the team outline in the report? You talk about some of the allies and Iran's leadership within this report. Can you talk about how this is likely to shift the overall dynamic in the region for years to come?
Well, I think the Iran war has basically changed the shape of the region. If you think about the Gulf specifically, I think there are multiple areas in which Gulf countries will have to rethink even when the war ends. They'll have to think about defense, how to defend their cities and their borders, having been attacked by Iran during this conflict. They have to rethink the relationship with the U.S., which is an important security partner, but it hasn't quite delivered in terms of preventing this war. They'll have to think about their own cooperation and collaboration, and whether the Iran war will increase competition between them or increase cooperation. And they'll have to think about the relationship with the global economy, how to build new routes that make sure that the flows of oil and gas from this region and energy from the region continue to flow, even if there is a disruption to the trade route. I think the big thing here is that the Strait of Hormuz has been shut once, and that taboo has been broken, and everyone will price in the fact that it could be shut again.
Ziad, let's just zero in on one of the economies, and that's, of course, Saudi Arabia, which you detail in the report. What's your assessment on the hit specifically to the Saudi economy as a result of this conflict?
Actually, for Saudi Arabia, there has been much in terms of lost revenue. Yes, Saudi Arabia today is exporting less than it did before the war, but with oil prices being higher, that offsets the volume losses. So probably, in net, Saudi is probably earning more today than it did before the war. Where the war has an impact on Saudi is in terms of spending. And we saw that in the first quarter budgetary data. And we estimate that 1 month of fighting cost Saudi Arabia about 1.5% of GDP. So that's the impact on Saudi Arabia. But in terms of revenue, it has been fine. If you look at the Aramco, for example, if you look at the Aramco profits, if you look at the first quarter budget, if you look at the trade data, they're all showing that Saudi is earning more today than it did before the war. The issue comes with the spending side.
It's a fascinating report you and your team have put out, now available on the terminal. Ziad Daoud, Chief Emerging Markets Economist for Bloomberg Economics, joining us there in Dubai. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, for a look at some of the other stories we are following, the cause of an explosion at a mine in China's Shanxi province is under investigation after the blast on Friday killed at least 82 people. The accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from President Xi Jinping and senior officials. State media says an early investigation suggests serious violations at the privately run mine. U.S. Secret Service agents say they shot a man near the White House on Saturday after he opened fire with a handgun. Authorities identified the suspect as a 21-year-old who had a prior arrest for unlawful entry near the White House in July of 2025. He was taken to the hospital where he later died. Now, coming up, Congo suspended flights to the eastern city of Bunia due to escalating cross-border risks from Ebola as the outbreak spread across 3 provinces. We'll bring you the latest next. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
You were up.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Foreigners seeking permanent residency in the U.S. will now have to leave the country to apply for green cards, except in extraordinary circumstances. The policy could leave applicants stranded for extended periods and disrupt families and companies sponsoring foreign workers. Immigration lawyers say the move is legally questionable and needlessly chaotic and warn litigation is likely. Also, U.S. health authorities are planning to temporarily bar green card holders from re-entering the country if they've traveled recently to Ebola-affected areas. The interim rule will remain in place for 6 months or until Health Secretary Robert F. Kennedy Jr. determines it's no longer needed. Let's just stick with the update on Ebola. The death toll from the Ebola outbreak in the Democratic Republic of Congo may have surpassed 200 as local conflict and violence disrupt containment efforts. More than 900 suspected cases have been reported across 11 health zones spanning 3 eastern provinces. For more, we're now joined by our Africa healthcare reporter, Janice Q, here in Johannesburg. Janice, just get us up to speed on what the latest is with this outbreak in Central Africa.
We've had the Africa CDC Director General Kasia saying that the situation is increasingly serious. There are about 10 countries that are now considered at risk, and we're really seeing an effort more globally. India today is going to be delivering about 20 tons of supplies. These are needed on the ground, and we're not talking vaccines here even, because the one that has been developed is for the Zaire strain, which is a different strain to what this outbreak is seeing. And so these are supplies like personal protective equipment, some of it fairly basic stuff that is needed on the ground. We are also seeing a ministerial meeting being called today. It will be local time this afternoon, and that will include presidents from Egypt and Nigeria and ministers rather from those countries, and ministers as well from the US and from France. The idea here is that they are trying to get global support, but make sure that it is directed through the Africa CDC and other organizations or agencies on the ground, so that it is concentrated and gets to where it needs to get. They are trying to avoid a situation where promises are made, the money doesn't really come through, or it's coming through in a variety of ways that is less efficient. They're really trying to get ahead of making sure that everything that is promised actually reaches the ground.
And Janice, you were speaking earlier about, we know that there is a vaccine for the Zaire strain, but of course we're dealing with a very different strain. How are we seeing authorities then addressing this most recent outbreak?
The Africa CDC DG Kasia has described this like being a soldier going into war without ammunition. They are really starting to have to rely a lot more on community messaging. They are using local leaders or local community people to go into the affected communities and really try and get the message across. They obviously have some residual, because this is the 17th outbreak of Ebola in Congo, and albeit a different strain, they do have some facilities that are specific containment facilities, and so they obviously are using those. But there's a lot of other difficulties in terms of rebel-held areas. That kind of conflict has led to a lot of displaced people, and all of these kind of things really do play into the difficulties that they are facing.
Right. All right. We will leave it there with you. Bloomberg's Janice Q, thanks as always for the latest on the Ebola outbreak there. And let's just take a quick look at where markets are. We should mention it is a holiday in parts of the world, but of course we are paying close attention to global equities as the prospect for a potential deal in the Middle East inches nearer and nearer. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Tom McKenzie with your top stories. Oil slides, Brent falls below $100 a barrel as US officials tout progress in talks with Iran. Secretary of State Marco Rubio says a deal could come as soon as today. The Iran deal optimism lifts global stocks. Japan's Nikkei hitting a record, while futures point to gains here in Europe. And ECB President Christine Lagarde says the central bank is likely to raise its inflation outlook next month paving the way for a potential rate hike as strategists warn that markets face higher for longer yields. Let's check in on the markets then around the optimism that is focused, of course, on that potential Iran-US deal. Different commentary coming out from both sides over the weekend. And as we mentioned in the headlines, Marco Rubio suggesting that we could get more details potentially as soon as today. We continue to watch that, of course. So you're seeing record highs over in Asia for the Nikkei. Across the benchmark, you're seeing gains of 1.4%. Global stocks closing in on fresh record highs then on the geopolitics. European stocks pointing to gains of around 1%. Of course, the UK is closed. UK markets are closed for a bank holiday. S&P futures pointing to gains of 0.9%. It is Memorial Day in the US as well, so treasuries are not trading. Let's flip the board and have a look cross asset. The focus, of course, on what's happening in oil, with Brent right now at $97.80, with oil prices down more than 5% then on the developments out of the Middle East. The dollar is under pressure as well, falling 0.3%. You can tie that to the risk reversal that we're seeing across assets then on the back of geopolitics. And yields are lower when it looks at JGBs. So there's a bid for JGBs. Yields down 6 basis points on the benchmark Japanese 10-year right now, which is currently at 270. Let's get you up to speed on the risk events this week then. Tuesday, we get US-made consumer confidence data. That will be in focus as we continue to try to get more colour and more detail on the health of the US consumer. On Thursday, US April PCE, so that preferred measure of inflation for the Federal Reserve, that will be consequential. And on Friday, we get May flash inflation data out of Europe. Even if we get a deal, of course, to reopen the Strait of Hormuz, the longer-lasting effects of that closure of almost 3 months will continue to be in focus for investors. So detail there and the inflation story out of Europe towards the end of this week. The opening trade starts, of course, daybreak. So senior US officials say the US and Iran are closing in on a deal that would reopen the Strait of Hormuz, even as President Donald Trump insisted he would not rush into an agreement. Speaking in India, US Secretary of State Marco Rubio said a deal may be reached today.
We're still a work in progress. As I said, we thought we might have some news last night. Maybe today. I wouldn't read too much into it. It takes a little while to hear back. So we have what I think is a pretty solid thing on the table.
Joining us now is Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa and Russia. Stuart, we seem to be making progress then towards at least a prelim deal. There's a memorandum of understanding. That is some of the reporting. What is likely to be in this deal at this stage? How much movement do you think has actually been made between the two sides?
Yeah, good morning, Tom. I mean, it's clear there's been some movement, and at least in part we know that because all sides are saying so, which is unusual. Typically the White House is very bullish or very bearish, and the Iranians kind of give a reality check to that. But what we have now, as you say, it appears to be the outlines of a memorandum of understanding. So there's a lot of caveats here that is pretty preliminary. Most of it seems to be focused on getting Hormuz reopened. And candidly, that is in effect trying to unpick the major consequence of starting this war in the first place. And then the broader issues of the nuclear file and everything else will come at a later stage. But the critical thing here is that all sides say we're moving towards something. What is interesting, though, is over the weekend we had quite a whiplash in terms of the tone of the rhetoric. Saturday, everyone was very bullish, at least on the American side. By Sunday, that had come off somewhat, moderated, because the Iranians came out and said there were a couple of sticking points remaining. So again, we may see something in the next day or two. The timeline here is really hard to pin down, but we are making progress, it seems.
In terms of that conversation and what we've been hearing from the two sides then, how should we interpret the Iranian positioning on this? The rhetoric, at least the communication from the Iranian side, seems to be more cautious. Do we have clarity in terms of how unified the leadership is there and what to make of the communication out of Iran?
No, I think that's a very good point. I mean, in terms of what we've actually heard, it's really been from the official and semi-official news agencies. They don't have their leadership tweeting every 5 seconds. So it is much harder to tell what's going on. And as you say, quite what the hierarchy is there and who's making the decisions on a day-to-day basis is quite hard to parse out as well. I think from the Iranian side, they feel like they have a lot of leverage here. They clearly do have a lot of leverage, perhaps unexpected leverage in terms of the closure of Hormuz. And it seems that they're very reluctant to cede on some key points without some major concessions on the other side. So I think what they're particularly focused on is the unfreezing of some of their assets, perhaps all of their assets, some unwinding of some of the sanctions. In other words, all the things that have really hobbled their economy over the last several years, and would basically give them the strength to sort of keep that regime going in the face of what is a very, very difficult economic situation for them. Remember, they're one of the biggest energy producers in the world, and yet they have rolling blackouts in terms of the electricity supply. You know, this is not a good position for them to be in. So I think fundamentally that's probably what they're after here, is major concessions.
Okay, that's really interesting. So the pressure on the Iranian domestic economy and the concessions that it will continue to push for. The market reaction then, of course, we've seen lower oil prices, equity markets are up. It seems the reaction seems potentially less acute than we've seen in previous rounds where we've seen some progress. What is your assessment of how markets are reading this and whether or not many investors are kind of looking through this already?
Yeah, I think that's a very fair assessment. I mean, it's not just the oil market. You look at European gas futures, they're off by a similar sort of magnitude this morning. You know, the dollar's a little bit weaker. You look at the move in equity markets, it's a little bit stronger. I mean, one market you could look at, and, we're always cautious about this because there's only one data point, it's not a massive market, but look at the prediction markets, and I think that tells you a lot about the kind of that changing mood over the weekend. So in terms of the odds of there being a comprehensive peace deal between Iran and the US by the end of June, that started the weekend right around the sort of the 30% mark. It shot up to about 81% on Saturday, and now it's back down to maybe the high 40s. And I think that sort of roller coaster ride is a pretty good reflection of how that mood shifted over the weekend. So I think as of Monday, things are definitely more optimistic than they were on Friday. But again, there's that caution because we've been in similar situations before, and the whole thing can collapse rather rapidly. So more optimism, but I think it's a guarded optimism.
Stuart, thank you very much indeed. The context, of course, in terms of what we've been hearing from both sides and the potential consequences. Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa and Russia. Thank you. So falling oil prices sending stocks higher this morning, as we've been discussing. Japan's Nikkei at a fresh record high in Asia. Futures gaining as well. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. We should note as well, JGBs are bid with yields down, at least so far in the morning. Treasuries, of course, not trading today, so we'll watch for that signal when US markets reopen. Then, positive signs then from the US side. What is your take in terms of how the market has reacted so far to the developments around this potential deal?
Morning, Tom. I think it's kind of measured optimism, as kind of Stuart was alluding to. I think that, if you look at equities, obviously they're rallying a bit on enthusiasm that this deal can go through. But I think that this raises the longer term questions, right? I mean, in the first place, we don't know whether a deal will come through or not. I mean, there have been so many changes and last minute twists and turns to this narrative in the past 1 month. So I wouldn't discount the deal faltering at the last minute. It's not a given. But if the real deal goes through, I think that what we are going to see is a bit of a relief rally in equities, if you can call that a relief rally, because they haven't really meaningfully fallen in the past few sessions. But I think that, tech stocks definitely have the momentum to continue upward from here, because if you look at the Nasdaq 100, Tom, the fair value is about 29,900, and we are pushing through to inexorably towards those levels. But what worries me is the level of froth in the S&P 500. I think that the fair value of S&P 500 is 5,700. We are almost 2,000 points above that. So there is plenty of froth in the non-tech space, and I think that is what worries me at night. How is this going to play out, and what does it mean for longer term investors? If you're going to be in the market for the next 5 years, for the next 10 years, what are the kind of prospective returns that you can expect from a market that is nearly fully priced with a lot of froth and with an equity risk premium of nearly zero?
Okay, interesting. What keeps you up at night, Venram, with froth in the S&P 500? To the here and now, we've been talking, of course, in the last few weeks about the rout in the global bond markets. Some of that is being readjusted today as we look at JGBs. If we get a reopening of the Straits of Hormuz, is that enough to drive further momentum to the upside in terms of bonds with yields down, price up? Or does the concern about government spending and global deficits offset any potential rally for bonds?
No, I do think that there are opportunistic plays in duration. I think particularly the 30-year end. I'm not so bullish on the 10-year treasuries, but if you look at the 30-year DOM, I think that we approached 520 last week, and we have quickly rebound from those levels. And I think that if this deal goes through, I think there is going to be a short-term rally in long duration bonds. There's no question about it, because 5% has proved to be the line in the sand. We've breached that line, and we've gone up well above that. So I think that there will be a relief rally. Look, deficits are not going to go away. They are a threat, and we are probably in a situation where inflation is going to be sticky for a long time. But even so, I think that you want to be scaling into the duration here. And I think there is opportunity, because all the bad news that is in terms of bonds is kind of already reflected in the price. And at 515, 520, I would be a buyer of 30-year treasuries. It's a very completely different story at the front end of the curve. I think that the markets are underpricing what the Fed has got to do here. Even with the Hormuz, assuming that the Strait reopens, I think, as I was mentioning, it's going to be higher for longer on inflation. And I think that the front end is mispricing. I don't think there is room for the Fed to be cutting rates. And in fact, you would expect the Fed to raise rates, presumably by the end of the year, which is not priced in really by the market. So I think that essentially we are going to be positioned for a flattener here, with the front end selling off a bit and the long end coming down a bit.
Okay, interesting. So opportunities at the long end with the 30-year in focus, but you maybe look to avoid the front end on expectations that the Fed will have to hike. Interesting to hear, of course, from Kevin Hassett saying that once oil prices are lower, he does believe that the Fed will have space to cut. Ven Ram, cross-asset strategist at Bloomberg MLive. Always appreciate your insights, Ven. Thank you. Still ahead, warnings of a global crisis in food prices. That's unless action is taken to ease fertilizer shortages caused by the war in Iran. We discuss with the chief economist from the Food and Agricultural Organization, the FAO. But first, US Secretary of State Marco Rubio hailing ties with India as the country seeks to shore up fuel supplies. That is next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything. Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, the dramatic turnaround at Rolls-Royce under Tufan Erginbilgic is one of the great corporate overhauls in recent times. He made headlines for describing the flagship engineer as a, quote, burning platform when he took the reins in 2023. Shares are now up more than 1,000%. On the latest episode of Leaders with Lacroix, Francine asked him if he feels like he's carrying the weight of British industry when so many companies have spoken about exploring a listing in the US.
Yes, sometimes, because I think there's this discussions whether companies should move to the US market. I'm sure, Francine, you asked those questions. So actually demonstrating that you can be in this market. And frankly, after a point, it is never about you. You don't want to fail all the stakeholders, employees, investors, even government. Once you pass a stage, right? Okay, you have a success. Now, make sure that is sustainable success and actually you can build on it.
What can other British companies learn from Rolls-Royce?
I mean, a lot. But business model level, are they actually set up to win? If not, fix the business model. And you do that, then of course you need to energize your employees. It's not about you. It is about 50,000 people. I am non-compromising for that. You may say blunt or whatever, but non-compromising. Mediocrity at that level kills the organizations, but also good people, then you need to develop them and have a great career in this.
How do you manage good people? What do they want?
Effectively, you want people in your organization who are highly marketable, but they want to stay with you, right?
Right.
So that's what
that's
you
a
want.
secret sauce.
Exactly. Right. That's what you want, right? That is almost 360 performance management in my mind. And 360 performance management always, if you want to close the circle, it finishes with reward and recognition. And then grow the company, because that creates all sorts of career opportunities. Shrinking companies, you have less opportunities. Grow the company, that actually feeds itself.
Right. I mean, every time I see you, we speak about small nuclear reactors.
Yes.
Because you it's not a 360 view. It's a very granular, it's almost problem solving. It's engineering.
I always go to big picture before I come to small picture. Europe cannot do without it. World needs it for net zero. Frankly, Europe needs it for supply security, full stop. Because even before geopolitics, Europe needed that. After some geopolitical events, frankly, Europe needs it more than that. So therefore, SMRs make sense at big picture because they are less risky, because smaller plants and manufacturing activity. Nuclear industry has a bad sort of experience with projects. They take longer, much more expensive. SMR, 85% manufacturing process. You learn. You learn, and it is modular, it is standard, rather than every nuclear project, bespoke EPC project in a way, right?
Anything could happen in the world of politics, as we've seen.
Yes.
Right. How do you deal with politics, with events outside your events? And even here, you could see a change in government with reform coming into power.
Yeah. I have a principle in business. I always tell people, once you get into trouble, it is too late. So you need to prepare the company before you get into trouble. So what does that mean? Like, we are actually living with it as we speak, and last year we lived with tariff. But first of all, make the company very resilient. That was our drive. We did that. So external shocks, we actually deal with it a lot better. Mindset is more important than anything else. You need to have the mindset and the response capability in the company. You need to develop that before you are in trouble, because it takes some time, right? And then you need to be agile using that capability. And then last thing you are going to do, you are going to be action-oriented, not explanation-oriented.
But if you don't know what the trouble is, are you scenario planning for all the things that could change?
It's not about actually predicting the world. It is about how your company now thinks about dealing with external shocks, right? So that is the capability, the processes, the mindset. Like, we are now responding to current shocks. I can assure you, we couldn't do half of what we are doing 3 years ago. Probably 10%. Probably when I said something, people would look at me with blank eyes. What is he talking about? Today, I don't need to say a lot. I need to give the context, and people are in action.
And the full interview has a global release on Bloomberg TV later today at 10 p.m. UK time. Let's change chat right now and focus in on what's happening in terms of Marco Rubio's visit to India. India says it sees the US as a significant and reliable energy partner as it seeks to shore up fuel supplies. India's foreign minister met his US counterpart, Marco Rubio, of course, who hailed their country's ties as one of the most important globally.
We also are strategically aligned on energy. You know, energy and the ability to generate power is the key behind all of the great industries out there. Whether it's data centers, whether it's artificial intelligence, whether it's the ability to modernize and continue to advance economically, all of it begins and ends with the ability to generate the power necessary, not just to raise standards of living, but beyond that, to expand into new industries. And both of our countries are strategically aligned in ensuring that we have a world that can not just produce but deliver the energy resources that are necessary to power a modern economy.
We strongly believe that energy markets should be left, to the market.
While Rubio is on a 4-day visit to India aimed at improving bilateral ties, let's get more now from New Delhi with government reporter Sudhi Ranjan Sen. Sudhi, thank you for your time on the back of this visit. What are the main takeaways so far for you and the team?
Well, to begin with, the main takeaway, I would say, is, both sides trying to arrest a drift in the relationship that had come, set in, especially since last year and with tariffs being imposed and India being penalized for buying Russian crude. There was a drift that had come in the relationship. And this visit is in a way trying to arrest that drift, trying to reassess and build from here on between the two sides. So that is the main takeaway. The others, of course, the associated ones are what we see both Minister Jaishankar and Secretary Rubio saying, and very clearly India is looking now at the United States more closely for energy. There was discussion on nuclear energy, as the minister informed us during the press conference. So both sides kind of trying to come closer, find out more areas of cooperation rather than friction. That's the big takeaway from the ground.
OK, Bloomberg government reporter Sudhi Ranjan Sen in New Delhi with that update. Sudhi, thank you very much indeed on that 4-day visit, of course, by the US Secretary of State to India and potential closening of energy ties between the two nations. Coming up, more changes to the US green card system, meanwhile, with potentially far-reaching ramifications for legal immigration. We have the details. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom Mackenzie.
This is your opening trade.
Only on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance. We're talking about it.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back to Bloomberg Daybreak Europe. Let's get you up to speed on some other major stories this morning that we are following. The cause of an explosion at a mine in China's Shanxi province is under investigation. At least 82 people were killed in the blast on Friday. The accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from President Xi Jinping and senior officials. State media say early investigations suggest serious violations at the privately run mine. There is plenty more coming up. Stay with us. This is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. Good morning, I'm Tom Mackenzie with your top stories. Oil slides, Brent falls below $100 a barrel as US officials tout progress in talks with Iran. Secretary of State Marco Rubio saying a deal could come as soon as today. The Iran deal optimism lifts global stocks. Japan's Nikkei hitting a record while futures point to gains here in Europe. And ECB President Christine Lagarde says the central bank is likely to raise its inflation outlook next month, paving the way for a potential rate hike as strategists warn that markets face higher for longer yields. Let's check in on the markets then. Of course, the oil price movements on the back of geopolitics front and centre. That is lifting the mood around equities. The dollar is down. Across the Asian space then, you are close to record highs across the benchmark MSCI Asia Pacific with gains of 1.4%. You're seeing upside in terms of the European futures picture as well. The UK, of course, closed for the bank holiday, but across the benchmark, European futures pointing to gains of more than 1% after a positive week for European equities last week, ending up through the week in positive territory. S&P futures then stateside looking to add 71 points, pointing high by 0.9%. Let's flip the board then and look cross asset. Oil prices then lower on the back of the developments in terms of this potential deal between Iran and the US. Currently down 5.6% on Brent, $97 a barrel. The dollar under pressure, so that's a benefit in lifting some of the Asian currencies and EM as well. Currently down 0.3% on the Bloomberg Dollar Index. Japanese yields are lower across the curve then, money moving in to sovereign debt, yields down, and we'll see how that plays out, of course, when US Treasuries start trading after, of course, Memorial Day and that holiday today stateside, of course. Time now for your front page news. The FT leading on the Iran war with the line that Donald Trump has told US negotiators, quote, not to rush into a deal, saying both sides must take their time and get it right. Meanwhile, the Wall Street Journal also leading with the latest from the Middle East, of course, and the US president saying there is no rush for a deal. So both the FT and the Wall Street Journal with that caution from the US president. You can get a roundup, by the way, of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo or DAYBGo on the terminal. Let's get back to the market reaction then to the geopolitics, to the developments in terms of the conversations between Iran and the US, because global stocks are climbing towards record highs this morning, as I mentioned, on that optimism on a US-Iran deal and potentially and crucially, of course, a potential reopening of the Straits of Hormuz. So oil prices lower on those developments. Let's get more now in terms of the market reaction with Charu Chanana, Chief Investment Strategist at Saxo. Charu, good morning. Thank you for joining us. What do you make of the market reaction to this news? The markets does it just underscore that investors are already looking through Iran to the next catalyst? What do you make so far the market reaction to the developments out of the Middle East?
Good morning, Tom. Thank you for having me back. Certainly a bit of an exuberant reaction this morning in Asian hours. And I think a part of it, of course, comes from the optimism that we are seeing, hopes of a deal being talked up as of now. But also, I would say the thin liquidity in the markets today. We had Korea closed, we had Hong Kong closed, going into your European hours. We have London closed, we have US on a holiday as well today. So it is going to be a very, a less liquid day, so to say, and that obviously amplifies the moves a little bit as well. So it's hard to read into that reaction. But having said that, the first order effects of that potential deal are very clear. We see oil going down, at least to an extent where we start to take out that geopolitical risk premium. Of course, there are still a lot of sticking points, especially on that reopening of the Strait of Hormuz as to how long it takes, the demining operations, how long it takes for insurance costs really to come down. And those are things that keep oil still lingering. I mean, we're still above $90, so still higher than the pre-war days. And I think that's where we stay sticky for some time for now, as long as the longer-term outlook on the Strait of Hormuz gets clearer. But when it comes to equities, I mean, equity markets have not really priced in that disruption to a large extent. I mean, looking at how equities have done despite this conflict being going on, it does seem like that the risk of the downside, if the talks break here, are certainly higher than what optimism can be priced in at this point.
Yeah, that's really interesting. Charu, even if we get a resolution, even if we get a reopening of the Straits of Hormuz within weeks or a number of months, is there still the risk for equities that the inflation and the price push and those second-order effects becomes a headwind for global equities?
I think, Tom, the most important metric to watch here is not really, at least in terms of the inflation and the oil price outlook, is not just the deal itself. It certainly brings the focus a lot more towards the reopening of the Strait of Hormuz. And I think one of the more positive developments that we've seen over the weekend has been that, there have been 33 tankers that have passed through. So I think if we keep getting headlines like that, it does give a bigger weight to the option of reducing that insurance cost, the geopolitical, the war premium that has been priced into those shipping numbers, shipping costs. And I think that really lends a greater optimism to stocks at this point than the deal signing itself. I think the follow through remains far more important. But having said that, I think you're really right to point out that inflation risks particularly do not end with that news about the Strait of Hormuz reopening, even if it's one shot, not in phases. As we're not very clear as to how that is going to play out right now. So that inflation shock is something that the equities have not fully responded to as of now, and rightly so, because the earnings momentum has been very, very strong. I mean, the S&P 500 has delivered 30% plus kind of earnings in the first quarter. So as long as that continues, I do think the earnings momentum will start to get more scrutiny if inflation numbers start to shift higher. And the thing here is that central banks can sound hawkish to save their credibility going into that kind of an inflation shock. But since it's been a supply-driven shock, they cannot really hike rates to address that shock. So that will be a very difficult situation for equities to really come face to face with, and certainly a risk that investors have not given enough notice to as of now.
So just to push on that point, Charu, you think that the market pricing for one full hike from the Fed this year, that is a market, those are traders getting ahead of their skis, that the Fed actually is constrained in terms of its ability to hike rates? Is that the point you're making? As Kevin Hassett, for example, the chief economic advisor, of course, in terms of the White House and that view from the Trump administration, suggesting that once oil prices are lower, once the Hormuz is reopened, then in fact the Fed can cut. But maybe we put that one to one side at the moment. Traders betting that there will be a hike from the Fed this year. You're saying that is unlikely.
It seems to be so because, hiking rates into a supply-driven shock just exacerbates the problem, right? I mean, if we were to get a stagflationary outcome out of this, then that is worse than what we are currently facing, where at least demand is still holding up. But of course, central banks have to sound hawkish and traders have to price it in, because a demand shock is the only way to kill that persistent inflationary shock, right? So I think, traders will stay on the edge a little bit, but for central banks and specifically the Fed, where the demand outlook has not weakened materially. Of course, if you look at some of the other parts, maybe in Southeast Asia, for example, the demand outlook has changed drastically since the conflict began, not so much in the US. So for the Fed to be able to respond with a rate hike to this supply-driven inflation shock, until, of course, it gets materially worse from here, that seems to be a bit of a stretch to me.
What is the next catalyst, do you think, Charu, for the AI trade? Because, of course, the markets have been caught between these two competing pressures, really. One is the AI momentum and the other is the energy shock. And it seems that they've led into to the AI upside. What for you is the next catalyst when it comes to the AI trade?
Tom, there's only one catalyst to the AI trade, and that's really about looking for the bottlenecks. That has obviously shifted. The story has really shifted on that front as well over the course of the months. But from what we heard from, say, NVIDIA's earnings, which has been the benchmark of this whole AI trade for the longest time, last week with its earnings, we saw a clear trend that the market is now moving in terms of its AI trade from generative AI to agentic AI and over time to robotics as well. So certainly, I think that shift, and then what kind of bottlenecks that brings. Energy, as you mentioned, certainly stays a persistent theme across these. But now AI has moved from being a GPU story to being a full stack story, and how that increases the demand for, say, servers, for networks, for bigger memories. I think where those bottlenecks are and still priced attractively enough that and assuming that they're going to continue to deliver earnings the way NVIDIA has done over the past so many years now, I think that's the only key driving theme for the AI story now.
OK, really interesting. Charu Chanana, always smart in these markets, Chief Investment Strategist at Saxo. Charu, thank you for that analysis. Coming up, warnings of a global crisis in food prices, meanwhile. That is, unless action is taken to ease fertilizer shortages caused by the war in Iran. More on that next. This is Bloomberg.
Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, the European Union has suspended customs tariffs on some fertilizers for a year as the war in Iran chokes off supplies. The effective closure of the Strait of Hormuz has restricted shipments of urea, which is a key component in nitrogen fertilizers. The UN has warned of a global crisis in food prices unless action is taken soon. Joining us now is Maximo Torero, chief economist at the Food and Agricultural Organization of the UN, the FAO. Maximo, good morning. Thank you for your time. How acute is the challenge right now as you see it?
Good morning. And the challenge is getting tighter and tighter. We are in day number 86 since the closure. Our red line was day 90 because it will touch all crop calendars of the world. So what we have right now is increasing oil prices. Today is 92, 95, so more or less 55% more compared to the pre-conflict. Natural gas between 60 to 85%, which is used for producing nitrogen, and urea prices 25 to 55% increase depending on the region. At the same time, the freight cost has increased 43% and the bunker fuel cost 58%. So all these are inputs necessary for agri-food system, for agriculture and from planting. And that's why this will move forward in the following months in increasing prices. We are also looking at the commodity prices, and the commodity prices are starting to increase. Corn 9%, soybeans 25%, wheat 8%, rice between 2 to 9%, depending on the type of rice.
How close are we at this point, then, to a crisis? How long does this have to continue to get into crisis territory? Are we days and weeks away from this, potentially, Maximo?
No, I think now we are looking at the intensity of the impact. No, once we reach 90 days, we are touching all the crop calendars of the world. That means that planting decisions are already made for the next half of the year, and for 2027, it will be made later in the year. Now, if the strait opens tomorrow, what we'll have is potentially a lower intensity and a lower probability of a significant crisis. But what we will observe, no matter it opens tomorrow, is an increase in commodity prices, potentially food price inflation. And as it was said before, governments will have to react to this through interest rates. And that's the challenge, because that will also affect economic growth. So I think now the question is how intense this will be and how much this could also be exacerbated with the potential El Niño.
What is you've gone through a number of the different input costs that go into food, from energy to fertilizer. What is the potential for the world to respond in terms of alternating supply chains to mitigate some of the impact and diversifying to try and soften the blow of the restrictions that we're seeing as a result of the closure in the Strait of Hormuz? How adaptive is the system right now, and what would you prescribe in terms of potential changes to try and mitigate some of these impacts?
Yeah, sure. Right now, in the short term, the improvements of the availability of these type of inputs is very marginal, because these type of inputs require significant investments that take years. This is very different to the war in Ukraine, where we were talking of a gap in wheat, where countries that export wheat could create a supply response. Here it's more difficult. But marginally, there can be some improvement from other routes for more supplies from the US, from Venezuela with less sanctions, from Guyana and other countries, but very marginal. So that option, I think, is a marginal improvement, and countries are trying to do that. The most important thing here is to avoid export restrictions of energy and fertilizers. That's what will help the system not to exacerbate even more. And also to try to secure the viability of the farmers through some financing mechanisms, like what we did in COVID-19, like loans which are for 24, 36 months with a grace of periods of 6 months that will allow them to survive until we pass this threshold, and to help countries which require balance of payments gaps to be covered and which are in debt straits. Case of Bangladesh, for example, and now the case of India, and the case of other countries who really are seeing tight balance of payments problems, and they need to pay a bigger import bill because this increase in inputs. Now, in the long term, we can do a lot. We can diversify supplies so that we have strategic reserves in different regions to be able to cope for a period of months for a similar, because today is the Strait of Hormuz, tomorrow could be the Panama Canal. Second, we have to diversify the energy mix of the agri-food systems. The world has improved in the energy mix, but not yet transmitted to the agri-food system, and we have seen this because of the pumping of irrigation. Most of them are using diesel, and that's a big problem right now because diesel is increasing its price. And also, we need to create innovation funds to find alternatives like green ammonia, biofertilizers, which could be improved in 2 or 3 years. Right now, they are not cost effective. So a lot of areas where significant investments can be done to diversify this sector for the future.
Are you seeing evidence of that diversity? So it sounds like you are seeing evidence of that diversification already. And maybe one of the silver linings of this crisis is that it does catalyze more of that diversification. How much of a spread is that happening across the world? Are wealthier nations better placed to be able to invest around more resilient food supply chains? Does it create further gaps in terms of the haves and have-nots in terms of food supply and resilient food supply?
Of course, wealthy nations are able to produce and put in place in the short term more fiscal measures, but there's dangers. As you have seen in Europe, there were several fiscal measures, and now the IMF already alerted them of the potential risks of that, and also other regions of the world. But the countries which are with debt stress and with less fiscal capacity, these type of measures will be extremely risky. And that's the danger of this. So we need to be very careful on the policies, even coming from wealthy nations, because at the end of the line, this is a supply shock. This is not a demand shock. So if you put subsidies and you put price controls and so on and so forth, the only thing you are creating is increasing the demand, not in a real way, and that will create more pressure for the whole world of the prices of these commodities. So we need to be very careful to keep the balance. If not, the world could be impacted also by what wealthier nations will be doing.
Maximo, thank you very much indeed. Important insights in terms of the pressures right now on the global food supply chains and potentially some policy measures as well that could be thought about at a government level. Maximo Torero, Chief Economist at the UN Food and Agriculture Organization. Now to some other corporate news this morning. Delivery Hero gaining on Tradegate after Uber offered to buy the company in a deal that would value the German firm at more than $11 billion. This comes as the US tech giant works to ramp up global competition with DoorDash. Uber, which owns 20% of Delivery Hero, has offered approximately $38 per share. That would put Uber on the hook for around $9.3 billion under those terms. The ride-hailing giant also has options for another 5.6% of shares. NVIDIA CEO Jensen Huang is urging Supermicro to tighten compliance. That's after Taiwan detained 3 people over allegedly fraudulent declarations linked to AI servers. Supermicro says it's working with industry partners to safeguard advanced US tech and intellectual property and will strengthen its compliance program. Huang spoke after arriving in Taipei on Saturday.
We're rigorous in explaining to all of our partners all of the world's laws and regulations, and we insist that they're compliant with laws and regulations. Ultimately, Supermicro has to run their own company, just as everybody has to run their own company. And I hope that they will enhance and improve their regulation compliance and avoid that from happening in the future.
OK, there's plenty more coming up. Stay with us. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What happened was you were out.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
If you roll back the clock, 8 weeks ago, I think the view was the next Fed move would be a cut. It's just a question of how late in the year was it going to be. Because of oil prices being elevated and inflation readings being stickier, now the view is, and probably the conditions would warrant, the next Fed move may actually be a raise.
Goldman Sachs Vice Chairman Rob Kaplan of the potential of a Fed hike, formerly, of course, a Fed governor himself. Also hearing as well over the weekend from Kevin Hassett, of course, the advisor on economic affairs to President Trump, that he thinks that once oil prices come down, there will be scope for the Fed to continue to cut rates. But that is out of consensus with what the markets and traders are now pricing in. So certainly what you're seeing from this chart in terms of the implied probability of a Fed hike, the expectation is that the Fed will hike once this year. Traders are now fully priced in 25 basis points, 26 basis points in terms of the move higher in rates out of the US. On expectations, the Fed will be pushed into that higher rate environment as a result of the inflation push, of course, that's coming through. And you can tie that back to what is happening around Iran and Straits of Hormuz. We continue to monitor, of course, developments on that front. But there is the disconnect then in terms of what you're hearing from the Trump administration and what traders are expecting from this new Fed under Kevin Warsh, of course. And in terms of the inflation story, some more detail in terms of how AI is feeding into producer prices. Really fascinating chart that breaks out how AI is becoming a bigger component now of producer prices. You can see that contribution in the white line from semiconductors then, and how that has moved particularly and significantly higher in recent months. Not quite at the same level in terms of what's happening in terms of the metals and electronics, but there has been a sharp tick higher in terms of the AI contribution to producer prices. So think about that as well in terms of a trend that will continue into the future, you would expect. Let's flip the board and have a look at terms of what's happening on the consumer side. You had the University of Michigan sentiment survey, the consumer that came out at the end of last week, and the consumer in the US still feeling pretty negative. That is the yellow line, so dipping to 44.8. So the consumer in the US feeling very cautious and very concerned, and yet consumer stocks, there is that crocodile mouth-shaped gap between the US stock performance linked to the consumer and consumer sentiment. So at what point will that close? And to what point is that a disconnect that may put some investors in those stocks feeling a little bit uncomfortable? So far, those stocks, the consumer stocks, have defied the pessimism amongst US consumers. Now, to access, search and save all of the Bloomberg terminal charts that are used on this show. And across Bloomberg TV, terminal subscribers can use the function Chart TV Go. Think about the risk events this week then. Tuesday, we get US May consumer confidence. On Thursday, we get US April PCE, of course, that favoured gauge of the Fed. And on Friday, we get May flash inflation across Europe as the ECB signals it may be preparing for that rate hike, of course. The opening trade is up next. Stay with us. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. It is Monday, May the 25th. Here's what's on the agenda. The US and Iran inch towards a deal. Oil drops. Global stocks jump to near record highs. And Huawei touts a chip-making breakthrough that could close the gap on TSMC.
Let's get a look at how some key market indicators are faring. And of course, the focus coming from the Middle East is deal or no deal. But as you can see from the price action of Brent crude this morning, we are down almost 6% on the assumption that we will get some gradual reopening of the Strait of Hormuz. That's pushing down the price of oil. Also for European gas as well, down 6% today as well. So hopes are high as we head into what could be a pivotal couple of days once again when it comes to Iran and the U.S. And take a look at European futures, pointed to open up 1%. So we are set for a more positive session. Of course, it is a UK and a US bank holiday, but still plenty of stories to get through. The countdown to the opening trade starts right now.
So, US Secretary of State Marco Rubio saying a deal with Iran could come as soon as today? We watch, of course, for the details around that potential deal. What would it mean in terms of implementation? And significantly, of course, for the markets, what would it mean in terms of a potential reopening of the Straits of Hormuz? Very fortunate, of course, to have Jumana who's actually on set with us with that focus on Iran and all of your expertise in the region, because it seems to come down to implementation dependent on this deal. There's all sorts of caveats that remain, but the US is sounding cautiously optimistic, and interesting to hear from Marco Rubio suggesting that it could come as soon as today.
Look, one thing I will say, Tom, is Saturday there was a lot more optimism than Sunday. Sunday, both sides started to sound a little bit more guarded as to how much of a breakthrough that we can get. And as we've been reporting over the last few months, by the way, it's been months, in all likelihood, what we are going to get is a framework for a deal as opposed to a fully packaged deal. And it's quite clear from this that we're going to get a sequencing of events. But I guess as it pertains to markets, the main focus here is what happens to the Strait of Hormuz. And if we do get a 60-day ceasefire during that period, is the strait going to be fully reopened? And if it is reopened, does the market then move on and away from the story, even though clearly some of the bigger, thornier geopolitical issues are still unresolved, including, of course, the fate of that nuclear material and Iran's I guess, concessions on their nuclear programs.
So today, to your point, dollar down, yields down, oil down. And the expectation is the market is focused on that Straits of Hormuz question, and they're punting into the foreground, into the background, I should say, the question marks about the nuclear risk and the nuclear powder and the nuclear dust, as President Trump describes it. They're focused very much on the energy flow. And maybe they're taking a lift as well from the fact that about 30, according to reports, 33 vessels have managed to cross through the Straits of Hormuz. Maybe that suggests to some that if you do get a deal, you can reopen more quickly. Maybe the mining of the Strait has not complicated it quite to the same extent. But there are all sorts of question marks on that front. Maybe that is a positive. It seems there are some vessels crossing through the Strait, and there have been in the last few days. Just a trickle, obviously, in the context.
I think that does move the needle. It definitely makes a difference. And far as the Iranian agency yesterday reporting that around 30 to 35 vessels have gone through, even some LNG vessels have gone through, which, again, has been an anomaly over the past couple of weeks. But it's going to take time. Remember, ADNOC CEO Dr. Sultan Al-Jaber said a couple of days ago that even if the Strait reopened today, it would take 4 months to normalize to just 80% of pre-war levels. It's not going to be until 2027 until we get to full pre-war levels. And this is from, an industry leader, a man who understands a lot about energy. And so the question here is how quickly can these energy flows normalize? And you have to take into consideration there's a considerable backlog. You've got about 800 vessels still stranded in the Persian Gulf. It's going to take time to demine. It's going to take time for full operations to go back to normal and, of course, repair a lot of the damage that was inflicted on these energy infrastructure sites. And all of this is an assumption that this gets done and dusted in the next couple of days.
Kevin Hassett of the Trump administration seems to be looking at a shorter-term response in terms of how central banks think about this. And, of course, primarily the Fed, saying that once the Strait is reopened, oil prices fall sharply and the Fed still has scope to resume its rate-cutting cycle. So Kevin Hassett continuing to push that message as Kevin Walsh takes over and President Trump says, you're independent, do what you need to do.
I mean, I've got to say, it must be a really difficult time to be a central banker right now. Christine Lagarde gave me an interview over the weekend talking about the possibility of revising upwards their inflation forecast come June. A rate hike is pretty much priced in now for June. What if that all changes in the next couple of days? What if there is a deal, the Strait reopens, and oil markets are very quick to react, despite what we were just discussing? Oil plunges down to $80. Does that change the calculus then for policymakers into the second half of the year? We've been talking about rate hikes. Maybe they'll have to check themselves once again.
The Bloomberg team reporting and talking to analysts and strategists over the weekend about the fact that even if you get a resolution, the move higher in yields and the sell-off that we've seen in global bond markets isn't just an inflation story. It's also a concern about global deficits and global debt. And that when you look at real yields, if you strip out inflation, they have moved higher as well, to your point, about the complexities facing central bank governments.
And that is actually really interesting piece there, because it tells you it is not just about inflation expectations. I saw towards the end of Daybreak, you were pointing on, sentiment, consumer sentiment, and the fact that people aren't feeling that good about economy, but they're also very worried about what inflation is going to look like in a couple of years' time. That obviously has given a bit of a boost to fixed income. But then you wonder how the short-term dynamics are going to impact imminent decision-making by some of these central banks, because the world has shifted towards expecting interest rate hikes. Maybe that doesn't transpire in the end.
Central banks have to think about AI as well. Interesting developments out of China with Huawei, which is seen really as the leader in terms of the chip-making space and semiconductors in China, announcing that they are closing the gap in terms of their ability to manufacture chips at the cutting edge versus TSMC, that crucial foundry, of course, that sits in Taiwan, that everyone from Apple to NVIDIA are dependent on. Huawei saying they're closing the gap now.
Yeah, and one thing that caught my attention in the article, Tom, is that they're capable of closing the gap even without relying heavily on some of the latest infrastructure or some of the latest equipment from ASML. Could that have repercussions on one of Europe's largest tech companies?
We will certainly be watching ASML at the Open. Yeah. They do provide some of their lower range lithography machines to SMIC into the Chinese market. They're able to do that with deep ultraviolet machines, but not their most cutting edge. So we'll see. The market aim back it may be there for ASML, but the fact that they don't ship their most cutting edge equipment into China. They do, though, ship a lot of DUVs, the lower and later and older range systems into the Chinese market.
And then how much of this also is just Huawei tagging onto a market or taking advantage of a market where it's unclear what sort of access NVIDIA is going to have? This has been a big story. We spoke about Trump-Xi summit, but maybe Huawei are just looking to take advantage of a hole in the market because it's unclear whether NVIDIA can actually tap into that.
It will absolutely feed into that debate that is live in the halls of power in Washington about whether restricting or providing US tech is the best way to go, whether by restricting you actually catalyse that push for innovation in China. To your point, Jemima, thank you, of course, with insights there. And here's what else to think about on the show today in terms of the guests that we'll be getting out through the next 2 hours. Stay tuned for this. George Lagarias, Forvis Mazza chief economist. We're also going to be hearing from Timothy Ash, RBC BlueBay senior EM sovereign strategist, and particularly with a lens on what's happening in Turkey. Fascinating developments at the political level, of course. They faced that energy shock as well, and the asset price moves have been sharp and swift in Turkey. So the view there from BlueBay. Monica Defond from the Amundi Investment Institute. We'll get her take in terms of what's happening on the geopolitics and central banks as well. And then AI and jobs on the back of the controversy that we saw triggered from the comments from the CEO of Standard Chartered about jobs. Eleanor Simple, King's College London professor, with a view, analysis and expertise in terms of what AI is doing to the jobs market.
Yeah, looking forward to that, especially after those somewhat jarring comments coming through from the Standard Chartered CEO last week. He's obviously extensively apologized. All right, let's look ahead to what else we are watching out throughout the day today. It is a holiday. It's a bank holiday in the UK. It's a bank holiday in the US, Hong Kong, South Korea. Plenty of these markets are closed, but European markets are still open, so we're going to be tracking those. And then, of course, we've been hearing overnight throughout the session from the US Secretary of State, Marco Rubio. He is in India ahead of the Quad foreign ministers meeting. So stay tuned for anything that comes out of that. Earlier on, he was talking about the possibility of this Iran-US MOU being signed, done and dusted in the next couple of days. So let's see what happens. But throughout the rest of the week, bear in mind that for much of the Muslim world, Arab world, it's a Eid holiday, so that starts from tomorrow, and most of these markets will be closed until the end of the week. In the U.S., we have U.S. consumer confidence to watch out for on Tuesday. Wednesday, the ECB financial stability report. Always interesting to watch to see if there are any sort of systemic risks that are emerging. And then Thursday, this is a big one, April core PCE figures, a big one for the Fed. And, of course, the incoming new Fed chair. We forgot to speak about that, Tom. We've got a whole new Fed chair who was sworn in on Friday. And then on Friday, we have French, German, Spanish and Italian flash inflation prints. So all that coming up this week, despite the bank holiday today.
Yes, there's still a lot of news to work through, certainly, and potential market implications. Here's what else you need to know this morning, then. ECB President Christine Lagarde, talking of Eurozone inflation, says the central bank is set to lift its inflation outlook when policymakers meet next month. Speaking to an Italian talk show, Lagarde said a March projection that foresaw price gains of 2.6% this year, quote, will probably be revised. Her comments confirm what some policymakers have signalled in recent days. Ebola may have killed more than 200 people so far in the Democratic Republic of Congo. The country's health ministry says more than 900 suspected cases have been reported across 11 health zones spanning 3 eastern provinces. The outbreak is exposing the difficulties of mounting an Ebola response in one of the world's most unstable regions. Armed groups control territory, health systems are fragile, and attacks on treatment centres have disrupted containment efforts. And Uber has offered to take over Delivery Hero in a deal that could value the German company at about $11.6 billion. This comes as the US tech giant works to ramp up competition with DoorDash globally. Uber has offered approximately $38 per share. Uber, which already owns 20% of Delivery Hero, would have to pay about $9.31 billion under those terms.
And you're already seeing a bit of a reaction in pre-market trading, clearly reflecting the fact that there is a bit of a price war or a bidding war going on now between Uber and between DoorDash. I will just say, wearing my Middle Eastern hat, one of their prized assets is actually in the Middle East. It's a company called Talabat, so it's under the Delivery Hero umbrella. And it was interesting in this FT story, they were saying that even though the overall bid amounts to something like 10 billion euros, about 9 billion euros of that is coming from the Middle East assets alone, the crown jewel, Talabat, which seems to be expanding because of various structural reasons in the Middle East, not least because growth rates there have been so high. But it tells you a lot about just how all of these food delivery businesses have evolved since COVID. There's a lot of consolidation that's going on in that space.
Yeah, absolutely. I think that angle on the Middle East line and the investment there is really interesting. There's lots of different angles to this story, which is why it's so fascinating. We're watching the stock, of course. It's cooled higher, Delivery Hero, on the back of this story. But there are also echoes of UniCredit's attempt to build out a stake in Commerce Bank. Yeah. So there's a lot of different excuse the pun, takeaways from this story. And that is why we'll continue to watch it for you.
Excellent pun. The takeaways. All right, coming up, Bill Winter's efforts to restore calm after making some controversial comments on AI have failed to reassure labor organizations. We'll dive deeper into those comments from the Standard Chartered CEO. Plus, the Rolls-Royce CEO tells Bloomberg how the jet engine maker engineered its turnaround. We'll bring you some of that interview later in the program. But up next, we'll be joined by Naomi Fink, Chief Global Strategist at Amova Asset Management. And if you have any questions of your own for our guests, please send them to us on IB plus BBTV Go. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom Mackenzie.
This is your opening trade.
Only on Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
The president's not going to make a bad deal. He's just not. This issue, no one has done more, and no one has been more serious about the threat of a nuclear Iran than President Trump has been. And so I'm very confident, and we should all be very confident that we're either going to have a good agreement or we're going to have to deal with it another way. We'd prefer to have a good agreement.
That was the U.S. Secretary of State Marco Rubio speaking to reporters in India. Now, Rubio's comments come as senior U.S. officials say the two sides are closing in on a deal that would reopen the Strait of Hormuz. But it may take several days for both sides to get final approval. Meanwhile, in Truth Social posts, President Trump says the U.S. won't rush into a deal with Iran. Let's bring in Bloomberg's Abir Abu Amar, who's in Dubai. Well, Abir, we have been here many times before. What is the chance of an actual breakthrough this time?
Yeah, good morning, Jumana. Look, a whirlwind of a weekend. We went on the weekend on Friday thinking that a stalemate will continue, if not attacks. And then on Saturday, with President Trump's comments suggesting a deal between the U.S. and Iran is imminent. On Sunday, yesterday, what we saw was some tracing back from the Iranian side. But look, we seem to be making some progress here. Now, there are some sticking points between the two, but an initial proposal or a prelim proposal between the United States and Iran suggests that we will see, or we want to see, a gradual reopening of the Strait of Hormuz, and then everything else comes in the negotiation period after that. So what came out from the United States is a period of 60 days that extends the ongoing ceasefire between the two. Two things that were not part of the proposal, according to U.S. officials, are Iran's highly enriched uranium and taking that out. And then the second thing was addressing Iran's missile stockpile. Now, those were President Trump's, or two of President Trump's main goals. And they've certainly drawn some criticism from some Republican hawks or Iran hawks in Washington. And that's probably why we're seeing a little bit of tracing back on the U.S. front. Now, as you mentioned, as we heard earlier, Secretary of State Marco Rubio was in India earlier today speaking to reporters and suggesting that we may actually see a deal come to fruition today. He said that it could be whatever comes out, it will be something good, and that diplomacy is the way forward to this. But what we're seeing on the markets front is a positive reaction across the board. Oil prices on the Brent front have fallen to below $100 a barrel for the first time since April 24th. So markets are suggesting or anticipating that this would be a change for real this time, Jumana.
Okay, Bloomberg's Abir Abu Amar, thank you with the details and the context after, again, a very busy weekend with different lines from different sides, of course, of this debate, maybe edging closer to that deal. For more in terms of the market reaction, let's bring Naomi Fink right now, Chief Global Strategist at Amova Asset Management, joining us from Tokyo. Naomi, thank you for your time. Do you want to be positioning for a resolution to this and a reopening for the Straits of Hormuz?
Well, I think what we've seen since the beginning of this conflict is that we've had many attempted transitions where markets see good news and price in an off-ramp and then are disappointed as we revert back into the standoff or we have the war risk dominant situation. So I'm not saying that there is no possibility of an off-ramp. It's just that you want to see clear concessions made by both sides before pricing that in as an equilibrium. So I think more information is still necessary, and we have to keep in our minds what would confirm or disconfirm this transition to an off-ramp. It's more about the process, about how we transition there, and we haven't seen anything definitive yet.
Yes. You're cautious, Naomi. I get that from the response to my first question and from your notes. And history would suggest that you have rationale behind that caution and logic behind that. If we just play out the bull case, Naomi, if we get some concrete details in the next few hours and few days, and if we get implementation, what is looking like an opportunity? What would you position into? What is showing value in the bull case scenario?
Well, yes, again, we probably want confirmation. So we have to see actual concessions actions on both sides and de-escalation. And if we do see this, it's likely that we'll probably continue to see reward in the equity markets, as the equity markets seem to have really downplayed this whole conflict to a surprising extent in favor of the ongoing massive boom in investment. So I think that's already an underlying theme that hasn't really gone much into the background. So I'm not really sure that there's going to be a whole lot of support, additional support, maybe a bit, if we do see an off-ramp. We have seen some action on the bond market side, some concerns, rising inflation concerns. So perhaps that could subdue a little bit. But again, I mean, since we have had the situation last for months, it's not evident that we can just put those inflation expectations right back into the bag. I'm not sure that's
Naomi,
that's
what about Naomi, what about the repercussions on the Bank of Japan? Just looking at the June meeting, we are about 20 basis points priced in for a rate hike. And remember, at the last meeting, I think people were a bit taken aback by the 6-3 split on the voting committee and the fact that inflation forecasts were revised upwards. How does a potential resolution and a potential, continuation of the fall in oil prices, you think, affect the decision making for the Bank of Japan at the upcoming meeting, if at all?
Well, I think Japan is in a special situation, more in that even before the conflict, we were already at this type of critical juncture, most obviously on the inflationary side. But also, we've had a lot of underlying developments in the Japanese market. We've seen multi-year improvement in corporate governance and re-rating of investment, of firm valuations, etc. So we had this relatively positive backdrop, and alongside it came higher inflation expectations. And when we look at the combination of the last meeting, the outlook, the decision, as well as the press conference, we see a relatively hawkish stance, but some uncertainty around the current situation. So if we do see resolution, it could be one reason to act sooner rather than later, since BOJ is still in normalization mode. It hasn't proclaimed that it's arrived at neutral yet, and so we're still on the accommodative side. It has hikes to deliver.
Yeah. Is that going to support the yen? We've been sort of hovering in this 155 to 160 level for a while now. Where do you see us going from here?
So I think the yen is right now trading as a type of credibility indicator for the Bank of Japan. And even though the yen is weak, we've seen the talk about intervention at least have some interim effectiveness. Yet I think the market eventually does expect the Bank of Japan to deliver those hikes because it hasn't reached neutral yet. So if there is any big disappointment, and then there is a sell-off in the yen because of this credibility disappointment, well, that could be rather damaging for Japan, as Bank of Japan points out. The amplification of the yen weakness on what we've seen already in terms of the rise in input prices and oil prices, energy prices, a lot of other inputs. That's serving as additionally amplifying the inflation, the underlying inflation. So Bank of Japan can't really wait around for very long, whether the conflict ends or doesn't end shortly.
Naomi, thanks so much for joining us today. Naomi Fink, Amova Asset Management's Chief Global Strategist. Well, coming up, optimism around a potential U.S.-Iran deal to reopen the Strait of Hormuz tempers inflation concerns. We'll discuss that next with our next guest, George Lagarias, Chief Economist at Forvis Mazars. This is Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show. We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance. We're talking about it.
Who is the Vivian Tom clientele? Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world. Why do you position your products for this group of women? When I started, designing, I always want to do something that is empower women. When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example. My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
Your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Happy Monday. 30 minutes from the start of the opening trade. European futures then pointed to gains of almost 1% after a decent week of upside for European equities. This, of course, on optimism around Iran, with all the caveats, of course, but oil prices are lower and European futures are pointing to the gains. The UK, of course, closed for a bank holiday.
Yep, and let's take a look at how European bonds are opening up as well. And I suspect we are in for a bit of a rally this morning. That's exactly what we are seeing. 10-year German bonds below 3% now, breaking to the downside, so down 5 basis points in the early minutes of trading. 10-year yields in France, the OATs, down almost 6.5 basis points. And take a look at BTPs, also quite substantial, down 7 basis points. And this, of course, as we talk about the commodities backdrop, oil is falling as the U.S. and Iran edge towards a deal. The White House National Economic Council Director Kevin Hassett says he's confident lower energy prices will open the way for the Fed to cut interest rates.
Again, we expect energy prices, as soon as there's a deal, to plummet. And when that happens, then there'll be a lot of room for the Fed to do the right thing at lower rates. But again, I respect the independence of the Fed and the intellect of Kevin Warsh, and I'm sure that he'll work it out on a data-dependent way.
Joining us now is George Zagarias, Chief Economist at Forvis Mazars. Really good to have you with us. George, earlier on in the show, Tom and I were talking about the catalyst for the higher bond yields that we've seen over the course of the last couple of months. And my question to you is, how much of that can be pinned down to what's been happening with the price of oil? And if we do see a sustained unpricing of some of the geopolitical premium that's priced into energy markets right now, what will that do to bonds?
Okay, I would hate to rain on anybody's parade right now, but the reality is that break-even markets were not really pricing in very high inflation, maybe 3%, 3.5% until the end of the year. So we were seeing an upside in bonds, even and especially long term, but they were not really pricing in a significant continuation of Hormuz. So where markets were is roughly where we are right now, which means that I would not expect to see a massive climb down, especially when considering all the caveats from where we are now and today.
Okay, so you're not expecting to see a massive climb down. Where does that show up more? In the front end of the yield curve to account for the possibility of central banks hiking or staying put? Or in the longer end of the curve where, again, in addition to the uncertainty around inflation expectations, you also have things like rising fiscal premium and political uncertainties as well?
So obviously, I would expect the whole curve eventually to move down, but this will happen. Sluggishly, and yes, you're right. Going forward, it does make sense for the shorter end of the curve to move a little bit more, especially if we get confirmation from the Fed, not Kevin Hassett, the Fed, that it intends to lower rates. But we're not there yet. We're at a point where inflation is still rising, and we don't know where peace is, where it lies, or what sort of peace we will have. So there's going to be a risk premium attached to everything.
To what extent, George? I mean, arguably the ECB is closer in that journey towards a rate hike, and we were hearing, of course, from Christine Lagarde over the weekend. Does market pricing for hikes from the ECB, do they change significantly if we get a reopening of the Strait of Hormuz?
I think they will. I mean, 3 rate hikes right now might be a stretch, especially if Hormuz opens and the ECB feels that inflation is presently transitory. I don't know how the ECB is going to think about it. I think at least 1 rate hike until the end of the year is entirely possible. But beyond that, if I were the central banker, which I evidently am not, I would be very, very careful with, with the possibility of a policy error. Okay, rates were low to begin with, obviously, so there was some room for a small rate hike, which should not really impact the economy too much if they get it wrong. But 3 rate hikes, where European economy is right now, on the verge of stagflation, that could be a stretch.
Okay, so there's a potential policy error if we get a more hawkish outcome, if we get arguably more than 1 hike from the ECB. with the caveats, of course, George. What is your current assessment of the health of the Eurozone economy? What are you most concerned about wages, about the labour market? What are the kind of red flags that you're seeing right now?
I could say the labor market, obviously, because, we all see the dislocations, especially among younger workers with AI. That's a big concern. But right now, my big concern is growth. I'm not sure where growth is going to come from. Germany's auto industry needs a massive rethink, and that has not even happened yet. In France, consumption is under pressure, and a lot of this has to do with politics that haven't seen anything resolved. Where will growth come from? That's my concern. As the US and China have really thrown the kitchen sink into this big, massive AI boom, the reality is that Europe has been left behind. So my biggest concern is growth and productivity.
Yeah, but at the same time, can Europe focus on growth at the same time as focusing on keeping their fiscal and public finances in order? And is Europe missing out because they simply don't have the privilege that the US have in terms of running these large deficits without consequences?
You're absolutely right. For Europe, debt is anathema. They avoid it as much as they can. And even then, you see that France is at the crosshair of financial markets and Italy is not too far behind. And I shouldn't be speaking, I'm Greek. But the point is beyond that. Europe has said no more debt to fuel growth. Whereas the US, it's not just the dollar, it's the strategy. They feel that they need growth and they will eventually handle debt. When you're the world's biggest economy, you can afford this. Okay, I think Europe could afford a little bit more to fuel growth. It won't, because it went through this debt crisis that has traumatized everyone. But it would be a good idea to rethink the limits of growth. And Draghi's paper was actually spot on this a year and a half ago.
Okay, George Ligarias, Chief Economist at Forvis Mazars. George, thank you. With the concerns, of course, about the stagflation risks for Europe. Meanwhile, the European Central Bank is set to lift its inflation outlook when policymakers meet next month. That is according to President Christine Lagarde. Her comments confirming what policymakers, including Governing Council member Mannes Muller, have signalled in recent days. Let's take a listen to what Muller told us.
We have the inflation that has picked up already. So in April we had the headline inflation at 3%. So it's already by a percentage point higher than the 2% that we're targeting. And that of course is a concern. And I think one should be concerned about such inflationary pressures becoming more persistent or more permanent. This is what we saw in 2021-22 when the inflation first picked up, also as a result of energy prices increasing. So I think there's a good case to be made, but that still the ECB at this point needs to react because the inflation is our primary concern.
How much of a concern is the recent bond market sell-off for you? How does that affect the way you think about debt sustainability in the Eurozone? Because this is also something that is happening at the moment.
I think risks to financial stability that are coming from the high public debt levels, also high public deficits still in many countries. I think it is a serious concern, and the fact that investors in bond markets seem to be becoming a little bit more nervous again. Also, that is certainly reflecting the expectations of inflation being a little bit higher than this. I think this is certainly a concern. I think it's also perhaps noteworthy that the views on the bond market versus to the equity market, they seem to differ at the moment because there's still so much optimism apparently in the equity market among investors there, whereas you do see those signs of perhaps more concern in the bond market.
Balanced approach to fiscal and monetary policies at this moment is something that is very important. How do you see all of this playing out, and how much pressure do you think the central banks will be facing now due to what is happening?
Well, the fact that we are seeing quite significant budget deficits in a number of European countries, it's not making it easier to get inflation under control. So that's why the message also from many of us central bankers has been that first of all, having a significant budget deficit by itself is a problem. We need to have a clearer understanding how we get out of it in the coming years. But in the short term, as we see governments thinking of different support measures to ease the impact of the high energy prices on consumers and corporates. So here I think it's important to be just careful with those such measures. Those should really be very short term and very well targeted to be effective, and also not to put too much strain on public finances.
Well, that was the outgoing Estonian Central Bank chief and ECB Governing Council member, Madis Müller. And coming up, we're going to be discussing the political and economic turbulence in Turkey with Timothy Ash, senior EM sovereign strategist at RBC BlueBay. That's next. This is Bloomberg.
Is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the King of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%. Because it is taking over the electricity generation industry.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back. Now, Turkish police have entered the main opposition CHP party's headquarters after a court ordered a new party chairman to take control. The ruling annulled the results of the 2023 party congress, which put Özgür Öcal in charge, causing turmoil in Turkish markets. We can get the thoughts of Timothy Ash right now, senior EM sovereign strategist at RBC Blue Bay. Tim, fantastic to get your insights on the developments on the ground in Turkey. Political risk is back, it seems. How should markets be reading these pretty significant political domestic adjustments in Turkey?
Well, this is Erdogan managing domestic politics as he's so used to do. Remember, March 25, we had the Imamoglu arrest. Markets a bit of a spin. I mean, this time around, it seems a little bit less stressful, I guess, less of a stress point than that in particular. I mean, to some extent, this is internal CHP politics, right? This is the main opposition party. Kılıçdaroğlu, the former leader who lost, famously to Erdogan in the 23 elections, basically was ousted by Öcal, and he's trying to get his job back. He's kind of cooperating with the Erdogan administration to kind of oust Öcal, another leader who could potentially challenge Erdogan in looming presidential and actually parliamentary elections. I mean, it looks as though Erdogan has managed a situation where the opposition is kind of in turmoil, fighting among itself. And the interesting angle here is that Erdogan could possibly go to early elections.
Okay. Interesting. Let's just pause that thought for 1 second, because I do want to ask you about the market turmoil that we saw towards the end of the week in reaction to this court ruling. What are going to be the ramifications on the central bank here? And I've noted, our own team, Bloomberg Economics, we've actually priced out the rate cuts that we had thought were going to come later this year, and we're now anticipating 300 basis points worth of tightening.
Yeah, well, that may not happen, actually. I mean, this is, I guess, that, we had the market sell off a little bit on Thursday, came back Friday. A bit different to, again, the Imamoglu scenario a year or so ago, because at that point in time, a bit crazy, but Şimşek was in hospital, central bank governor was on a plane, they found it difficult to manage, currency adjusted. This time around, I think it's pretty clear that the central bank and the government will manage markets. They've got plenty of reserves, 160-odd billion of reserves, gross reserves. They'll use them to defend the currency. And, worst case, they'll hike rates. But actually, it's a holiday at the moment in Turkey. They have a bit of time for politics to calm down. And then when it comes back, let's see where we are in terms of rates. Given the Middle East furor and higher oil prices, inflation's kind of surprised negatively. I mean, there should be scope to hike rates anyway. But I think will try and avoid that, especially if we're in an early election scenario, as I mentioned.
Tim, what is the biggest risk for Turkey and Turkish assets right now? Is it domestic politics, or is it energy and the energy shock from Iran?
Well, energy is bad news for Turkey. It's a huge energy importer. The classic one is each $10 increase in the oil price cost them between 3 and 5 billion on the current account, and probably 1.2% inflation. Inflation was high anyway. So that didn't help. But, if we're in a scenario where we can see an easing of Gulf tensions, that helps Erdogan out. Turkish markets have held in pretty well, despite the kind of Gulf-Iran war scenario. And, again, it reflects the fact that we have a good, credible team, Şimşek, Karahan, plenty of FX reserves. They're much more orthodox than they were in the past. I don't think they'll try and avoid rate hikes at this point in time. But they will hike if they have to, right? If this political furor causes problems, definitely they'll hike. Or if, there is an extended Gulf War scenario with much higher oil prices, I think they'll hike in that scenario. But, I think they should be able to manage through it. Depends what happens on the politics. I mean, it depends how, if we see a rerun of the street demonstrations we saw around the Momola scenario, that gets much worse, then again, maybe the markets will be a bit more negative. I don't think so this time. I think it's probably a less stressful political situation than it was then. I mean, obviously, secular Turks will argue it's a disaster. It's the final end of democracy and all that kind of thing. Markets in the end will be probably focusing, what it means for rates, what it means for fiscal policy. And this early election scenario is an interesting one. I mean, again, if Erdogan decides that the opposition are divided, he's winning on a geopolitical angle. Turks want a strong leader in a difficult geopolitical environment. They may vote for him. There's still this prospect of the Kurdish peace. He may just decide to go early. Remember, Erdogan has that problem about a two-term limit. He can avoid that by going for early elections. So that's probably the thing to watch for. At the moment, I don't think Turkish markets are in kind of a meltdown scenario. I think Şimşek and Karahan could probably manage through this. And that was kind of reflected on Friday. Markets came back, limited kind of impact. And today, obviously, we'll have the, Gulf War, Iran kind of deal scenario helping Erdogan out probably.
Tim, really smart insights. Timothy Ash, Senior EM Sovereign Strategist at RBC Blue Bay with that lens on Turkey, at least for today. Let's turn now to today's markets in 3 minutes on the opening trade with Venram, strategist from our Markets Live team. So, Ven, of course, a lot of markets closed. South Korea, we've got Japan, of course. We've also got the UK, of course, and the US closed for holidays here. But we do have that optimism around a potential deal. Talk us through the reaction, so particularly in terms of JGBs and how that could be tied into the Iran story.
Morning, Tom. I think there has been a bit of respite for JGBs. As you can see, that the yields have come off a bit. But I think the question is, what if you was even assuming best case scenario that a deal goes through and we've got the Strait of Hormuz reopening, I think that just the backlog is going to take months to clear. So it's not clear that, inflation is going to come down in Japan anytime soon. And by the BOJ's own estimates, inflation is going to be averaging 2.5 to 2.8% this fiscal year. So, and if you assume that the economy is going to be on an even keel, which it has been of late, I think that the Bank of Japan needs to raise rates fundamentally to solve this problem. At the moment, they are less than 1%, of course, and the neutral is somewhere around 1%. It was 1.5% even before the war started. And after the war started, I ran the Taylor rule function, and that shows that the Taylor rule rate, prescribed Taylor rule rate, is somewhere around 2.8 to 3%. So there's a humongous gap between where the Bank of Japan needs to be and where it actually is. So I think that the markets are kind of the sell-off in the bond markets that we have seen so far is a reflection of that. If you look at the JGBs, and you fully swap out the cash flows into US dollars to compare them with treasuries, what you see is that they are trading at a discount of 25 to 40 basis points. That's pretty steep. And the markets are saying, you know what, you've got a problem here. You're fundamentally behind the curve. You need to get even with inflation. And the JGB is not doing that. So whatever we are seeing today is a respite, is not a fundamental turnaround for JGBs.
Ven, and it's important to reiterate that there is still no deal that's been signed. And I just wonder whether hopes of a breakthrough as opposed to an actual breakthrough are enough to keep the rally going.
Yeah, absolutely. It's scary, Jumana. I mean, we have seen this plot turn and twist every second minute, literally, with a tweet. But so I think that the markets are over-optimistic here. There is a chance that we may not get a deal, and then that will set ourselves up for a sell-off. But even assuming that the deal is going to come through, I think stocks are overpriced, and I think there is a fair bit of growth building up in the markets.
Yeah. Okay, and of course I should have said, Japan is open. Japanese markets open. South Korea and Hong Kong are closed. Markets Live strategist Ven Rant. Ven, thank you. Remember, you can get up-to-date analysis, of course, from Ven and the rest of the team on the terminal and on Bloomberg.com. European futures pointing to a solid session. Risk on. Futures pointing higher by a full 1%.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
It is Monday, a few minutes to go then until the opening trade. This is a picture on Friday for the S&P 500. And you saw gains of around 0.4%. You saw gains through the week, actually, for US stocks and European stocks, despite increased anxiety about the bond sell-off that we saw with yields higher. That story has moderated in today's session. Just reflecting back on the strength, the moderate strength that came through. It was healthcare, it was tech that did some of the heavy lifting over in the US session on Friday, with gains of around 0.4%. So the futures picture then this Monday, with a focus, of course, on the optimism, with all the caveats around Iran and that potential deal between the US and Tehran. We look at a futures picture where it is risk on. Again, oil prices are lower, yields are lower, the dollar is lower, and equities are pointing higher. 0.9% is the potential upside for European stocks. The UK, of course, closer. Volumes could be slimmer. Certainly over in Asia, you've seen fresh record gains for the Nikkei in Japan. South Korea is closed, Hong Kong is closed. You're seeing gains of potentially 0.7% on the CAC current. DAX futures pointing gains of potentially 204 points. What are you looking at, Jamal?
Yeah, well, a couple of sectors that we're watching out for. Specifically, one stock, delivery hero, and this is on news over the weekend that Uber are looking to initiate a takeover on TradeGate, already seeing shares rising 8.2%. That is well above Uber's offer, indicative offer of 33 euros per share. So let's see what opens up, where it opens up. Oil stocks obviously in focus, with hopes of a breakthrough over US-Iran and some form of a framework around a deal. And then, of course, because of lower oil prices, keep a close eye on how airlines are going to be reacting. And no doubt lower oil prices will be beneficial. Tom.
Absolutely. We will watch travel and leisure. We'll watch the energy majors, of course, although many of those are listed on the FTSE 100, which will be closed today. That momentum that we've seen, and we saw that build, of course, through last week, and then some details on that potential deal giving some upside. That is the expectation as we look for the pricing this Monday, again, with a cautionary note in terms of the volumes that we could see with the UK close for that bank holiday and it's Memorial Day in the US. There you're seeing the opening across the benchmark of 0.3%. We await the CAC, we await the DAX. Of course, the DAX can take a little bit longer. Jemana pointing out that travel and leisure, the airlines could be in focus on lower oil prices. You've got Brent at around $98 a barrel. There you have the Dutch markets opening in positive territory. The CAC current as well, gains of 0.9% on the French index, as you can see, over in the Netherlands, gains of 0.6%, and we're seeing real strength over in Spain as well. The IBEX currently up at 1.2%. And again, we can look to some of the airline names within that index. So again, across the benchmark, with the futures picture pointing to gains of 0.9%, you've got gains so far of 0.5. We'll see what the breakdown is after a positive week, again, for European stocks and their US counterparts last week. Jemana.
Yeah, well, let's get some of the signals that are coming up in these sectors that you referenced. And here are some of the main outperformers today. You can see that banks starting off on a positive foot. We've got tech companies as well up 1%. And so that's one of the major moves that we're seeing there. Construction, I mean, it is a sea of green out there, Tom, essentially reflecting some of the optimism that we spoke about stemming from this potential breakthrough out of the Middle East. And not necessarily because of the geopolitical premium, but the impact on commodity prices, energy prices. That's clearly going to be a boost for some of the key sectors that we're watching. Take a look at travel and leisure, which incorporates some of those airlines up at 1.1% already in the early hours of trading.
So in terms of individual names within that sector, you're seeing Ryanair jumping 3.4% on the back of those developments. TUI Travel, of course, over in Germany, up almost 3%. Some individual names gaining on the back of lower oil prices. The flip side of that, of course, is the pressure on the oil majors as we look at Brent at around $98 a barrel. Shell down 1.4%. Not a huge move, but it is a little lower, of course, on these developments. Total Energy over in France, down similar amount, 1.5% right now. The biggest losses amongst the energy majors right now is Repsol, which is down 2.5%. But again, on the upside, you're seeing gains for travel and leisure. Nexi as well in the tech space is up 4%. And so those are some of the pictures. On the tech space as well, one of the key players around the data center story, Siemens Energy, is also up 2.6%. Some of the individual names showing strength in this Monday session so far. Worth noting, of course, that bond yields have come in as well. So bonds are bid across Europe, and you've seen that reflected in JGBs as well. Yields down in Europe around 3 to 7 basis points on German debt right now. BTPs, Greek debt, and French debt all bid as well.
Yeah, essentially rate-sensitive sectors and oil-sensitive sectors doing quite well today. Joining us for some more analysis is Monica Defont, the head of the Amundi Investment Institute. Monica, earlier on in the show, we were talking about how investors should be reading not necessarily the breakthrough in U.S.-Iran, but at least hopes of a breakthrough when it comes to U.S. and Iran. Is the reaction that we're seeing in European markets this morning valid, to your point?
Well, you know, it remains really hunkered on this potential deal to be delivered. But if we take a step back, I would say that in general, we are really facing a new regime, which is a low-trust world regime where geopolitics is really structural and entrenched in the way we are approaching macro and markets. So in a nutshell, we really need to be ready to a sequence of shocks to be in the pipe.
Is there any way the expected slowdown in Europe can be avoided, assuming the strait fully does reopen in the next 30 to 60 days?
For sure, Europe is one of the most vulnerable regions because of its energy dependency and not only, because what we are seeing is a general increase of shipping costs, insurance costs. So definitely, we remain vulnerable. According to us, the only way we can proceed is to make scenario analysis. And in our base case, what we are assuming is a progressive normalization starting from June. And with this in mind, definitely we still have high inflation and growth that is flirting around zero. With that, what we think is still in an opportunity for Europe is to leverage on the productivity implementation due to the AI. For example, automation, industrial, for example, is a sector that can really benefit the euro area, pharma, healthcare. So probably it's not a beta call we are making on Europe, but one of selectivity.
Okay, one of selectivity. And talking of selectivity, Monica, good morning. I'm just going to reference for you and our viewers as well that Delivery Hero, that stock in Germany is up a little over 10% right now as Uber ups its bid for that company. Of course, they already have a significant stake, and now they are pushing to take over Delivery Hero, at least raise their stake. And that is lifting the stock pretty significantly then, up double digits so far in the session. Monica, that takes me to a broader question about valuations in Europe and whether we see more interest from US investors and US companies looking potentially at that valuation gap and opportunities to buy assets in the European markets. Is this a signal potentially of more to come?
Well, definitely valuation has been one of the key variables making us interested and invested in Europe, including also the story on higher dividend yield. So definitely those are two aspects that in general is benefiting the European equity market. But again, I think that you really need to focus on those stories that seems to be, more structural rather than just pinching what today might be cheaper. Staying on structural thematics is really the way you need to look at the markets in a low trust world. And then when it goes to regional allocation, again, the story in Europe is quite heterogeneous. And there are some countries that are more vulnerable than others, and some that shows a more appealing valuation gap. With that in mind, it is true that the concentration and valuation story in the United States is going to an extreme.
It's going to an extreme. Is that leading to a recalculation amongst clients that you speak to in terms of flows? Europe versus the US, that dynamic has shifted significantly. At the start of the year, the focus had been on those, and towards the end of last year, flows into European equities. That seems to have adjusted. Where are we in terms of the flow show then that you're hearing from clients?
Well, if I hear our clients, they're actually asking more about Europe, how the European area is working. It's not totally clear. For example, across Asia, how does the Council, the Parliament, the UK, all these work together in the euro area? So we are starting to the basics, but we see really a material interest in the area that is not only related to a valuation appeal, but stays more on credibility and consistency of the institutions. And this is what investors are looking at, given the high level of uncertainty, this permanent uncertainty that is entrenched in the macro environment. So looking for institutions' stability and credibility is what probably is getting traction across our clients.
Yeah, Monica, how are you feeling about the European banking sector? Interesting today that some of the best performing stocks on the Stock 600 and Stock 50 are actually some of the banking stocks, UniCredit, about Santander, all up more than 2.5%, despite the fact that interest rates are moving lower. We're seeing a rally in bonds today. How do you feel about the sector?
Well, in general, this is a sector we have been positioning and looking at in a constructive way. If you look at fundamentals and the operational model, they are good. And in general, relative to the U.S. banking sector, this is something that we have been positioning on, and probably we will continue.
I'm noticing as well, Monica, you have a negative view on the dollar. you have a negative view on the euro and the pound, a neutral view on the dollar. Talk us through that negative view on euro. Is that a growth story concern, or is it that the markets are overestimating how far and how fast the ECB will go on rate hikes?
I think that the right answer would be framing in the correct time horizon. Over the medium to long term, actually, we believe the US dollar is going to weaken unless the Fed turns and hikes rates. So this would be clearly changing the overall narrative. What we have seen so far, and honestly, the US dollar versus the euro has been moving in a narrow range. It was really more opportunistically related to the vulnerability of the region, to the current geopolitical situation. But our medium to long term call is still that the US dollar is going to get weaker, and it will be less central to the allocation of our portfolios.
Okay, interesting on that medium to longer term view on the US dollar and the greenback getting weaker into the future. Monica Defon, head of the Amundi Investment Institute. The dollar is certainly down in the session today. At least that's the short-term take, of course, on the dollar reaction to the optimism coming through in terms of talks between Iran and the US and that potential deal. Let's check in on the core six right now. Core European stocks, of course, and the moves that we're seeing. Standing out to me right now is Schneider Electric, so that provider of solutions to data centres, up 2%. On the downside, not much to write home about. Rheinmetall is flat, just down very, very insignificantly. Nestlé, of course, with that touch on the global consumer, but of course having to factor in global food prices and the inflation touch there. Nestlé is currently flat. So decent gains coming through for Schneider Electric. ASML, interestingly, on the back of the news around Huawei and its developments there, ASML is up 1%. UBS put out a note towards the end of last week with a very positive view on that stock. LVMH also gaining 0.8%, and Novo Nordisk in the healthcare space up a little over 4 points, close to 5 points, Romana.
Yeah, and the one stock that we've been watching in corporate space this morning, Delivery Hero, up substantially today, up 10%, 9.9% is the latest, and you can see trading just shy of 37 euros. That is a premium to the first approach from Uber, valued at around 33 euros per share. And as we've been talking about over the weekend, it has emerged that somewhat of a bidding war has come through between Uber and DoorDash for Delivery Hero. Uber already have a 20% stake in the company, and around a little bit more if you account in derivatives, so around 5.6%. So reminiscent, really, of the position that UniCredit started to build up in Commerce Banks. We have another one of those stories, but potentially you are seeing perhaps an upped bid, which is why this is being reflected in where it's trading today.
Anna Jeffrey saying there are also a lot of antitrust issues at the European level. Let's take a look at the oil majors then, in terms of what's happening in response to lower oil prices. So you're seeing Repsol in Spain currently down 3%. So under pressure, obviously, as a result of lower oil prices. That ties into the developments in the Middle East. Shell down close to 2%. Total Energy as well. We don't have a read, of course, on BP because the FTSE's closed. But that is the broad move lower in terms of some of those oil and energy companies on the back of Brent and WTI down in the session.
Bit of a breather for some of those key energy names. But coming up, we're going to be talking about airline stocks, which are actually, no surprise, getting a lift as oil prices fall on hopes of an end to the Iran war. Details next. This is Bloomberg.
season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
What happened was you were out. When it matters, investors turn to Bloomberg surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg surveillance. We're talking about it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets. So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East. The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics.
Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Well, Lufthansa is leading airline and travel stocks higher this morning. It comes as crude oil hit its lowest level in more than 2 weeks. On optimism, the war in Iran could be coming to an end soon. Let's bring in Danny Lee, our aviation and transport reporter. And of course, many stocks are actually closed for trade because of the UK bank holiday. But ultimately, we walked in this morning, oil prices are lower. Clearly, that's a bit of a boon to the airline industry. How long is it going to take, Danny, for these, months-long disruption to unwind in the industry?
Well, I think the immediate term is this positivity around this potential ceasefire, this 60-day extension. Of course, when it comes to the real-world supply chain, the nuts and bolts of getting, for example, jet fuel through, processed from oil to refined, it's going to take still some time, months, but I think there has been a quietening down of the worries of jet fuel shortages in the likes of Europe and in Asia to an extent. So with this positivity around this potential ceasefire and this reopening of the Strait of Hormuz, that has helped really lift airline stocks. Basically, every stock tracked by Bloomberg of every airline that's publicly traded is all up today. It's unsurprising. You've seen oil fall by as much as 6% on Brent to $97, West Texas down to 91. So there is a lot of lift here for the airline industry. But we have been here before. There's these potential deals, and it does remain to be seen if something like this does stick this time. So as indeed today and later into this week, as Marco Rubio said, watching very closely for if there is going to be some kind of framework at least to settle this ceasefire.
OK, Bloomberg's Asia aviation and transport reporter Danny Lee. Danny, thank you for that update on the airlines industry. Staying with that story, at least with that sector and the aerospace industry, the dramatic turnaround at Rolls-Royce. under Tufan Erginbilic is seen as one of the great corporate overhauls in recent times. On the latest episode of Leaders with Lacqua, Francine asked him if he feels like he's carrying the weight of British industry when so many companies have spoken about exploring a listing in the US.
Yes, sometimes, because I think there's this discussions whether companies should move to the US market. I'm sure, Francine, you asked those questions. So actually demonstrating that you can be in this market. And frankly, after a point, it is never about you. You don't want to fail all the stakeholders, employees, investors, even government. Once you pass a stage, right? Okay, you have a success. Now, make sure that is sustainable success and actually you can build on it.
What can other British companies learn from Rolls-Royce?
I mean, a lot. But business model level, are they actually set up to win? If not, fix the business model. And you do that, then of course you need to energize your employees. It's not about you. It is about 50,000 people. I am non-compromising for that. You may say blunt or whatever, but non-compromising. Mediocrity at that level kills the organizations, but also good people, then you need to develop them and have a great career in this.
How do you manage good people? What do they want?
Effectively, you want people in your organization who are highly marketable, but they want to stay with you, right?
Right.
So that's what you want.
That's a secret sauce.
Exactly.
Right.
That's what you want, right? That is almost 360 performance management in my mind. And 360 performance management always, if you want to close the circle, it finishes with reward and recognition. And then grow the company, because that creates all sorts of career opportunities. Shrinking companies, you have less opportunities. Grow the company, that actually feeds itself.
Right. I mean, every time I see you, we speak about small nuclear reactors.
Yes.
Because you it's not a 360 view. It's a very granular, it's almost problem solving. It's engineering.
I always go to big picture before I come to small picture. Europe cannot do without it. World needs it for net zero. Frankly, Europe needs it for supply security, full stop. Because even before geopolitics, Europe needed that. After some geopolitical events, frankly, Europe needs it more than that. So therefore, SMRs make sense at big picture because they are less risky, because smaller plants and manufacturing activity. Nuclear industry has a bad sort of experience with projects. They take longer, much more expensive. SMR, 85% manufacturing process. You learn. You learn, and it is modular, it is standard, rather than every nuclear project, bespoke EPC project in a way, right?
Anything could happen in the world of politics, as we've seen.
Yes.
Right. How do you deal with politics, with events outside your events? And even here, you could see a change in government with reform coming into power.
Yeah. I have a principle in business. I always tell people, once you get into trouble, it is too late. So you need to prepare the company before you get into trouble. So what does that mean? Like, we are actually living with it as we speak, and we last year we lived with tariff. But first of all, make the company very resilient. That was our drive. We did that. So external shocks, we actually deal with it a lot better. Mindset is more important than anything else. You need to have the mindset and the response capability in the company. You need to develop that before you are in trouble, because it takes some time, right? And then you need to be agile using that capability. And then last thing you are going to do, you are going to be action-oriented, not explanation-oriented.
But if you don't know what the trouble is, are you scenario planning for all the things that could change?
It's not about actually predicting the world. It is about how your company now thinks about dealing with external shocks, right? So that is the capability, the processes, the mindset. Like, we are now responding to current shocks. I can assure you, we couldn't do half of what we are doing 3 years ago. Probably 10%. Probably when I said something, people would look at me with blank eyes. What is he talking about? Today, I don't need to say a lot. I need to give the context, and people are in action.
And the full interview has a global release on Bloomberg TV later today at 10 p.m. UK time. All right, let's get a look on how markets are faring. We're about half an hour into the trading session. Of course, it is a UK bank holiday, but European markets are open, and the picture is positive. As you can see, Stoxx 600 is up 0.6%. We've got the DAX, the German index, up about 1%. The CAC 40 in France up a similar amount, but no surprise given the fall in the price of oil. We are seeing a decent outperformance in the airline industry. Autos also having good starts to the day. Construction as well. So a lot of the cyclicals within the European index are having a good start to the day and to the week, Tom.
OK, coming up, the Standard Chartered CEO's apology for his controversial comments on AI have failed to reassure labour bodies. We're going to discuss the future of work with Elena Simple, Professor of Computer Science at King's College London. That is next. This is Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at the front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the opening trade. We are 30 minutes into today's session. Happy Monday, everyone. European stocks on the front foot on the back of expectations that maybe there will be a deal between the US and Iran. European futures then pointing, or at least European markets, are up 0.6%. The futures have been pointing to a slightly brighter session. Nonetheless, you do see those gains across the benchmark of 0.6%. On the sector-by-sector basis, just two sectors the last time I looked in negative territory. On the upside, you've got the likes of autos, construction, travel and leisure. So the auto sector is certainly lifting the DAX. That index over in Germany is up a full 1%. And you're seeing a similar picture over in France. The CAC 40 is up 86 points currently, up more than 1%. The UK, of course, closed for a bank holiday. Jemana, what are you looking at?
Yeah, well, here's what else you need to know this morning. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz, even as President Donald Trump insisted he would not rush into an agreement. Speaking in India, U.S. Secretary of State Marco Rubio said a deal may be reached today. Oil has fallen on increased optimism that an end to the war is in sight. The cause of an explosion at a mine in China's Shanxi province is under investigation. At least 82 people were killed in the blast on Friday. The accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from President Xi Jinping and senior officials. State media say early investigations suggest serious violations at the privately run mine. Shares and Delivery Hero have surged above a 10 billion euro takeover offer by Uber as investors bet that a higher price will be required to close a deal. Uber's proposal offers no premium to the closing price Thursday, the day before Bloomberg News first reported the talks. Sources say DoorDash has expressed interest in Delivery Hero's Middle East business known as Talabat, but has yet to put in an offer.
Now, the chief executive of Standard Chartered spent much of last week, you may remember, doing damage control after he aired plans to replace some, quote, lower value human capital with AI. Despite a subsequent apology from Bill Winters, union leaders argue the comments expose a broader, worrying trend of banks treating workers as disposable cost-cutting targets. For more, we are joined by Eleanor Simple, Professor of Computer Science at King's College London. Eleanor, good morning. Thank you for joining us.
Good morning. Thanks
Was
for
Bill
having
Winters simply saying the quiet part out loud with his comments? He's just pointing to a reality. Some workers, particularly in the banking space, will be replaced by AI. Is that one way that we could look at his comments?
It's one way to look at it, though a lot of the conversation has focused on the rather clumsy choice of words, and it's great that the CEO has apologized for that. Research at King's College London has shown that the financial sector is highly exposed to disruption from AI. So it's great that they are looking at this problem and are trying to address it. For me, what's more important is the question of productivity. How is productivity measured? Where do productivity gains go? We've done a public attitude survey recently in April, surveying both employers and workers. And we see lots of differences there when it comes to how employers see productivity and whether they've noticed any happening as they've introduced AI versus how workers perceive how their jobs on a day-to-day basis have changed. There is a huge discrepancy between how employers see AI and what they expect it to do to the daily jobs of their workers, and the marginal improvements or changes that workers see when they use AI.
OK, so to be clear, there's an expectation from executives and corporate leaders that they're going to be able to drive more efficiencies than maybe they're their teams are actually seeing. So there's a gap in terms of expectations versus reality.
Exactly. So you have the dashboards and the KPIs on one side. You have employers telling us that they feel pressure from investors, from shareholders, from senior management to introduce AI into the workforce. But actually what we're also seeing is that people are just putting AI buttons on every tool rather than thinking on how to redesign perhaps work or organizations.
Have you done any work on AI taxes? And I know there's increasing talk about the potential to tax companies that lean more and more on artificial intelligence tools. But then you also have to think about the societal ramifications. If, to Tom's point, you are going to see displacement of a huge number of jobs, should there be some form of an institutionalized redistribution of wealth?
So I'm a computer scientist. I'm not going to talk about tax. But in the public attitude survey we have done, we have seen several trends, which I think are interesting. Both employers and workers and the general public seem to be very worried about the potential economic impact of AI. Close to a third of the public think that if this displacement happens too fast, we will see civil unrest. And both employers and workers seem to agree that the benefits from using AI in organizations is going to go mostly to big companies and shareholders rather than more widely to the society, as you were saying. So you have this distributional anxiety, and when people feel that the system is not working for them, you will have civil unrest potentially.
So what do you think are some of the key factors that governments need to think about when thinking and considering building a framework, guardrails around the rollout of artificial intelligence?
Yeah, so the public is telling us that they expect government to do something. And that something could be slowing down on innovation for them to have time to retrain or be more prepared for what is happening with AI in the workforce. From my own research, government should also consider using AI in public services in things that really matter and measuring and monitoring the impacts of AI more widely. Employers in the surveys were worried and have experienced issues with AI in terms of biases, in terms of outcomes, in terms of accuracy. Now imagine if AI is used to decide whether you're getting cancer treatment or whether your benefits are going to be lifted. You really want to make sure that when AI is used in these types of situations, that the government is looking out for its citizens and they are purchasing the technology that is doing the right thing and is doing things fairly for society.
With your computer scientist hat on, in this moment where, when I speak to tech executives, they're talking about this pivot moment in terms of agentic use, they're talking about token use, being driven to consume as many tokens as possible, they're talking about the focus on inference versus training maybe. With that computer scientist hat on, which jobs in this new world order are most vulnerable? What is your current assessment? I know it's a question that evolves and it's an answer that evolves, but what is your current take as you have your finger on the pulse of this technology?
I think it's a very interesting question because and the truthful answer is we don't know yet. I mean, we see some trends, but I think we lack a bit of imagination at the moment. We're in this moment where just like when the electric engine was introduced, all we're doing is trying to replace the steam engine with something a bit more powerful. Instead, what we should be doing is thinking about new products, new ways of doing things with AI, and we haven't done much of that yet. I think at the moment we may be building the wrong AI products, and we're also we're not building them in the right way or in the optimal way. Because, for instance, one thing we've seen in the survey is that there is a huge gender gap between how men and women, whether that's workers, students, parents, how they see and perceive AI and how they use them, how they engage with it. So if half the workforce is not engaging as much with the technology that we think is going to be disruptive, then what does that tell us about the type of AI tooling and capabilities that we have? Now, going back to what you were saying about inference, costs really matter. Now, a lot of the conversation is driven by consumer AI. by chatbots that everyone is using on a daily basis, as well as these types of AI buttons that I've been mentioning. It's good that people are experimenting. I think we're in an experimentation phase, but I think we need to do more work, more research as well, to understand what should we rely on people to do, right? So what is human judgment really useful for, most valuable for? What does this mean in terms of how do I design my work? If I think about what I'm doing on a day-to-day basis, yes, there will be some routine jobs like data entry, doing expenses, that are prone to automation. We all want our doctors and our social cares to spend less time writing minutes and summarizing notes and filling out forms, right? But what we also want is for teams to still be able to work together. We want for our reports and our research to be accurate. We want people to trust what experts tell them, or for people to trust institutions and the public services they engage with.
Yeah. Elena, fascinating discussion. Thank you so much for joining us today. Elena Simperi, Professor of Computer Science at King's College London. Now, coming up, the U.S. and Iran continue to work on a deal to reopen
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost
Arabia, the UAE, all pressured the Trump administration to take the diplomatic route, to take a peace deal and not to risk restarting attacks to the region that could affect infrastructure, that could result in Iranian counterattacks. So I think with all of that in mind and weighing the entire situation, I think that's why we're seeing a bit of a sell-off today, because perhaps we're closer to a deal than a resumption of that conflict that we saw that was quite harsh in March.
Stephen, is there also not a reaction today to the Iranian news agency also saying that 33 vessels, including oil tankers, container ships, and other commercial craft, actually did successfully sail through the strait? 33, I believe, is the highest number since the war began over 3 months ago. So the market has to account for this resumption of sorts, of a slow trickling through of some of those vessels.
I mean, certainly this is something that the market is watching on a daily basis, right? My colleagues and myself, we're watching these ships, we're writing about it daily. It is something that is clearly on the minds of the traders. Yes, that is an increase in ships, 33. You have to remember, though, that before the war began, we were 135 on a daily basis. So an increase from essentially zero is certainly positive. And you don't just have to take Iran's word for it. You know, let's look at liquefied natural gas, a small slice of the energy market that I'm particularly obsessed with. When you look at LNG, just in the last about 24 to 48 hours, 3 LNG ships from Qatar and the UAE ADNOC's Das Island LNG export facility both went through Hormuz from Sunday into Monday. 3 vessels. While normally it would be 3 vessels every day before the war began, there have only been 4 other vessels before just the last 24 to 48 hours. So you're already seeing a ratcheting up, at least in the very short term, of LNG, which is somewhat positive. So does this mean that Iran is loosening their grip? Does it mean that some companies are paying? Are they making some sort of agreement like we saw with the Pakistan government when they were able to get their LNG shipments? They were able to make some sort of deal with Tehran to get Qatari LNG. I'm not exactly, it's unclear exactly how it's happening. But you're right. There is indication that flows are increasing at least a little bit.
Stephen, thank you for the update. Stephen Stepczynski, with a particular focus, of course, on what's happening in gas and oil. Falling oil prices, meanwhile, of course, sending stocks higher this morning. The Stock 600 index gaining for a 6th straight session. In Asia, Japan's Nikkei reaching a fresh record high, while Japanese government bonds have rallied. Let's bring in Ven Ram, our strategist from our Markets Live team, for the latest in terms of the market reaction. Ven, I want to start more broadly on the global bond rally that we're seeing, at least in the session today, and we're seeing that reflected in European sovereign debt as well. How far could this run? How much further could yields fall?
Well, I think that, there's going to be much of the relief is going to come for the long end, because I think duration has gotten massively sold off in the past few days, Tom. So I think that, this could mean about, mind you, bonds, long-dated bonds that have already started rallying. So there's much ground they've covered. So, but I think that this could go another 15 to 20 basis points on the 30-year, specifically in Germany and in the US. I think in the UK there is scope for gains as well, but political uncertainty is going to hold back investors a bit.
Mm-hmm. And what is the drop in the price of oil due to central bank expectations? You look at the Eurozone, the ECB is priced about 20 basis points for a June hike. You've got similar priced in for the Bank of Japan, less so for the UK. But I just wonder whether we also are bound to see a reaction in the front end of the yield curve as well on back of the lower oil prices.
Absolutely, Jumana. When it opens tomorrow, I think we'll see a reaction. I think that, the question is whether oil prices have been higher for long enough. Since the start of the war, we have Brent crude has averaged more than $100 a barrel. So I think that, there is a chance that the ECB may decide to push through with a hike, even if it be the first and the last in June. But I think it gets far more interesting with the Bank of England, which you mentioned. I think that the markets are thinking that, look, they will do about 2 rate hikes by the end of the year, but I think that the markets are kind of overpricing that prospect. I think that the Bank of England is unlikely to go more than 1 rate hike, if at all they do. And if there are signs that, the war is going to come to a decisive end and the traffic is going to reopen, I think the Bank of England may not at all. In fact, we had Alan Taylor saying last week that not raising rates is tightening enough because they were meant to go the other way. So I think that, we could get one rate hike from the ECB, none at all from the Bank of England and the Bank of Japan. I think they just need to hike rates desperately here.
Okay, Ven, thank you. As ever, Ven Ram, cross-asset strategist at Bloomberg MLive, with how the central banks may respond to what is happening, Jumana. As we look at still positivity across the global equity space, we saw Japanese equities at record highs, and here in Europe, gains as well across the benchmark of 0.7%. Just two sectors in negative territory, broadly risk on as we watch the Middle East.
Yeah, and let's go back to the cause of the rally today, and that is expectations of a breakthrough. We are hearing now from the foreign ministry spokesperson of Iran, and he's saying, yes, there has been a lot of progress on many issues with the U.S., but an agreement is not imminent. And this comes back to what we've been discussing over the course of the last couple of hours. Do you actually need to see a breakthrough for these markets to keep rallying, or is the hope of a breakthrough enough to keep the rally going? And I guess we'll get an answer to that in the coming days.
Currently, you're seeing the bond markets rallying, as we've been discussing, US futures as well, when the US markets reopen after Memorial Day. After some decent gains, of course, last week, not just for European stocks, but US stocks as well. US futures pointing hard, and the S&P even is by 0.9%. Yeah,
geopolitical concerns on the back burner for now.
That is it for the opening trade. We'll be back with you tomorrow, of course. The Pulse is up next with Francine Lacroix. Stay with us. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show. We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
By the way, your show is incredible.
Bloomberg Surveillance. We're talking about it.
Well, Brent crude falls below $100 a barrel as the U.S. says there has been progress with Iran. Secretary of State Marco Rubio says there could be a deal as soon as today, but Iran says an agreement is not imminent. The political crisis in Turkey deepens as police raid the headquarters of the main opposition party to evict its ousted leader. Plus, Huawei says it's made a breakthrough in making advanced semiconductors without cutting-edge equipment, potentially reducing the gap with TSMC. So there is a lot going on at the same time. It's also a bank holiday, not only here, but in the U.S. with Memorial Day and many, many countries in Europe. So global stocks are approaching record highs, although in terms of volumes today, we're pretty thin with a lot of indices closed. Crude oil falling after officials seem to signal the U.S. is nearing a deal with Iran to reopen the Strait of Hormuz and restore oil flows. And then the last 15 minutes or so, there are very many question marks about that as well. So I'm looking at gold, I'm looking at silver as a hedge against inflation, and gold 4,563.61. Let's take a look at the European markets map again. A lot of them are closed, so we can go pretty quickly to exactly what will happen in the next couple of days. You can see the DAX and actually the FTSE MIB in Italy is gaining a touch. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, senior U.S. officials say they're closing in on a deal with Iran that would reopen the Strait of Hormuz. But in the last few minutes, we've also had conflicting reports from Iran and the state of negotiation. Let's get more from Bloomberg's Jumana Bersetchi, who joins me here on set. Jumana, what have we heard from Iran?
Yeah, well, let me just walk through the developments of the weekend, just in terms of how much optimism there was on Saturday, with President Trump posting on Truth Social saying that they were very close to an agreement, dialing some of that back yesterday and suggesting that the U.S. are not in a rush to get a deal across the line. Marco Rubio this morning, Secretary of State, obviously he's in India, so in a closer time zone, suggesting that a lot of the differences have been narrowed and that we could see an agreement in coming days. And just in the last couple of minutes, this is the weekly presser that the Iranian foreign minister's spokesperson delivers. He said that a consensus was reached on many topics with the U.S., so that's the positive bit. This is per Tasnim, the Iranian state media reporting. But then Bagai goes on to say an agreement with the U.S. is not imminent. So this has just come through in the last couple of minutes and suggests that there are still a couple of issues, and unknown at this point what those issues are, but we can take a good guess between the two sides, and that it doesn't appear from the Iranian side that they're going to get enough to get the deal across the line imminently. But that's not to say that maybe they can't agree on a framework towards later discussions.
Juman, talk to me a little bit about oil. So selling off this morning because there was a bit of optimism, but actually that can be walked back fairly quickly.
Well, Francine, oil is all about the Straits. And what we understand is in the deal is it's going to be two phases, essentially. It will be an extension of the ceasefire, as we understand, as reported by news outlets. This has not been formally reported, but essentially a 60-day extension of the ceasefire in which the first 30 days maritime issues will be addressed. Maritime issues here clearly referring to the Strait of Hormuz. Per, again, reported outlets over the weekend, we understand that in that time frame, in the first 30 days, Iran would commit to an unconditional reopening of the Straits in exchange for gradual sanctions relief so that they can start selling their oil again, and a potential unfreezing of some of those assets. Now, here again, there's been a bit of discrepancy between the two because Iran are pushing for bigger sanctions relief, more unfreezing of assets. They're estimated to have about 100 billion. The number that's being floated is around 20 to 25. But then, of course, President Trump back home has received a lot of backlash for this because the perception is that the U.S. are giving up too many of their negotiating points at the very first phase of these discussions before you've even started talking about the nuclear file, which is supposed to happen in 30 to 60 days of the ceasefire.
Yeah, that's the concern is actually on both sides. They want things, and it's difficult to see how they come together in such a short amount of time. Jumana, thank you so much. Jumana Bersetchi, anchor of Horizons Middle East and Africa. Now, the European Central Bank is facing pressure to raise rates next month unless the U.S. and Iran come to a sustainable peace deal. President Christine Lagarde also says the central bank is set to lift its inflation outlook when policymakers meet. Well, Marco Valli, Chief European Economist and Global Head of Research at UniCredit, joins us now. Marco, thank you so much for being with us. So what's your main expectations on when the price of oil goes from here?
Yeah, I think there are good chances that the price of oil will stay around the 100 until we get a clear confirmation that the deal is done and the Strait of Hormuz is going to reopen gradually, but start reopening, right? So our baseline scenario is that energy prices will start easing a bit, starting from early summer. As far as I can see, we are still on track with this forecast. But again, I think it will be a gradual decline, right? Because there are so many risks around. And the Middle East, I think, will remain politically more unstable than it was before the war. So my expectation would be that energy prices will start easing by the beginning of the summer, but ultimately they will not fall back to where they were before the conflict anytime soon, because the market will continue to price in, I think, a high geopolitical premium.
Marco, what does this mean in terms of equity valuations and actually the difference between US and Europe?
Yeah, I mean, it's clear that this is an asymmetric shock, right? I mean, the US is a big energy exporter, and they have been hit much less, also because they have a lot of supporting factors. They have a powerful AI capex boom, they have a very expansionary fiscal policy, they have consumers which are still in a reasonably good shape. So we are looking at 2% GDP growth for the US both this year and the next. While Europe, obviously Europe is one of the main losers of this shock, right? We are massive energy importers. We have seen already before the war started, the expectation were for growth to be around 1% this year. Now we're going to be below 1% this year. If everything is going to play out fine, next year is going to be just about 1%. So all in all, we have like a massive underperformance of Europe vis-a-vis the US. And then very strong earnings in the US. Obviously, the AI boom is helping a lot. So my sense is that the shock is actually making the difference and the gap, the transatlantic gap, even bigger. And we see this very well when it comes to earnings expectation. Earnings have been very strong in the US, driven by, obviously, the AI boom. In Europe, things have been playing out a bit less strong. So this is really a shock that hits asymmetrically, and this is widening the transatlantic gap between the US and Europe.
Marco, what are you expecting actually Europe to go from here on end? Are you expecting a rate hike in June from the ECB, and how problematic would that be for growth?
Yeah, I think the ECB June hike is basically a done deal, right? The inflation forecast by the central bank will be raised quite meaningfully. I think for this year we are looking at something around 3%, if not slightly higher, probably around 2.5% for next year. And in the second half of the year, in my forecast, Eurozone inflation will average around 3.5%. So this is not a shock that the ECB can look through, in my view, at least given how they have outlined the reaction function. And by the way, the ECB has been doing a very good job in communicating clearly the reaction function. So my sense is that with these inflation numbers, with growth clearly slowing, but we are not speaking about a recession, June hike is very, very likely. And then where do we go after June? My sense is that the economy will be weathering the shock, the rate shock, quite well, because I think that the rate sensitivity, particularly of firms, over time has come down because firms' balance sheet have strengthened over time, and this allows them to cope better than in the past with higher interest rates. Then if we are right in thinking that energy prices will start easing gradually by the summer, I think that the ECB will probably hike once more in September, but then they could stop.
Yeah.
I mean, the idea here is that they move from the middle part of the neutral range to the upper part of the neutral range without pushing monetary policy in outright restrictive territory.
Marco, talk to me a little bit about what the AI-related investment cycle in the U.S. also means for Europe. Are you seeing more? Are you seeing enough? I know there's $5 billion here and there bidding through, also through the Commission. Can that support European growth meaningfully?
I think it's going to be a factor of resilience, but for now it's still fairly moderate, but it's going to strengthen over time, right? I mean, it's clear that this is a huge technological revolution. It's clear that Europe is lagging behind, but at the same time, Europe obviously doesn't have big hyperscalers, but Europe can do a lot when it comes to adoption, right? And this is where the real challenge for Europe comes. And this is where Europe can actually gain in terms of productivity. This is where Europe actually can deliver. So my view is that yes, the European Commission is trying to make conditions favorable for this adoption to accelerate over time. The ECB, I think, has become more positive about the investment outlook also, if not mainly, because they see that this is just starting and it's going to grow bigger over time. So this is going to provide the cushion to the shock and resilience to the European business cycle. Is that going to be enough to, in a way, close the transatlantic gap with the US? Obviously not, right? But again, when it comes to adopting new technologies, I think that Europe still has a lot of unexpressed potential, and this is definitely going to be a major source of support for productivity, for the investment cycle. Not now, it's going to be gradual now, but over the next 2 to 3 years, that's going to be a major growth driver.
Marco, how much do you worry about the war in Iran actually lasting for the better part of this year? And what does that mean for the European economy?
Yeah, that is a major risk. I mean, if we remain in the current stalemate situation, we cannot expect energy prices to remain unchanged, right? Because strategic reserves are coming down. So the longer the war continues and the longer Hormuz remains closed, the more upward pressure we can expect on energy prices, right? And if this happens, then obviously Europe is going to be hit significantly. What do we mean with that? Probably we are going to be able to avoid outright recession, but growth is going to be very, very weak, both this year and next, well below 1%. And inflation is going to accelerate to a level where the ECB can not just limit itself to bring monetary policy at the upper bound of the neutral territory, but most likely they would have to start hiking into outright restrictive territory, meaning towards 3%, if not higher. And obviously this would put additional downward pressure on economic activity. So let's just hope that we are not going to be getting there, because if we get there, then the transatlantic gap, also in terms of equity valuation, would widen further, and I would expect the dollar to remain well supported in the current environment.
Thank you so much for all of the insight. Marco Valli, there, the chief European economist and head of research at Unicredit. Now, Turkish police have entered the headquarters of the main opposition CHP party in Ankara. This follows a court decision last week that removed Özgür Özel from the party's leadership. Well, Bloomberg's Simin Demokan joins us from Istanbul. Simin, good morning. So what are investors actually watching for as this political drama unfolds?
Yes, hi, Francine. Financial markets and investors here in Turkey will be watching to see if this new political crisis triggers more instability in Turkey's financial markets. Now, of course, they'll be extremely concerned by the scenes that they saw over the weekend when CHP leader Özgür Özel refused to leave the main party's headquarters in Ankara. That's when Turkish riot police stormed the building using tear gas. Özgür Özel finally evacuated the building, but when he did, he tore up the eviction notice and said that he will be back. Now, of course, markets here in Turkey will be closed for most of this week due to a religious holiday. But when they resume trading next week, investors will be watching to see if we see pressure on the lira and Turkey's foreign reserves, as well as whether a further sell-off will be triggered in Turkish assets. Now, of course, this political crisis comes at a very concerning time for Turkey's economy. Since the crisis and conflict in the Middle East, the Turkish central bank has been selling billions of dollars in order to defend the Turkish lira. And this has put a strain on FX reserves. Also, as we see rising energy costs, this has also been fueling Turkish inflation, which is among the highest in the world. It's currently running above 30%. And now some economists are saying that the Turkish central bank could actually raise rates at its next meeting in June. The benchmark rate currently stands at 37%. So this political crisis could trigger instability in the Turkish markets as well. And this is exactly what investors will be watching for. And of course, this political crisis in the CHP party, the divisions, the power struggle, could also help strengthen Turkish President Recep Tayyip Erdogan's grip on power. Of course, he's been heading the country for more than 2 decades. Elections are scheduled for 2028, but they could come even sooner.
Simon, thank you so much. Simon Demirkan there in Istanbul. Now, coming up, the outgoing ECB Governing Council member, Madis Müller, sees a strong case for a June interest rate hike. We'll get more from his interview with us next. And this is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Now, the European Central Bank is set to lift its inflation outlook when policymakers meet next month. That's according to President Christine Lagarde. Her comments confirm what policymakers, including Governing Council member Madis Müller, has signaled in recent days. Well, Müller told us that he sees a strong case for the central bank to lift interest rates next month.
We have the inflation that has picked up already. So in April, we had the headline inflation at 3%. So it's already by a percentage point higher than the 2% that we're targeting, and that of course is a concern. And I think one should be concerned about such inflationary pressures becoming more persistent or more permanent. This is what we saw in 2021-22 when the inflation first picked up, also as a result of energy prices increasing. So I think there's a good case to be made, but that still the ECB at this point needs to react because the inflation is our primary concern.
How much of a concern is the recent bond market sell-off for you? How does that affect the way you think about debt sustainability in the Eurozone? Because this is also something that is happening at the moment.
I think risks to financial stability that are coming from the high public debt levels, also high public deficits still in many countries. I think it is a serious concern, and the fact that investors in bond markets seem to be becoming a little bit more nervous again. Also, that is certainly reflecting the expectations of inflation being a little bit higher than this. I think this is certainly a concern. I think it's also perhaps noteworthy that the views on the bond market versus to the equity market, they seem to differ at the moment because there's still so much optimism apparently in the equity market among investors there, whereas you do see those signs of perhaps more concern in the bond market.
Balanced approach to fiscal and monetary policies at this moment is something that is very important. How do you see all of this playing out, and how much pressure do you think the central banks will be facing now due to what is happening?
Well, the fact that we are seeing quite significant budget deficits in a number of European countries, it's not making it easier to get inflation under control. So that's why the message also from many of us central bankers has been that first of all, having a significant budget deficit by itself is a problem. We need to have a clearer understanding how we get out of it in the coming years. But in the short term, as we see governments thinking of different support measures to ease the impact of the high energy prices on consumers and corporates. So here I think it's important to be just careful with those such measures. Those should really be very short term and very well targeted to be effective, and also not to put too much strain on public finances.
Well, that was the outgoing Estonian Central Bank chief and ECB Governing Council member Madis Müller speaking to us on Friday. Now, strategists are warning that bond yields will stay high even if the Iran war ends soon. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, thank you so much, as always, for joining us. So bonds everywhere have sold off. Is there any place to hide?
Well, there's certainly pockets to hide, Francine. I think that one of them has got to be Germany, because if you look at German inflation, Eurozone inflation, in fact, going into the war, it was pretty well anchored. But of course, with oil prices surging, it's a different story now. But even so, the ECB looks to be more agile than the Fed and the Bank of England in responding, because its reaction function is that much more sensitive, and they will likely be raising rates next month. So I think that, there is a good chance that inflation-adjusted coupons in Germany and in the Eurozone may be intact and more resilient than elsewhere. Certainly the case in Japan, certainly the case in the UK, and probably so in the US as well. So I think that, if you swap out all the coupons on German bonds into US dollar, what you see is that German bonds are trading at a premium to US treasuries. And I think that premium is very well founded. That premium is in the order of 15 to 30 basis points. And I think that is sustainable. And I think that therefore German bonds are the place to be, especially over the long duration.
So, Ven, Japanese bonds, as you say, are one of the things that we're really watching out for. Is the rally sustainable?
I don't think so, Francine, because even going into the war, the neutral rate was something like 1.5%. The Bank of Japan is obviously lagging behind it. They're not even at 1% now, so they're lagging behind a whole lot. But if you run the Taylor rule rate after the start of the war, and using the metrics that the Bank of Japan themselves have provided, I think that what you get is a prescribed rate of 2.8 to 3%. That's a very conservative estimate. So we are nowhere near 2.8%, which is why we have seen the repeated tantrums in the JGB market. Okay, today they've got a respite because of the headlines surrounding Iran, but the damage to inflation is done. And as long as the damage to inflation continues, I think that JGBs will trade at a significant discount to treasuries and to gilts. They are the most discounted securities among Germany, UK, and the US as well.
When gilts have been hit particularly hard, is there going to be any respite for them?
Well, I think that there is a sound case to be invested in long duration gilts, Francine, particularly the 30-year. We were doing 575. We've come off those levels already, suggesting that some investors are finding the yields attractive. I don't think there's going to be too much of a case for a rally on a tactical short-term basis, because we don't know how the political drama in Downing Street is going to play out before the end of June, possibly until July. But after that, if the storm blows over, I think there is a case to be invested in 30-year gilts, because net of inflation, net of the fiscal deficit outlook, you're getting adequately compensated. And I think that discount will narrow in gilts. So there is a case to be long 30-year gilts, I think.
Thank you so much, Ven. Ven Ram, cross-asset strategist at Bloomberg Ab Live. I read every morning what Ven has to say. Coming up, life science investment firm Braidwell has made AI a centerpiece of its investment strategy. We'll speak to the company's chief investment officer, Alex Carnell. That's coming up next, and this is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Brent crude falls below $100 a barrel as the U.S. says there's been progress with Iran. Well, the Secretary of State, Marco Rubio, says there could be a deal as soon as today, but Iran says an agreement is not imminent. The political crisis in Turkey deepens as police raid the headquarters of the main opposition party to evict its ousted leader. Plus, Huawei says it's made a breakthrough in making advanced semiconductors without cutting-edge equipment, potentially reducing the gap with TSMC. So Huawei is hailing a new pathway to shorten its 5-year gap with chip-making industry leader TSMC. If successful, it will allow Huawei to make advanced semiconductors without cutting-edge equipment. Well, opening trade anchor Tom McKenzie joins me now. Thank you, Tom, for joining us. So how does Huawei actually plan to achieve this?
Well, this is potentially significant not just for Huawei and for China, but for the global chip ecosystem, if indeed they can get to where they want to be. And what they've said is they've come up with a new process, a new scaling law, but also a new system to build additional transistors onto a chip and to make the transmission between those transistors much faster. And they're calling this process logic folding. That's how they've termed it. Basically, and the shortcut to this is they've come up, they say, with a new approach that will shorten the amount of time and shorten the gap that currently exists between the leading foundry, TSMC, and Huawei, and its partner in China, SMIC or SMIC, which is a foundry with whom they partner. We had expected the gap. The gap currently is about 5 years, maybe about 5 years plus for the most cutting-edge chips. What Huawei is saying is that they can close that gap and potentially start producing 1.4 nanometer chips as soon as 2031. TSMC says they'll be doing that in 2028. So they've shortened the gap if indeed they are able to do this, 1.4 nanometers being the next iteration, the most sophisticated and cutting-edge semiconductors.
So, Tom, what does it mean for other chip makers?
Well, front and centre is ASML, the provider of these lithography machines into TSMC's foundries, and because of export restrictions, they're not able to sell the top range into the Chinese market, these extreme ultraviolet lithography machines, and that's why Huawei and SMIC have been trying to find workarounds because they do not have access to those cutting edge and that cutting edge kit. So ASML potentially is in focus because if others work out how Huawei is doing this, maybe there's some competitive threat to a company that dominates in terms of the production of this kit. In the markets today, not largely affected by this news, ASML. For other chip providers, it's maybe an example that the semiconductor industry is having to think round some of these restrictions and how to think about continuing scaling laws, continuing to get ever more energy efficient, ever more high-power chips into smaller and smaller space, and what some of the alternative approaches may be. Highly technical, but potentially Huawei is signalling that there are other ways of doing this.
So, Tom, what does it mean for, or how have the markets been reacting to this?
Yeah, I mean, so far, the last time I checked, a couple of the European chip makers were a little softer. I don't know if that's on this news specifically. ASML was actually, the last time I checked, was actually in positive territory. That may be more about the market sentiment today and the relief that we're seeing across global equities. I think what is going to be crucial, the test, is to what extent Huawei are able, if they do have this technological workaround, they're able to actually produce chips at scale and quality. Do they have the quality and do they have the scale? Because that's what TSMC, in partnership with ASML and other producers of tech equipment, are able to do, is produce these very, very sophisticated chips, but at a massive scale and consistently getting the quality. And that's very, very difficult to do. So that's going to be a key test of Huawei and its partner, SMIC.
Tom, thank you so much for joining us. Tom McKenzie, their anchor of, opening trade anchor. Now, Braidwell, a life science-based investment firm, has made AI a centerpiece of its investment strategy. Since its founding in 2021, Braidwell has backed early-stage AI biology companies, including Leela Sciences and Proxima. Joining us now is Alex Carnell, the company's co-founder and chief investment officer. Alex, thank you so much for joining us. I know you're waking up very early for this, and we're interested in finding out, actually, if you look at the current landscape for biotech investment in general, how's it changed over the last 3 years, and what do you expect? How do you expect it changing going forward?
Thanks so much, Francine. It's great to be here with you. It's radically different, I'd say, today and even in our portfolio than it was a decade ago. 10 years ago, most of the companies that we were looking at were so limited by the types of problems that they could solve, how long it would take, and how much capital was required to do it. And today, AI is allowing us to solve a set of healthcare problems that we simply couldn't solve before. And I'll give you a couple examples, both of what it looks like today and what that might mean over the future. Today, on the discovery front, what AI won't allow us to do is to solve all of disease in the next decade, but what it will allow us to do is go from a model insight to a molecule in just months' time. And that allows us to have a generational shift in productivity and at the foundational layer of what it takes to actually transform human health. Second, on the diagnostics front, it's radical what can be done in terms of using AI to synthesize complex biological and clinical data. And we have companies like Guardant Health that's using it to detect cancer from a simple blood draw, and Caris that's using it to match patients to medicines that can likely work for their tumors. But the third area, and this is one coming down the road, is the area that excites me most. What I would say is that most people tend to underestimate the risk they face from chronic disease and overestimate just how hard it is to crush it. And I think for the first time, we're going to see that AI can change both of those areas. We have a company in our portfolio doing exactly that. They're fighting to end heart attacks, strokes, diabetes, and obesity with a few simple personalized actions.
So, Alex, I mean, when you talk about the advances in when you talk about advancement in chronic disease treatment, is this GLP-1s? Is it something else? And again, are we just at the forefront of the user case?
Yeah, you nailed it. So GLP-1s are a foundational medicine in terms of not just reducing our risk of diabetes and obesity, but really a wide aperture of places by which they can help us. We're seeing really interesting signals in everything from slowing the progression of tumors to helping protect us from addictions like drugs and alcohol. But I think it's only one of the key layers. And when we think about what an optimal health stack would look like and how those would come together, I think one of the medicines people don't appreciate most is what's called a PCSK9 inhibitor. And here, what I think people tend to miss is that heart disease claims more lives per year than cancer. And we already have all of the medicines available to help protect us from that, to essentially bring that risk down to under 5%. And we need the tools that come from AI to help us both know what to do and then how to take action on it.
Yeah. And so, Alex, when you look at, for example, AI, right, and how it's reshaping, drug discovery, as you said, how it's reshaping development, but also care delivery. Out of those three, where do you expect the biggest impact in the shorter amount of time, thanks to AI?
Yeah, I think it's going to be first in the care delivery side. When you think about how challenging it is for a doctor today to be able to see the sheer volume of patients that they need to take care of and be able to stay on top of all of the clinical data that's on the cutting edge, is a really complicated challenge. And so what it does is it creates the opportunity for new tools to emerge that both enable them to communicate better with their patients, to help all of us understand what actions to take, and then make it as easy as a single click to be able to get those medicines, something as similar and as easy as getting toothpaste from Amazon.
Or what does that mean going forward? So when you look at, key investments or more opportunities, does it change the way you think about the kind of the patient to doctor relationship going forward?
Yeah, the future is going to be all about patient back. When we think about the world we live in today, most of us are losing out on the opportunity to live about 5 years longer than we otherwise could. And so the type of investments that are going to be the most attractive in this next period of time are going to be all of those that start from the patient and make it easier for them to know what to do, how to do, and actually go and do it.
What does that mean going forward, Alex? Where are you most interested in investing in? If you look at some of your key investments in the last 5 years, how different will they be going forward?
Yeah, I think going forward, they're going to be a lot different, because today, if those ideas aren't grounded from an AI native perspective, those are companies that are going to be at a material disadvantage. That's going to manifest itself in terms of the speed at which they can go to discover new medicines, the probability of success that they will have, and then ultimately the impact that they can have on human health. And so what it does is it really opens up the aperture for companies to be able to solve problems that we couldn't before. And working at those companies that are solving the problems that we haven't yet solved, I think is going to ultimately yield the highest rates of return and the greatest impact on human health.
Alex, is there something that actually investors are missing? I know you look for opportunities where others don't see it, but with the speed of change, is there, I don't know whether there's a dislocation in your space, in the health science space, or something else that investors should be watching out for?
Yeah, look, I think one of the biggest areas that people could be missing out on is that we're going to start to enter a world where intelligence is becoming commodity. It's going to be something that's more of a given than it has been historically. So how does that manifest itself in terms of impact? You take, for example, Lila Sciences, which you mentioned earlier. We're starting to see scaling laws to scientific intelligence. And so you can imagine if scientists everywhere have that as a co-pilot that sits right alongside them to solve some of the most complicated problems facing humankind, it will enable them ultimately to be able to do that with a much more rapid pace, a much higher probability of success, and be able to crack a series of codes that we haven't been able to before. And so that's exciting because you go through different periods of time in innovation where a lot of that innovation looks like slight improvements on what came before. And I think we're going to enter a world now where we're going to go after the problems that haven't yet been solved, and we'll be able to do so much faster with much less capital and a much higher probability of success. And that often yields some of the greatest returns and should bring a lot of capital back into our space.
Is there a space, and we've talked a little bit about nutrition, exercise, testing, but also, preventative medicine, for example, for chronic diseases. Within all of that, is there a space that you think will be particularly lucrative in the U.S.?
Absolutely. When you think about what's going on, the sort of two mega trends we see in the U.S. right now, both is that AI is becoming our front door to healthcare, because we trust it with everything from our emails to asking, hey, what does this signal mean on a blood test? And at the same time, the current $100 billion revolution we're seeing in GLP-1 medicines, to me, is most exciting, because what it's essentially showing us is that people are voting with their own feet. They're willing to go out and go get these medicines at a rate of change that we hadn't seen before, and they're willing to pay for them themselves. And so what that shows us is that as these two trends come together, as basically people want to own their own health and have the ability to do so with AI, that should converge on an opportunity set for both the investments to follow it and for people to live longer and healthier lives.
Alex, thank you so much. Alex Carnell, there, Braidwell, co-founder and chief investment officer, joining us this morning bright and early. Now, the dramatic turnaround at Rolls-Royce under Tufan Erginbilgic is one of the greatest corporate overhauls in recent times. He made headlines for describing the flagship engineer as a, quote, burning platform when he took the reins in 2023. Shares are now up more than 1,000%. Now, in the latest episode of Leaders with me, Francine Lacroix, I asked him if he feels like he's carrying the weight of British industry when so many companies have spoken about exploring a listing in the U.S.
Yes, sometimes, because I think there's this discussions whether companies should move to the U.S. market. I'm sure, Francine, you asked those questions. So actually demonstrating that you can be in this market. And frankly, after a point, it is never about you. You don't want to fail all the stakeholders, employees, investors, even government. once you pass a stage, right? Okay, you have a success. Now, make sure that is sustainable success and actually you can build on it.
What can other British companies learn from Rolls-Royce?
I mean, a lot. But business model level, are they actually set up to win? If not, fix the business model. And you do that, then of course you need to energize your employees. It's not about you. It is about 50,000 people. I am non-compromising for that. You may say blunt or whatever, but non-compromising. Mediocrity at that level kills the organizations, but also good people, then you need to develop them and have a great career in this.
How do you manage good people? What do they want?
Effectively, you want people in your organization who are highly marketable, but they want to stay with you, right?
Right.
So that's what you want.
That's a secret sauce.
Exactly.
Right.
That's what you want, right? That is almost 360 performance management in my mind. And 360 performance management always, if you want to close the circle, it finishes with reward and recognition. And then grow the company, because that creates all sorts of career opportunities. Shrinking companies, you have less opportunities. Grow the company, that actually feeds itself.
Right. I mean, every time I see you, we speak about small nuclear reactors.
Yes.
Because you it's not a 360 view. It's a very granular, it's almost problem solving. It's engineering.
I always go to big picture before I come to small picture. Europe cannot do without it. World needs it for net zero. Frankly, Europe needs it for supply security, full stop. Because even before geopolitics, Europe needed that. After some geopolitical events, frankly, Europe needs it more than that. So therefore, SMRs make sense at big picture because they are less risky, because smaller plants and manufacturing activity. Nuclear industry has a bad sort of experience with projects. They take longer, much more expensive. SMR, 85% manufacturing process. You learn. You learn, and it is modular, it is standard, rather than every nuclear project, bespoke EPC project in a way, right?
Anything could happen in the world of politics, as we've seen.
Yes.
Right. How do you deal with politics, with events outside your events? And even here, you could see a change in government with reform coming into power.
Yeah. I have a principle in business. I always tell people, once you get into trouble, it is too late. So you need to prepare the company before you get into trouble. So what does that mean? Like, we are actually living with it as we speak, and last year we lived with tariff. But first of all, make the company very resilient. That was our drive. We did that. So external shocks, we actually deal with it a lot better. Mindset is more important than anything else. You need to have the mindset and the response capability in the company. You need to develop that before you are in trouble, because it takes some time, right? And then you need to be agile using that capability. And then last thing you are going to do, you are going to be action-oriented, not explanation-oriented.
But if you don't know what the trouble is, are you scenario planning for all the things that could change?
It's not about actually predicting the world. It is about how your company now thinks about dealing with external shocks, right? So that is the capability, the processes, the mindset. Like, we are now responding to current shocks. I can assure you, we couldn't do half of what we are doing 3 years ago. probably 10%. Probably when I said something, people would look at me with blank eyes. What is he talking about? Today, I don't need to say a lot. I need to give the context, and people are in action.
And the full interview with the Rolls-Royce CEO has a global release on Bloomberg TV later today at 10 p.m. UK time. Coming up, the number of people dying from Ebola rises as surveillance systems are overwhelmed. We'll have plenty more on that story next. And this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Happened was you were out.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, more than 200 people are now thought to have died from Ebola in the Democratic Republic of Congo as local conflict and violence disrupt containment efforts. Now, more than 900 suspected cases have been reported across 11 health zones spanning 3 eastern provinces. Well, our chief Africa correspondent, Jennifer Zabazaja, joins us now. Jennifer, thank you for being here. So what exactly is the latest?
Well, Fran, what we're hearing from the Africa CDC is they're calling the situation increasingly serious. And if you take a look at the stats, you can see why. There's at least 10 African countries that are now considered at risk due to this latest strain of Ebola. What we're seeing is increased measures across a number of countries in the region, but then also globally as it pertains to this latest strain. And that is, of course, because we don't have a vaccine for this Bundibugyo strain. You mentioned the Democratic Republic of Congo, which is really been the epicenter of this Ebola outbreak. The country is facing an unstable region, notably mistrust from the public and strained health systems. That's leading to what the WHO says is impeding efforts to scale up Ebola contact tracing and also identify infections. And so, as I mentioned, we are seeing increased efforts by a number of countries in the regions. Today, we are awaiting a ministerial meeting, an African high-level ministerial meeting that's going to be convened. It's not just going to be attended by African ministers, but also globally, a number of leaders will be in attendance, including European leaders. And over the weekend, we saw more resources and funding being deployed, including the Gates Foundation, which announced $15 million that they said was going towards emergency funding in the region. But still, quite a lot of effort, and it's still a dire situation for a number of those on the ground. And we're hearing hearing that from the countries that are being asked for at least $319 million just to stem the outbreak and contain what the WHO and the Africa CDC is calling an increasingly serious situation.
Jen, without a vaccine, how are authorities responding to the outbreak?
A lot of the efforts right now, Fran, is focused on community outreach. And really, I mentioned earlier the mistrust, and that's an important factor of what we're seeing right now. We actually just got a new report from ActionAid DRC that is mentioning just how much misinformation and denial is impeding efforts to really trace the virus. And so a lot of effort has been made into education of the communities, but then also globally, we're seeing a number of countries stepping up screening and surveillance. That's not just in the regional countries, but also the United States announcing that they're working with private companies and also international partners to expand testing capacity and explore potential antiviral treatments because, as you mentioned, of course, we don't have a vaccine for this latest strain. But, you know, we've been hearing from a number of aid groups on the ground. We even featured one of those in our latest Next Africa podcast, and they talked about just how much strain they're facing on the ground. They're still facing declining equipment. They need equipment in terms of the transmission of the virus. And so they need a lot of emergency gear that they don't have. And so still we are seeing increased funding, as I was mentioning, but we're hearing from officials on the ground that are saying there still is a lot more that needs to be done, not just from a financial perspective, but also from help with the communities, many of which are very vulnerable already.
Jen, thank you so much. Jennifer Zabazaja there, Bloomberg's chief Africa correspondent, with the very latest, of course, on this Ebola outbreak. Now, this is the picture across the board. Again, many indices are closed for holidays today. Global stocks pretty much approaching actually record highs as crude oil is falling. Officials signaling that the U.S. is maybe nearing a deal with Iran to reopen the Strait of Hormuz and restore some of the oil flows. Now, we've seen a little bit of fluctuation of hope on that, and you can see then gold, 4,555. Now, on tomorrow's program, we'll be joined by the chief executive of Audemars Piguet. We'll be discussing the viral pocket watch collaboration with Swatch, so don't miss that exclusive conversation. That's at 9:45 a.m. London time tomorrow. Up next, catch my conversation with Bloom de French Gates for Leaders with Francine Lacroix, the podcast. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things
we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built. And for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a live update. Here's a look at what's making headlines around the world. The United States and Iran are inching closer to a deal that could end the war launched 3 months ago. Senior U.S. officials say Sunday the deal will open the Strait of Hormuz, even as President Donald Trump insists he would not rush into an agreement. Iran's semi-official Tasnim news agency says the deal draft could still collapse because the U.S. is blocking several clauses, including Tehran's demand that its assets be unfrozen. Oil fell on the news of a possible deal to open the strait. Brent is trading back below $100 a barrel, and WTI is closing in on $90 a barrel. Qatar and the UAE sent 3 tankers of LNG through the strait in the past, and over the last 30 other vessels, including Iraqi-loaded supertanker, have sailed through. Turning to the Fed, BlackRock's head of global fixed income for Asia Pacific says the central bank may have enough reason to justify an interest rate cut rather than much talked about hike under the new chair, Kevin Warsh. BlackRock saying, quote, in a forward horizon, there is going to be some pressure in the labor market that could suggest either doing nothing or a cut. And in entertainment, The Mandalorian and Grogu won the box office weekend. The film, which is the first in the Star Wars franchise in 7 years, made the $102 million in ticket sales in the U.S. and Canada over the 4-day weekend. Although it would be considered a strong start for any other big-budget release, it's among the lowest debuts for a Star Wars film since the franchise owner, Lucasfilms, was acquired by Walt Disney. And checking in on the markets across the world here, really the Iran trade is very much in the equity market. You can see it there on European stock 600, up almost 1 full percentage point, illustrated as well in the DAX. Up 1.2%, and also in the CAC 40 over in France, 1.3%. But really the focus this morning, looking at the NASDAQ futures in the United States, trading up 1.4%, an absolutely blazing rally for U.S. equities expected on the open tomorrow morning. And going into the next board and some of the other asset classes also being affected by the possible deal with the United States and Iran. Euro dollar catching a bid this morning, up about 0.33%. Looking at the German 10-year there, yields coming down really across Europe. It's not just in Germany, down 8 basis points. You see the same thing in France, Italy, and across the rest of the spectrum. When you look at Brent oil there, down about 5%, $5 a barrel, breaking below $100 a barrel for the first time in a couple of weeks. And there you have gold. They are catching a bit of a bid this morning, 45.57. We'll send you back to tape programming, bring you back another live update in just under 30 minutes time. I'm Oliver Crook, and this is Bloomberg.
The higher up you are, some people start to forget who they are. Because once you get into a position of power, people are always going to tell you, you're doing well, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen. And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
Last year, I spoke to Melinda French Gates, who has faced a lot of change in her life. And it's not just in her personal life. Her charitable work is also dedicated to change. French Gates began her career in tech, often the only woman in the room. She joined Microsoft as one of the few female managers in the company. She rises quickly, meets Bill Gates, they marry, and she becomes one of the wealthiest and most influential women in the world. And then she walks away. In her new book, The Next Day, she reflects on making that choice to change everything. I'm Francine Lacroix, and this is Leaders, the series that explores what drives the world's most influential people. Melinda French Gates, thank you so much for joining us. Now, you wrote a book, Next Day, which is inspiring. Why? And why did you call it The Next Day?
Well, I turned 60 last year, and so the book came out right around the time of my 60th birthday. And in writing it, as I approached that birthday, I realized I had been through a lot of transitions in life by then. And I thought, I've got something I'd like to say about this, because we learn a lot through transitions. If we pause and if we give ourselves time to learn, we can actually grow tremendously during those transitions, whether they're easy or whether they're hard.
But the next day is almost harder, which is what you explained, because you make a decision to do something. It's either leave a job, leave someone, reinvent yourself, but then it's after you do that you have to look in the mirror, and that's it. That's the next day.
Yeah, and say, okay, now what? I even tell college graduates, university graduates these days, okay, you think the transition is when you go through graduation? No, it's when you wake up the next day and you're saying, am I really on the way to where I want to go, right?
When do you have to think about that, the transition? When you make the decision to leave something?
I think when you make the decision, but I think sometimes it's so hard to get through the transition that's to come. Let's say you're leaving a job, or in my case, I was leaving a marriage, or even, okay, I was pregnant and having my first child. It wasn't until after she was born that the next day I could say, oh my gosh, this is what I'm into. So I don't think it's till you kind of get to the next day that you can really, at least for me, start to process the transition and where you are.
And this is really the heart of what leadership is also like.
Mm-hmm.
So what does leadership mean to you?
Leadership means, are you getting the people that are following you on the path that you think is right? Are we on the same page about where we're trying to go with either their business or life or society?
What's the right way actually to be a leader?
Well, I don't think there's one right way to be a leader. Let me make that clear. I think there are many ways to be a good leader. But I will tell you, for me, it means living my values and having integrity everywhere I go, so that what I'm saying is also then how I'm living my life. And I think if we can show up as a values-based leader, it's easier for people to follow us over the long term. I think sometimes we have leaders in business, I've seen many of them, or in society, where they want you to charge the hill, and then as soon as you're done charging that hill, it's charge the next hill, and then by the time you get to the third hill or the third mountain and you're pushing that rock up the hill, it feels like, no, wait a minute, can I do this again? Do I want to do this again? So to me, leadership is, if you can be very values-based going in, I think you can get people to follow you for a long period of time, I hope.
It feels like it's hard at the moment because of things, changing so quickly, because of disruption. When did you decide that that was going to be what you stood for?
So I worked at Microsoft for 9 years. I came right out of computer science and business school, and I started working at the company. There weren't very many women at the time, and it was a rough and tumble world. And I think tech is still pretty tough. And it was the Boys Debate Society. And I thought, okay, I can rise up, I can play this game. And I did play the game, and I did quite well. I was moving up the ranks in the company. But then about 2 years in, so I would have been about 25 at the time, I realized I didn't like myself. I didn't like how I was treating people outside of work, because I was treating them the same way I was treating people inside of work, which is the game we had to play. And I thought, no, this isn't right for me. And so I actually thought I would leave. But instead, I thought, okay, before I leave, I will try on inside this company being who I truly am. And to my surprise, I did not. I thought I was fall flat on my face. To my surprise, I actually rose in the company, and people came to work under me in my division who wanted to have that type of leadership. And I thought, oh, this can work. There's no reason for me to be somebody else, be myself.
And you have said that you don't mind conflict.
I don't. I don't mind conflict.
That's almost a superpower.
Yes.
If you use it for the right things.
That's right. And I also believe that in conflict, you can also still be yourself. I say to people, being clear is kind, because I'm giving them feedback so they can actually grow and become better, right? So I don't actually mind conflict, but I also think it's the way you do it. It's the tone you take. It's the precedence you set. I learned to do it in a way for me that maintained my integrity and hopefully, even though the feedback might be hard, kind to the other person.
So how? Do you have to be gracious?
Gracious, thoughtful before you go into it. One of my mantras that I started to live by, and I told directly my employees then and now, if I'm unhappy with work you have done, you will hear from me within 48 hours. I'm not going to tell you right away because I need time to think it through. If I'm angry about something, to calm down, that's on me. But I also am telling you, you're not going to get to your performance review and have a surprise. So if they pass the 48-hour mark, they can be confident that the job they did was a good job.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
When I was speaking to Melinda French Gates, we kept circling back to one idea: how much being a woman shaped her leadership journey. She talked about little moments from childhood that defined her voice, and the very real internal biases she's had to confront, not just in boardrooms, but around her own kitchen table. Listening to her, it struck me that for her story, it seemed there was no separating the two. You have 3 children.
I do.
2 daughters, 1 son.
Yes.
Did you raise them differently?
I tried not to. So I have a daughter, a son, and a daughter. And I had to look at my own bias. I say that because I tried really hard to raise them the same, but I'll give you an example of where I had to look at my own bias. After dinner, I had a rule in the house that nobody leaves the kitchen till mom leaves the kitchen, which meant I wasn't doing the last minute duties. We were all doing dishes together and cleaning up and putting the food away. But I realized that the tasks I was asking my son to do were different than the tasks I was asking my daughters to do. And I had to look at that and say, why do I think he should be the one to put out the garbage? The girls could put out the garbage. Why do I think they should be the ones to put the dishes in the dishwasher? He can do that. So I had to look at all those roles and say, let them decide who's going to do what, right? I say that because I think we all have bias inside of us. When I was at the foundation and I would sit at the head of the table with, a co-chair sitting next to me, my former husband, we would have a group of men and women, often about 24 or 30 sitting around the table. And I had to even look at myself and say, am I helping make sure that both the men and the women speak equally? If I see a man talk on top of a woman, I can say, just a minute, she was about to make a point. Or, oh, she made a point, you don't need to repeat it. Right? Or if a woman did it to another woman, I needed to say, hey, not okay, right?
Were you always like this?
No. Oh my gosh, no. These are all lessons of a lifetime, right?
But growing up, you had a great dad.
I did.
That tried to also show you women in the space world that was quite difficult because there weren't that many because he worked for the Apollo missions.
That's right. He was an aerospace engineer. And both of my parents believed that all 4 of their children should be educated all the way through university and educated equally. And my father knew to go the extra mile, which is amazing with his 2 daughters. I'm the second of 2 daughters. He pointed out to us that as an aerospace engineer, we'd go watch those Apollo missions. We'd watch the rocket leave the launch pad. But he always said to us, look, My teams are better when I have female leaders on them, when I can find female mathematicians and pull them on the team.
What did you learn from your parents on leadership that then you brought to Microsoft and then the foundation?
I learned from my parents that you should use your voice. So we grew up Catholic, but even when my parents had things they didn't believe that the Catholic Church was saying to the congregation, my parents were okay pushing back and even would write a petition to the priests in our parish saying, we don't believe in that. And so I learned that one person's voice gathering with others, they got 300 signatures, could push back on an institution. So I had those leadership skills, honestly, even going, which was amazing for me, even going into computer science in college, because even in college, there were very few women, and I started realizing I could lead teams of young men to program and get projects done.
The corporate world seems to have changed, at least in most industries. Do you think your leadership would have been different if you had started working a decade or 2 decades afterwards?
Well, tell me how you think the corporate leadership has changed in the last 2 decades. Are you saying it's changed for the positive or the negative?
I think so, change for the positive. There's been a consciousness about putting more women in leadership roles, and that means more emotional intelligence than maybe in the early 2000s.
Yes, I agree with that.
I don't know whether we're regressing now.
Yes, that's why I'm asking you the question. You know, I can't play exactly the script of had I started a decade later or 2 decades later, but I think it would have been easier on me. And I question myself. I had a lot of doubt. I think women in general tend to carry a little bit more doubt because of what society has told us for so long. I see it less, for instance, now in my 23-year-old daughter than I do even a little bit in my older daughter. But what I do know is that I want for the next 4 generations that come behind me, I want fewer barriers for women. I want the workforce to be easier for them. I want them to know that they can find allies in the workforce. I want them to know that they have the same opportunities men do when they come out of university, and there are natural networks to step into. I think some of the barriers have come down, but I don't think all of them have come down. And I think it's our job as female leaders and other male leaders to make sure we continue to lower those barriers.
How do you think about the men?
I think of them as allies. They need to be allies in this, right? I know so many men that say, gosh, I educated my son and my daughter equally. They get out in the workforce and now I see it. Now I see what my daughter is up against, my adult daughter versus my son. And so I think it takes, because many corporations are run by men, it takes them to say, we're going to create a different culture here. We are going to make sure that not just the males, but the females in our company lead.
When you speak to chief executives, world leaders, I know we think a lot about people just staying too long in either positions of power or in places where, you know, they should have moved on. How do you think about that?
I think sometimes people stay too long because their ego's attached to the job or because they're too afraid to make the transition. And they may not even realize they are afraid, but it does take courage to make a transition. And so I try to say to them, look, there's something beautiful on the other side. But when you make the transition, you're also making way, making room for what might come next for both you and whomever's to come behind you, right? And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
How would you advise is it up to the people that surround them
100%.
To say, like, look, hold on, think about what you're doing? Or is there something that they need to think about from day one?
I think it's both. I think they need to lay out for day one, what are they trying to accomplish? What happens if they don't get there? What is their exit ramp for themselves? You know, do they have a time limit? Like, if I get X done by year 5, but if I don't, will I leave? So having a plan going in, and then they have to surround themselves with people who are truth tellers and who they will truly listen to, right? Because once you get into a position of power, people are always going to tell you, you're doing well, you're doing great at this, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen.
I feel like that's the hardest thing. It's making sure that you're not in an ivory tower where people say you're wonderful and actually you're doing things that are wrong.
Absolutely. I worry about that for myself. I worried about that at the foundation, like who's not telling me the truth? And I knew there were a lot of people who weren't, but you know what? I could find the 2 or 3 that would tell me the truth about my leadership or something they didn't think was right about the organization. And so I had to make that safe for them. I also, outside of that, I'm very close to my family. And so my 2 younger brothers, my older sister, they will tell me the truth. And they never, ever let me think that I'm all that, you know, especially my brothers.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
I couldn't sit down with Melinda French Gates without asking about the challenge of navigating her identity when it's easy for people to define her by her billionaire status and famous ex-husband. But she was quick to acknowledge her privilege and explain that privilege isn't the thing that makes you special. Being special is something you have to work for. You faced criticism because you're a billionaire.
Yes.
How do you push back in saying, actually, I have values and I care about everyone despite my great wealth?
Well, I think first I make sure I acknowledge I have privilege. There is no doubt I have privilege, but I'm a human being. And part of me even writing this book was for people, hopefully, who choose to pick it up and read it or listen to this podcast, feel like, oh, I understand a little bit better where she's coming from. She came from a middle-class family. She's trying to live those values out in the world. So yes, she may be surrounded in great wealth, but maybe she's not like some of the other big billionaires I see in the news, because we're not all the same. Just like not all people who make $100,000 salary are all the same, not even close.
And you chose actually from a quite early age on how to use your wealth, but also how to educate your children.
Absolutely. I had this phrase in the house, just because I can or just because we can doesn't mean we should. And so I had for my kids, each of them had an allowance. It went up as they got older to help them manage money, but there were many things they wanted to buy. My oldest daughter in particular, I remember there was a purse she saw in a store window she had to have when we went by. She said, but you can buy it for me. Of course I could buy it for her. But I said, but if I did, what would that be saying to the other girls in your middle school? Wouldn't it separate you?
But was that also a reaction to people that you saw use money in a wasteful way?
It wasn't because I saw people wasting money. It's because I went through universities with some other peers who had come from great wealth. They threw their privilege around as if they were special, just because they came from wealth. And what I knew was they weren't that special, right? And so I didn't want my 3 children to grow up thinking they were special because they had a father with a certain name or we had wealth. They would become special if they lived out who they were and they figured out who they were and what values they had and what career they wanted to have. My oldest daughter, for instance, is in her medical residency program. I think she's going to become a pediatrician. I think she will be an incredibly special doctor because of her academic work, but because of how she cares for her patients in that clinic. That is what will make her special.
Melinda, do you worry, when you were going through the divorce, did you worry about the children or did you worry that it was the right decision?
I worried about both, for sure. But I really worried about, is this the right decision? And once I knew it was the right decision for me, I knew I just had to do it. I couldn't stay. If I couldn't live my values out in my home and in my marriage, how could I role model for my children or live my values out in society?
Was it ever difficult to be the wife of? Did you have to work doubly hard to be Melinda French Gates?
Of course it was hard. Yes, of course. I mean, first of all, I didn't even take on the last name at first when I first got married. Just the thought of having this big name that was quite well known, that was odd to me. But then, as I talk about in the book too, as we went on to do our foundation work, and we had the foundation with both our names on it on purpose because I believed in equality. But, you know, even as I would go in to meet with prime ministers, I remember a particular meeting here with one of the prime ministers who will go unnamed. It was a he in the UK. You know, the two of us walked into the room, and the first person that prime minister addressed after he'd met both of us was Bill with his question. But I had to learn to speak up early and often in the conversation for them to realize, oh, she really knows what she's talking about too when she comes in to speak to me about these global foundation issues.
Is that leaning in?
That's Sheryl Sandberg's words. I guess I tell my kids, it's leaning forward in a conversation. So I learned that just as I was feeling a little bit diminished in the conversation, or maybe even the person wanted me to feel diminished, right? I learned as soon as I had that feeling, instead of leaning back, I said to my kids, I learned to lean forward into that space. And I call it leaning forward into that uncomfortable space. And then you use your voice or you say what's right for you.
Are you a trusting person?
Absolutely. I sometimes over-trust people, but I definitely trust people. And I'd rather walk through life trusting people than not trusting people.
Because
you can be yourself, you can be more open, you can be more real. I've known a few people in life who just were more closed, and especially if you're in a position of privilege, if you don't trust people and don't know who you can turn to, boy, can you become very insular and your world becomes very small.
But it's also quite rare to find a leader that can take criticism.
Very.
Right? And I don't know whether we're going in possibly the wrong direction because of, technology, because your ideas are more siloed, actually. You kind of go down the path of that being reinforced instead of open dialogue.
I am quite concerned about that as well. I think with the advent of social media, while maybe we thought it was going to do certain positive things, I think the downstream consequences have been far worse than we imagined. So having these echo chambers or these polarized worlds where we don't walk in spaces where we have open dialogue and you just hear what you want to hear, or you hear just super negative things. We have to do better than that.
Is that what you worry about the most, actually, divisions within countries, within the U.S., and then at a global level?
Yes. I believe we are far better off when we see the humanity in one another. I don't care if you live in Malawi or Britain or the United States or India. We are more alike as human beings than we are different. And yet I think social media and the polarization that has happened has made us feel more different. But I think we're better off moving society forward when we are more centered and when we can hear one another's points of view. And I'm telling you, when we're shouting at one another and throwing invectives around, we're not hearing one another.
How do we get back to that space where actually you can have a disagreement, but a polite disagreement?
I think it starts in community. It starts at the grassroots levels. We have to have places where people feel they can have an open dialogue, smaller town halls, smaller group meetings. And once you start to build that trust, then I think you can start to maybe accept somebody has a different point of view than you do.
Melinda, thank you so much. I have 3 rapid fire questions for you.
Great.
Is that exciting?
Yeah.
So here they are.
Okay.
What do people not know about you?
Oh, probably that I have an absolute addiction to chocolate. It's very hard for me to go for a day without chocolate.
I love that. What's the signature way you motivate people?
I try to be positive. and I try to bring out an positive attribute that they have inside of them and hold that up for them so they can see it too.
What's the craziest interview question you've ever been asked?
People used to, when I was married, ask me questions about Bill. And I'm like, I'm not going to answer that. Let him answer that.
Melinda French-Gates, thank you so much for joining us.
Thanks for having me, Francine.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and the final approval could still take several days. Oil is falling on signs of progress towards a deal with Iran. Lower prices could mean a break for U.S. travelers as the Memorial Day holiday traditionally marks the unofficial start of the summer, a period where demand for gasoline, diesel, and jet fuel typically rises. And shares of Delivery Hero trading above Uber's $11.6 billion takeover offer as investors bet that higher prices will be needed to clinch the deal. The stock touching its highest level since November 2024 amid growing expectation of a sweetened bid. Let's do a quick check on the markets here. Really, there's one trade this morning, and that is the Iran trade. You're seeing it represented really across all markets across the world. You see it there in European equities this morning, catching a bid really across the board. The stock 600 up 0.8%. The DAX up 1.3%. The CAC 40 over in France up 1.4%. And of course, those NASDAQ futures up almost 1.4%. Expecting another big day for the NASDAQ when cash markets reopen tomorrow. Looking across the other asset classes across the world, euro dollar this morning also catching a bid. The dollar selling off ever so slightly this morning, down by about 1/3%. The German yields, and really this is the story across Europe, yields down, along with Brent crude, while gold spot catching a bit of a bid this morning. We'll send you back to tape programming. We'll bring you another update in just under 30 minutes.
It was definitely ruthless about killing the complexity and the drag in the bank. There is massive potential in this bank. Some of it needed to be unleashed. Things don't become complex by design. They end up becoming complex by lack of focus. We needed to be agile. So bringing the focus at the simplification will allow you to start dealing with it.
I'm Francine Lacroix, and this is Leaders, the podcast that explores what drives the world's most influential minds. Joining me this week is George Alhedri, the chief executive of HSBC, one of the world's biggest banks. He's been in the top job since September of 2024 and not shied away from difficult decisions, including a huge restructure, slashing thousands of jobs. While some might consider his methods ruthless, HSBC's share price has responded positively. It's roughly doubled to a record high since Alhedri took over. And after an eventful first year, I wanted to catch up with him and dig into those management decisions, understand how he's evolved as a leader, and hear how he's thinking about AI. Georges, thank you so much for speaking to us.
Great to be with you, Francine.
We were counting how many languages you spoke. 8?
So I've studied 8 languages. Other people should judge if I speak them.
Do you have a love for languages?
I'm fascinated by languages.
Because
if you're fascinated by cultures, then you're fascinated by understanding how they think and how they express themselves. And that basically naturally links you to understanding their language.
Can you only be a good leader if you understand people?
I think you have to definitely listen. And if you can listen in their own language, then even better.
You grew up in Lebanon.
Yes.
And what was your early childhood like?
So I grew up in Lebanon. At age 18, I moved to France for my university. I then picked an internship in Germany. And by coincidence, I ended up doing an internship in banking. So I went back to Paris to finish my postgraduate degree in finance, statistics, and economics, because I enjoyed it, of course. And I picked up my first job in Japan. And then back to London at that time, up until the time where HSBC hired me, and that was exactly 20 years ago.
At the time, you wanted to be an engineer. So what attracted you to finance?
So I absolutely wanted to be an engineer. I studied as an engineer, and as you know, back to your question about languages, I had studied German for about 10 or 12 years at that time. So I wanted to do an internship in Germany. The only internship I managed to land was an internship on the trading floor in Frankfurt. So I took it, and then I got addicted to it.
What did you like about it?
I like the pace. I like the still, at that time, remember, there's a lot of financial engineering. So you're still using a lot of your engineering skills. It still happens, right? And all sorts of, it's highly transferable to finance. I liked the accountability. I liked the early responsibility you can get. So this is where it started.
Georges, did you always want to be a leader? Were you a leader as a child?
It's difficult to define what a leader is, especially if leader as a child. If it's a matter of living up with high standards and high values and high integrity, and being able to project that around you, then yes, that started very early with me. But there are certain traits in leadership that really resonate with me. The first one is you lead by example. You walk the talk. You demonstrate that things apply to you as they would apply to anybody else that you expect them to be applied to, and you don't never make an exception for yourself.
When you look at leadership, how does, I guess, the young formative years, give you a sense of who you will become?
You learn and you feel what is right and what is not right. And a number of people around you, including my direct family, my parents, it kind of form part of how you think and what ethical standards you set yourself and the integrity by which you operate. And then sometimes around you, you feel things aren't right or aren't fair. And it's very important to stand your line, to hold your line.
That's difficult. How do you do that?
It is difficult. Discipline. It's very important to hold the discipline, and it's very important to think of yourself as your own brand. If you want your own brand to remain the brand of integrity, then it's very important you stick to it.
I've heard, some chief executives see it as, they decided from very early on who they did not want to be. Is it choosing who you do not want to be or who you want to be? What's easiest?
I think both go hand in hand. It's very important to realize who you want to be. And by comparison, realize also what are the traits you absolutely do not appreciate, do not regard, and therefore that you want to stay away from.
Talk to me about your favorite pre-CEO job at HSBC. Do you have a place in the world where you really kind of had to hone in on your leadership skills and understand the culture?
I've spent 20 years at HSBC now, and there isn't a single geography on the planet where I spend that long. So there is a sense of belonging for me to HSBC that supersedes any kind of physical attachment to any place. With HSBC, I've been, I don't know if I can count now, however many dozens and dozens and dozens of times, probably hundreds, to places like Hong Kong, one of the 2 HSBC home markets. the Middle East, where I spent many years for HSBC, specifically in Dubai, but also roving around the whole of the Middle East. Europe, of course, the US, the Asia, as a whole. It's just amazing the opportunities you have to get there. And every time you're there, you spend time, you create more connections, you have an even deeper understanding. I mean, if I bring 10 people in a room and I ask them how many geographies they worked for HSBC, you would find people who tell you more than 10. That kind of experience, frankly, is unique.
But Georges, if you look at, for example, some of the Wall Street banks, they're more cutthroat, but they pay their people a lot more. Is that something that you worry about?
I mean, it's very important that we reward our people fairly, we reward our people competitively, and we reward performance. But that's not the only component. The other component is what is the environment in which they operate? Who are their colleagues, their bosses? What is their purpose? Who are they serving? Why they're serving them? Can they be their true selves? Can they operate with the highest integrity standards as they wish to? All of that kind of form part of the value proposition HSBC offers its employees. And this is what makes the kind of equation collectively work for all our colleagues.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Everybody has to make decisions, big or small. But not everyone runs a bank with 200,000 employees. When Al Hedri took over as CEO, he really wasted no time making his mark, ushering in a big restructure and laying off thousands of people. So I was curious to understand how he thinks about company-wide challenges and what gave him the courage to move so fast and so decisively. So, Georges, talk to me about when you get the call that you've been appointed chief executive. What's your first thought?
Of course, the first thought is to be humbled and honored for being given this fantastic responsibility. But what really mattered for me is what I can do for this bank, not who I was or what my title was in this bank. Now, it so happens there's a lot you can do as a group CEO. In terms of affecting change or affecting, bringing potential to the bank. So it was therefore the great kind of opportunity for me to be able to do what I really set out to do and what I had the full support of the board to do.
But you moved fast, right? You got appointed and then you actually said, does a chief executive need to move fast to kind of say, right, this is the change and this is what we need to be? And is it all on you or did you govern by consensus?
So a few things on that, Francine. The first one is there is massive potential in this bank. Some of it needed to be unleashed. It needed to be unlocked. And some of that unlocking of the potential had to go through re-engineering of certain of our aspects, re-engineering the bank, rewiring the bank so that we can unlock this potential. Then, having been in the bank 20 years, operating in a number of geographies and businesses and functions myself, I've built a lot of experience and a very large network of colleagues who have been also feeding their input and their concerns, which kind of forms a big set of kind of action book, if you want. And then third, very importantly, I was already sitting at the board as a group CFO before I took the CEO role. And all these conversations I was having with my board. And if you have the support of the board, you, of course, have the kind of right to be able to act quickly.
But what was the most difficult thing about that first restructuring plan? Because you have to get rid of units that maybe you're attached to, having worked here for so long. There's, people that you like that maybe you've had to move around. Again, was it intellectual or, are you ruthless about it?
I was definitely ruthless about killing the complexity and the drag in the back. The most difficult part is when you have to separate with some of your colleagues I think we've been very thoughtful. We've been very considerate. We've done it hopefully the right way and the most respectful way for the benefit ultimately of the firm and its customers. We needed to be agile. We needed to be, to be ready for a modern world. And to be that, we needed to be simple. And therefore, kind of everything then drives what decisions you take from that mission statement.
How did the bank become so complex? And again, this is something that actually most organizations have to face as they grow. I guess there's, various factions, or a lot of companies actually could just become much more simple and simplified. What did you see?
Entropy is a feature. Entropy tends to increase, which means complexity, if you do nothing about it, tends to increase rather than decrease. So things don't become complex by design. They end up becoming complex by lack of focus. So bringing the focus at the simplification will allow you to start dealing with it. That's the first observation. Second observation is you have to be extremely methodical. What has created the complexity? How can it be addressed? Methodically, try to identify ways to be simple. Some of the ways to be simple is to decide not to do certain things, and this is why we exited a number of activities. The third thing is when you're taking structured decisions, you have to start from the top down. You can't take structured decisions from the bottoms up. This is why the first decision structurally I've taken relates to simplifying the group operating committee. We moved from more than 20 people to about 12. More importantly, we moved from 0% single accountability. Everything had dual or multiple accountability to now about 60% of our revenue is generated under single accountability. So that's important. And then the last thing, Francine, is to be patient. Because we're not solving simplification overnight. It's going to be a journey, and we have to be relentless at that journey, quarter after quarter, month after month, until we get the desired outcomes. And that journey is still on, we're not there yet.
But as a big chief executive of a big bank, you basically have, the shareholders that you need to please. So simplification maybe helps with them understanding what the bank wants to become. You have your clients, and then you also have the employees. So how difficult is it to juggle these, three masters?
So there is one consideration which, fortunately, the three masters align on, is being best at what you do. Your customers want you to be the best at what you serve them with. Customers tick. Your shareholders will pay you for what you're best at doing. They won't give you valuation for something that you're average. They will give you valuation for where you really command, where you're an authority in being able to provide that service or that product in that market. So the shareholders align to be the best. And then our colleagues want to be the best. Our colleagues want to win. Our colleagues are in a competitive landscape, and they want to win. And they basically thrive when we're delivering the best we can, and when we're delivering best outcomes, and we're basically the best at what we do. So you take this as a guiding thread and you say, let's focus on that. Focus where we can grow in areas where we're the most competitively advantaged. And then everybody aligns, colleagues, clients, and shareholders.
Is that why you learned Mandarin? You wanted to be the best for HSBC?
Yeah, I don't think I'm the best at HSBC speaking Mandarin. That's far from it.
But you're the first CEO to speak Mandarin.
Possibly, yes. I think what is important is to gain access to understanding, the culture in which HSBC operates. And obviously one of the very important cultures within HSBC as a whole, but that is probably one of the least understood for, say, people living in London, like I'm living now, is understanding the Chinese culture. And, if you really want to understand the Chinese way of thinking, the way of reasoning, the way of negotiating or engaging or presenting simply, then there is no better way than kind of put the pain in trying to learn the language and see how it's done in the language.
It was quite bold because you took a sabbatical for it. Was it a difficult decision, or did you automatically know this was the right way to also service your clients?
First, I knew if I really wanted to make a leapfrog in my, early starts in Mandarin, it needed it needed much more time than I could give it. Now I'm proud to say I still take lessons. Whether I'm progressing or not, I don't know, but I'm still taking lessons. I'm maintaining that journey. But there needed to be a leapfrog at the start, which a sabbatical has helped.
Was it for yourself or was it for the bank? Because it's interesting. It was Mandarin and nothing and not something else.
No, well, look, I mean, I've taken 6 months out, and there are a number of things I achieved during those 6 months. Some of them personal, some of them professional. But yes. It was full on.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The future is AI, and in our conversation, El Hedri made that very evident. But bringing colleagues along for the ride is one of his new leadership challenges. Talk to me about, in simple terms, right, how you see the bank in 5 years.
The world is moving fast. We need to move fast. Our customers are moving fast. We need to move fast. Their needs today will be different tomorrow. Their goals today will be different tomorrow. And we need to be continuously adapting to their evolving needs and their evolving goals, right? There are a few key components that can achieve this. Most importantly, the first component is the human touch, okay? We're still in a very much believer in a model where there'll always be a person to talk to. So we invest in our relationship management. We invest in our, people skills and capabilities. We invest in our people, simply.
So we're not being replaced by AI.
So that's the second component, is we absolutely need to be innovation ready and embrace it and enable our capabilities and be able to embrace a number of emerging payments through blockchain or tokenized deposit, all of which we launched, by the way, but that's an evolving world. But also being, Gen AI ready in particular. I mean, AI has been with us for 15 years, but Gen AI is clearly bringing something new to the equation. Now we have more than 100 cases, of which about half of them are already live in production, that are transformational, and they're going to change the way we as humans operate. And while we as humans will not be replaced by AI, if we don't know how to embrace it and upskill ourselves using it, we will become obsolete. So this is why my call to our colleagues has been to bring all of them along the journey of how can we best use Gen AI opportunities, because for those who don't use them, there is a real risk that they will be displaced. But those who will use them are going to be part of the future.
But if you're a young kid today and you want to get into banking, what do you study?
Let me try to answer it with two-pronged approach. The first one, Gen AI specific, right? We now rolled to 170,000 of our colleagues internal productivity tools that can materially improve their capabilities of reading documents, reading emails, writing documents, emails, querying, challenging, thought process. 170,000 of our employees. I mean, soon all the way to the 200,000+ employees. Of course, I will be monitoring usage. I'll be monitoring super usage. Those will be the most, kind of influencing among their colleagues to drive the utilization. But utilization is not optional, because that's how people remain very relevant in the future workforce 5 years down the road. But we're using Gen AI in wealth, we're using Gen AI in markets, we're using Gen AI in contact centers, we're using Gen AI, of course, in technology. Now 30,000 of our technologists, engineers are enabled with Gen AI. The speed at which we're able to patch for, say, code weaknesses or kind of vulnerabilities is 10 times faster already now than it was the case last year. 10 times. And we're not talking
in 12 months.
In 12 months. We're not talking some productivity in 5 years. We're talking productivity already here. This is hugely transformational. So you can imagine how important it is. Now I go back to the first part of your question, Francine, is what are the skills that are needed for banks? I would say there is no one particular skill that's going to be critical, but it is going to be the ability to learn. Because you can come in a bank coming from an engineering background, from a technology background, from an accounting background, but once you're in the bank, your career, the customer's expectation are such that you're going to have to continuously learn. And if you think you know it all, then there is no place for those, in an evolving landscape. Today, the most important learning capability is how to best embrace Gen AI and innovation in general.
Are you surprised that these, tariffs and trade barriers that have been erected really in 2025 haven't had that much of a material impact?
So a couple of things here, Francine, that are interesting. The first one is tariff in and of themselves aren't a new feature of global trade. They've always was forms of tariff. What was more new in 2025 is the speed at which both tariffs have been erected, but also deals have been negotiated to reduce tariffs or remove tariffs. So that was kind of the new feature. What's also important to note is that, yes, trade found its way, and we've seen trade patterns between Asia and the Middle East, or within Asia, or to some extent also between Asia and Europe, that have outgrown some of the corridors that have taken, that have been slower in terms of trade growth, or that have taken a kind of setback in terms of trade growth. What's most important with these reconfiguration of trade patterns is that, based on our internal research, we believe the kind of addition to GDP that these new trade patterns within Asia will bring to Asia will 3 times more than offset the loss of GDP that will be, due to the reduction of trade with the US. So there is clearly, value creation when we see Asia buying Asia, and these trade patterns and these trade corridors grow, because they're driving not only trade, but they're driving FDI, they're driving employment, they're driving domestic growth as much as it is trade growth.
George, this year, the next couple of years seems to be much more complicated because of geopolitics. You have this massive fight between the US and China, Europe somewhere in the middle, the UK has to find its footing. How difficult is it to navigate geopolitics as HSBC CEO?
So look, there is always a guiding North Star in managing international kind of relations, is what do our customers need from us? Because at the end of the day, whatever we're doing it because we have customers asking us to help them with or to deliver it for them, right? So as long as you believe on this planet, we will have loads and loads and loads and loads of international customers who are looking for supply chains around the planet, who are looking for resilience in their supply chains around the planet, who are also looking for consumer markets for their product and services around the planet to scale their capabilities, then HSBC has a critical role to play.
All right, rapid fire. Your top tips for holding highly effective meetings.
Make decisions. A poor decision is always better than no decision, because you can always change a poor decision and align it and adapt it. No decision leads to paralysis.
How do you overcome self-doubt or imposter syndrome?
Always go to first principles. What is your mission, and is what you're doing aligned to your mission? There are various leadership principles I live by. An important one is great leaders build better leaders. Am I on that journey? And do I have great leaders around me that I'm helping build?
What honest advice do you try to impart someone you identify with having great potential?
Enjoy it. You can't be too worked out in knots around things. It's very important to always step back, a deep breath, and just do it the way that you feel you're enjoying it, because you'll be much more impactful.
I love that. Have fun along the way, right? George, thank you so much for your time.
Thank you very much, Francine. Thank you. Thank you. Bye-bye.
cidade estava sitiada.
Nisso, ao começo, eu temia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz. Secretary of State Marco Rubio spoke to reporters in New Delhi.
We're still a work in progress. As I said, we thought we might have some news last night. Maybe today. I wouldn't read too much into it. It takes a little while to hear back. So we have what I think is a pretty solid thing on the table.
And Huawei has developed a new pathway to catch up with industry leader TSMC in making advanced semiconductors. Huawei will start making 1.4 nanometer chips by 2031, with TSMC will begin the mass production of the same in 2028, shortening the almost 5-year gap between the two chip makers. Huawei's semiconductor chief said the chips coming this fall will be the first to adopt its logic folding architecture, which boosts performance by increasing the number of transistors it carries. Let's get a check-in on the markets this morning. There's really one story dominating the agenda and dominating markets across all asset classes and across the world, and that is the prospect of a potential peace deal between the United States and Iran. The market's really taking that news to heart. You can see that across the equity complex here in Europe. The Euro Stoxx 600 up by 0.8%. The DAX over in Germany up by 1.3%. The CAC 40 over in France up by 1.5%. And those S&P futures gaining almost 1%, awaiting that cash open tomorrow morning, likely to get another record in the United States for that equity market, both on the S&P and the NASDAQ. And switching up the board, looking at some of the other asset classes moving this morning, you have the euro versus the dollar gaining some traction this morning. The dollar selling off more broadly, but the euro there up about 0.3%. And then the rate story over in Germany. This is going to get very interesting for the ECB on June 11th, their next policy meeting. Does this diminish the chance of them potentially hiking rates? If you ask the markets, the chances of a rate hike for the ECB has gone down materially at about 77%. When you went into the market on Friday, that was at about 88%. And so the consequence of that you're seeing across the rates complex within Europe. Germany down by about 8 basis points, but it's really the same story across France, Italy, and all the other major bond markets here in Europe. And Brent crude, as you would expect, on the optimism of a possible deal, breaking below $100 a barrel, down by 5 $8.8, about 5.6%. And gold spot catching a light bid this morning. Well, more than a light bid, about 1.3% higher this morning. We'll bring you some more updates in about 30 minutes' time. And until then, we'll send you back to tape programming over in the United States. I'm Oliver Crook, and this is Bloomberg.
Somebody in the organization made a call, and I respect that. I mean, are we going to get these calls right every day? There's 100 calls we've made to exit stuff that actually didn't end up being successful. Again, do you regret it, or do you deal with what you can control, which is what do we have ahead of us? And I am much more of a philosophy. Focus on what you can control. Makes life much easier, because then you can actually look forward rather than keep looking back.
I'm Francine Lacqua, and this is Leaders, the podcast that explores what drives the world's most influential people. This week's episode is Wael Sawan, the chief executive of Shell, that's Europe's largest oil company. We spoke at the end of last year, before the U.S. attack on Venezuela and its capture of President Maduro, and the more recent U.S.-Israel war with Iran. And while recent events have really upended the global energy industry, Sawan's time at Shell has drawn praise, especially for his focus on controlling costs. Now, since taking over in early 2023, Shell has outperformed its big oil rivals. And as a leader in a challenging and increasingly volatile landscape, I was keen to hear about the moment Sawan knew he was being considered for Shell's top job, his controversial choice to pivot away from renewables, and his advice on how to be decisive about investment. Well, thank you so much for joining us.
Thank you very much, Francine. Great to be here.
What kind of leader are you?
Look, I've learned, I think, through firstly my father to start with people. I remember when he retired, he worked for 3M. He sort of said at the time, business results are important, but when you leave, the number of Christmas hampers you get after you have retired from people whose lives you've influenced will be what actually counts. And so I've always believed you have to start with people.
You're an oil executive, and I couldn't figure out whether you're even maybe, you get more heat than bankers. Does that bother you?
No, it doesn't, because I think the issues we're trying to sort of work around are really tough issues. And positions of leadership demand a burden of responsibility. I don't think that should be unexpected. What I need to be able to do is to make sure that my compass is clear. And so I spend quite a bit of time in introspection and reflection. And then it's how to mobilize our organization to deliver.
What's that introspection look like?
It starts with actually recognizing that the world around us is moving at an incredibly fast pace, whether it's geopolitical changes that we see at the moment, technological changes with AI, climate, and therefore the world that we have come from, in particular a company like ours, very strong engineering culture in general, we need to move from an all-knowing culture to an all-learning culture, because the world is just unpredictable. It's uncertain. It's not linear.
As an engineer, does it mean you can take emotion out of it when you problem solve?
I think you can, but I don't think that's healthy. I think at the heart of it, and it's one of my own developments, when I get too strategic about things, good counsel from colleagues around me has been, great, you're in head mode, make sure that you also touch into heart mode. Because I don't think you want to divorce head and heart, even when you're making some of these tough decisions.
Well, when did you first start being like that? Do you remember the first memory as a child that you already wanted to think with mind and heart?
I was the captain of our high school soccer team. And I remember the burden of responsibility at that time. We lost the tournament that we were competing for, and the challenge of lifting up a group of around 15, 16 people at the time, while figuring out how I lift my own self up, I think was one of my first experiences with leadership, but it was addictive. It was great, and it was depressing, and it was disappointing, but it was all these emotions at the same time, and it was a great opportunity then as I grew in my life, career. I had more and more opportunities to test that. I remember once being given my first leadership opportunity at Shell, and this poor individual who was reporting into me, I tried to apply all of the potential leadership learnings on this one guy.
That you learned during your MBA?
That I learned during my MBA, that I'd read a lot about, and this poor individual had to sort of succumb to all of the leadership 101.
Yeah. What does that look like?
How do I make sure that I am providing him his development plan? How do I intervene to support him on a daily basis? How do I coach?
Did he say, well, I'm
was
okay? Or
super
was he
gentle,
he
and,
never said
he
anything?
never pushed back. But as I reflected, as I sort of grew in my role, I'm like, this poor individual must have just been cursing the moment that he got me as a leader.
What did you learn about yourself, actually, in that first leadership role?
I think I learned that I have natural biases, right? So I love to be out with people. I'm an extrovert by nature. But put me into a room on strategic issues and I can focus a lot more on that head than the heart. I also learned around just the way I drive performance in an organization, finding the right balance of when do I reach in and push hard, or when do I step back and create space? When am I more the advocate, the supporter, and when am I more the individual who is actually catalyzing a change?
But, well, I mean, Shell is one of the biggest energy companies in the world. So when do you ever step back and give space?
I'd say what I've seen in my last 3 years in the job is I've gone through phases. The early phase was all about really step in and stabilize the company, really get it into the performance discipline that I was hoping we can get to. A leaner, fitter, much more competitive company. We're very clear on the strategy we want to implement. I can now step back more and more and actually do have time to reflect. What are the moves we want to make? Go out, connect with people, be inspired by different ideas from the ones we have internally. I'm finding more and more of that space, but that's partly because we have done a lot of the heavy lifting to be able to get clear on where we want to go. And we've put some terrific people in place to be able to lead their respective businesses and functions.
So is the secret to a good manager or being a good leader being able to adapt to the situation? So know when to push and know when to reflect?
Absolutely. I saw that early in my career. I had just successfully concluded a leadership role in Qatar at the time. And I assumed that leadership posture, style, was going to serve me in a different role when I was going to New Orleans. And I was absolutely wrong. I needed to very quickly understand and diagnose what the challenges were, what the opportunities were, what the strength of this team was, and to be able to adapt my style, to be able to help them unlock their full potential.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
It's normal to have an inkling you're being considered for a new job, but it's hard to be sure. It was in Qatar, when he held significant leadership roles, that Sawan realized he might be in the running for the top job at Shell. I wanted to hear about this moment and how he transitioned from the candidate to chief executive.
When you look at your career, how much of a, game changer was that big Qatar job?
It was a huge game changer. Right, a huge game changer.
Did you understand at the time that they were maybe testing you to then become chief executive?
Of course, it was the sort of job that you figured you were on a good track in Shell. I'll be honest with you, it took me a while to recognize and to convince myself that I was in line one day to become the CEO, because, you're trying to do the best that you can in the jobs that you have. But I can tell you, almost every single job that I had been given in Shell, I thought there were others who were more qualified than I was. And so it created that knot in my stomach going into the job. I need to work harder. I need to do better. And so Qatar was one of those moments for me. It was a difficult role because the 2-3 weeks after I stepped into a role, we had the safety incident where we lost 2 of our colleagues. And I struggled as a leader because it was under my watch that we had lost those 2 people. 2 colleagues whose families I knew, and it catalyzed us into a different place. It catalyzed us into a space where as a group we had to figure out, how do we heal, and then how do we, reach to the stars?
So when you have a new job, be it at Qatar or then CEO, how do you problem solve? How do you, first of all, spend a bit of time understanding what you need to fix and then go about fixing it?
I spend a lot of time, once I know I'm in a new job, just meeting with folks both internally and externally to be able to just listen to perspectives. Where are the value pools? How is Shell doing? What can we do better? What are the benchmarks telling us? I then like to move into a space of actually creating clarity of direction, because I find an organization is not at its best without that clarity. And so after that, for me, is the next step, which is really setting that direction. We've done that in my role as CEO, but more and more we linked it to the purpose of what we want to do, to become that leading integrated energy company.
I mean, oil companies for a lot of moment were also kind of integral to the energy transition, right? A lot was put on oil companies to make sure that you did your part to become cleaner and greener. Is that fair?
I think it's absolutely fair that we, along with the multiple other stakeholders, have a role to play in the energy transition. So customers have a big role to play, governments have a big role to play, energy producers like ourselves have a big role to play. And what we have found as a company is we have to play to our competitive strengths. So yes, we're very strong in oil, we're very strong in gas, we're very strong in trading, we're very strong in marketing. So how do we take that nexus of strengths that we have and actually contribute to an energy transition that we know is not going to be linear, that we know is going to be complex? And how do we become a stabilizing factor for our customers as they try to navigate it?
You were speaking very plainly 3 years ago, right, when you became chief executive, when some of your rivals or competitors were trying to say, like, look, we're going to be quite good. Actually, we're almost a renewables company. Like, were you just more honest than some of your competitors?
I think for quite some time, what we had been trying to do is maybe speak to multiple stakeholders. And unfortunately, that can come across as almost being all things to all people. I felt it was really important to, one, build our own beliefs around the energy system, really get clear what our role was going to be, and then just say it for what it was, recognizing that not everyone was going to agree with it, that we're always going to have also a small group of avid supporters, and that what was important was for those 80%, 70% in the middle to hear our convictions, and then most importantly, to see us follow through on those convictions. And so what we wanted to do was to position ourselves as a player that is supporting the energy of today while looking forward. And it wasn't about choosing sides. It was about finding the role that we can uniquely play to be able to address energy security, energy affordability, and energy sustainability. And people, I think some would prefer it's either this or that. And we felt, no, we are building a company that we want to be the best performing, best returning company, not just today, but for decades to come. And therefore, it's incumbent upon us to be able to look at not just the energy system of today, but to help shape the energy system of the future as well.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Big decisions have shaped Sawan's time at Shell, some before he became chief executive, others on his watch. There's a sale of the Permian Basin assets for $9.5 billion during COVID, which was seen as a coup for the buyer, ConocoPhillips, and the earlier exit from Guyana before it became one of the world's hottest frontier oil plays. Different moments, different leadership, but both raising big questions about long-term value.
In 2019, Shell decides to sell your basically Permian assets. Was that a mistake?
No, it wasn't a mistake. At the time, what we were trying to do, it was a very different context. We had a significant amount of debt. We needed to be able to actually pay down some of that debt to become a much healthier company. We had tried actually before the sale of the Permian to look at buying and growing our Permian position. We competed in a couple of different processes and were not successful. So we were getting to the point where our position was just not large enough, not material enough to be able to win. And so what we ended up doing is we sold indeed the Permian, and we used some of those funds to be able to pay down debt and continue to strengthen the balance sheet. Today, we enjoy one of the strongest balance sheets in the sector as a result of many of the choices that we have been making over the recent years.
It could have been a great asset. So is your philosophy no regrets, or do you sometimes think about what could have been?
We always look back. I mean, every single year I take to my board what we call a post-investment review. It's all the good, the bad, and the ugly of where we have invested, the choices we have made, because it's humbling to be able to sort of look back with the benefit of hindsight and say, you know, what went wrong, what went right. Sometimes it's execution. Sometimes it's our view of the strategic lens that we looked at the world through. But it's important to continue to look at that, not to regret it, but much more to learn from it as we look to then build the muscle for the future.
Yeah, talking about Guyana, it could have been one of the most important assets, right, for Shell. Regrets there?
Look, again, I mean, we empower people in the organization to be able to meet budgetary requirements. We just had a couple of wells that hadn't succeeded. Somebody in the organization made a call. And I respect that. I mean, are we going to get these calls right every day? There's 100 calls we've made to exit stuff that actually didn't end up being successful. Again, do you regret it, or do you deal with what you can control, which is what do we have ahead of us? And I am much more of a philosophy, focus on what you can control. Makes life much easier because then you can actually look forward rather than keep looking back.
Okay, so what can you control now?
What you can control is becoming that leaner, fitter, most competitive company. Make sure that you continue to build resilience. Get that balance sheet in a very strong position, get your businesses delivering cash, and making sure that you are ready, because the world around us is uncertain. We need to be able to actually have the strength to go through the cycles and to generate value and grow through those cycles. That's what we can control.
But, well, is bigger better? I know, again, rumors of a combination between Shell and BP keep on swirling around, and they've been doing so for years. Conceptually, would something as big as that make sense?
I don't start from a position that bigger is better. Undoubtedly, there are parts of our business where scale matters, right? Because scale allows you to be able to be competitive. You can spread your resources in some of the areas where you can unlock a bit more value. But scale for the sake of scale is mistaken. Some of the largest M&A deals are the least successful M&A deals because they are massively complex. So I start more from a place of focus on what your strengths are. If you're ever going to do M&A, firstly, set a very high bar. Make sure that you can create value from it. And then if you transact, put all of your efforts into making sure that it delivers value. But do it for the right reasons. Don't do it because of FOMO. Don't do it because you want to be bigger. Do it because it creates value for your shareholders longer term.
We've seen loads of M&A in banking actually fail because the DNA of the culture was different, because the teams didn't work together, be it risk-taking or something like that. Is it the same for oil companies?
Absolutely. I think DNA does matter. Culture does matter. And again, it depends on the scale of the aggregation of the companies. But if it's two big companies coming together, I would say culture is one of the biggest things you need to be able to look at.
What do you say the culture at Shell is like?
So I think our strength has always been the nature of the company is high values. That's one of the reasons I joined Shell. It's a company that focuses on respect, on integrity, but we're trying to evolve the culture further. We want to have more edge in our performance focus. We want to look at leveraging more the different parts of Shell to unlock value. We call it One Shell, how we are able to truly come together as an organization. So there are elements that play into that. I'd say at the heart of the cultural shift that we're trying to make is the point I made earlier around going from an all-knower to an all-learner. Because of our engineering culture, we like to solve for discrete outcomes. And that's what we built, and it's been successful for us for decades, for over a century. And as we go into the energy transition, as we go into the world that we're going into, also with the advent of AI and how you leverage AI and what we do with some of the challenges we see on the geopolitical level, we have an opportunity to be able to have the humility to actually step back and reflect. How do we change? How do we challenge the paradigms we have had in the past? And how do we come up with new ways of being able to steward the company?
But if you look at the numbers of how much energy we need also to just face the data centers and AI usage, I mean, the numbers are so big, it's almost difficult to get your head around it. Do you have to be a predictor of that? Or do you have to foresee the future? Or do you need to just react in a way that's in your control?
I think you have to have a clear view of the energy system. And I would agree with you, Francine. I think at the end of the day, we see that primary energy demand is going to continue to grow for quite some time.
By a lot.
By a lot, right? It is, and it's been happening. I mean, people talk about energy transition. Of course, what we have been seeing is energy addition. We are at peak oil demand, peak coal demand, peak gas demand, peak renewables demand, peak bio demand. The world is trying to get its hands on all forms of energy for many of the reasons that you talked about. So while we cannot predict the future, what we can do is sort of really make some very clear deterministic bets on the future. One is gas for us, for example. We see gas as being a stabilizing force in energy systems that continue to transform. That allows us to be able to say, okay, we are one of the biggest, we are the largest international player in LNG, then make sure that you continue to play that with lower and lower methane emissions, but really be there to give our customers that versatile, reliable fuel that they seek.
Well, what's your North Star? So if you look at your day, how much is it meetings, or things that you need to deal with that you could have, or that you want to preempt, and how much of it is actually firefighting?
The ratio, I would say, has swung more and more to actually controlling my own agenda. When you start, you're still learning, you're sort of responding to different stimuli, and now I've had the opportunity to actually shape that. My coach has sort of told me the most important thing you should be doing is to be purposeful. By the way, some of that day is spent having dinner with the kids and my wife. Be purposeful and be present in that moment. And other parts of the day are about self, exercise, gym, or, of course, at work, really be purposeful. In this meeting, are we trying to open up people's minds to what's possible? In that meeting, are we trying to address a particular challenge that needs a decisiveness in the moment? Really just being choiceful and purposeful in the way that one conducts himself. I think if I can get to that level of sophistication, then I will feel that the day that I'm spending is worth every minute that I'm spending.
Does that have to be in everything you do? So as while the dad and while the CEO?
I think in positions like this, it is even more important to be conscious of that purposefulness, because it is so easy. You can come back home and your mind's still distracted and thinking about work and trying to be there having dinner, but really sort of your mind's not there. You have to be able to actually create the space and the time to be there, to be present. And it's one of the things I continue to work on as a leader.
Do your kids talk about climate change? Do they push back?
They do. Actually, it's more from a position of curiosity. They hear different perspectives and they say, I think I trust you. I'm going to get your perspective on it. So we end up talking about it. We talk about politics. We talk about life. We talk about leadership. And they've gotten to an age now where they have a lot more curiosity, where they're studying about some of these things. And sometimes the studies sort of end up giving a singular perspective. They're keen to be able to understand the broader perspectives.
Do you think Shell will be radically different in 5 years or significantly different?
I think the pace at which the energy system is changing means that we will need to continue to evolve. I don't think one should expect a wholesale change of what we do today. I think hydrocarbons will continue to be a big part of what our business is. How we prosecute our business, I think will change significantly. In particular, we see AI just starting to influence every part of how we work. We have evolved as a company over 135 years. And so it's not unexpected to see us evolve in the next 5 years and in the next 20 years. And hopefully we'll be here for at least another 100 plus.
What do you want your legacy to be?
When I was recruited into this position in the final interview with the board, I said one of the biggest things I hope to be able to leave behind whenever I move on is an organization that is better than what I left, what I inherited. And the biggest thing for me has been the people. I do think being able to develop the next cadre of leaders in Shell is one of the things that both excites me the most and I feel most urgently I need to be able to achieve. And the reason I say that, what I love about this company is it is an institution. We are all replaceable. That the institution and its values outlive you.
How difficult is it to groom your possible replacement?
I'm spoiled in a company like Shell given the talent base we have. We have brilliant people. So for us, we have very, very deep succession planning. We have very deep talent programs. So it allows us to know some of our emerging talent in year 5 of their tenure, even if they're in their early 30s, to be able to allow us to see who might one day get to the top table and what are the experiences we need to give them to be able to get there and what are the leadership opportunities we need to expose them to. The biggest thing you can do for an institution like this is make sure that you make it stronger when you leave it. If I can do that in my tenure, I'll be a very happy man.
Well, how do you recharge?
Exercise. Do gym when I get back from work, and I try to make it consistent.
Is it difficult to switch off?
Not difficult to switch off. I find myself in the right headspace when I need to switch off, and I force myself to do so. Good sleep is key.
If you had to write a book today, what would it be on?
Leadership. I think it would be on just learnings, failings, challenges, and what I took away from it.
Well, thank you so much for your time today.
Pleasure. Thank you very much for having me, Francine.
It flew by. That was 30 minutes.
Perfect.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. Secretary of State Marco Rubio spoke to reporters in New Delhi.
We're still a work in progress. As I said, we thought we might have some news last night. Maybe today. I wouldn't read too much into it. It takes a little while to hear back. So we have what I think is a pretty solid thing on the table.
And shares of Delivery Hero rising today after Uber's $11.6 billion takeover offer. This as investors bet that a higher price will be needed to clinch a deal. The stock touched its highest level since November 2024 amid growing expectations of a sweetened bid. A quick check across markets this morning. Really, you're seeing one trade be represented, and that is the potential of a deal between the United States and Iran catching a bid across European equity markets. There you see it on the Euro Stock 600 up about 0.8%. The DAX up 1.4%. The CAC 40 in France up 1.5%. NASDAQ futures blazing ahead 1.4%, likely an all-time record high at the open again tomorrow once we get a resumption of cash trading. Looking across some of the other asset classes across the world, the dollar selling off ever so slightly. Here you see euro dollar bid to the tune of about 1/3%. Again, the rate story in Europe, very interesting here now. Whether or not the ECB will move in June, if you do get a deal between the United States and Iran, very much an open question. That is driving yields down across the board here in Europe. Brent crude, of course, selling off also this morning. We'll send you back to tape programming and bring you another live update in just under 30 minutes. This is Bloomberg.
Working from home is career suicide. And we only talk about the upside of working from home. And here we go. We know that people don't really want to hear this. Think about what's happening in the world. Declining birth rates, declining marriage rates, and loneliness epidemic. And we think that none of that is linked to the number of people that don't see people. because they're like doing Zoom calls from their living room. Like, it's so crazy to not make that correlation.
I'm Francine Lacroix, and this is Leaders, the podcast that explores what drives the world's most influential people. This week, I'm speaking to Emma Grede. She's the chief executive and co-founder of Good American and founding partner of Skims, the shapewear and loungewear brand, which was valued at $5 billion in November 2025. Now, the last 10 years have seen her star rise, a lot of it down to her successful partnerships with a celebrity family named the Kardashians. But now may be a pivotal time for her, and I wanted to talk to her about one of the best and worst days of her career, how she leads with radical honesty, and why, as a self-styled behind-the-scenes woman, she's now chosen to step out into the limelight. Emma Grede, thank you so much for joining us. It's exciting to speak to you again.
It's so lovely to see you again.
Talk to me about the Good American. The day you launched was seen as one of the biggest successes, almost of all times, in the denim world. 1 million, right, in sales. But then you write in your book that actually it was quite stressful and didn't go to plan.
You know what? That's an understatement, because it's really interesting when something from the outside looks so perfect. And in one way, it was a total dream. You know, it was the first time that I'd done a business in apparel. And for all intents and purposes, it was like this beautiful, amazing thing that went so well, except from the inside where, you know, I had no inventory. We'd had this beautiful dream first $1 million day that kind of went down in history. But behind the scenes, I was scrambling. I had like a wait list kind of coming out of my ear holes and no way to satisfy the demand. But more than that, I had like this kind of doubt permeating through the company, on the board with my shareholders, that perhaps because of that oversight that I wasn't the right person to run the company. And actually looking back, it's kind of interesting that I never felt any fear around that moment. I just kind of looked at everyone and was like, leave me alone, I'm going to figure it out. But
never
actually,
any fear. There was not a moment where you thought, actually, I need to take a step back, or I need to convince the board, or...
No, and it's so interesting because so many people talk to me about, you know, imposter syndrome and being a first-time founder. I never had any of that. I always think, like, if not me, then who? You know, I in my head, it was my idea and I brought it to fruition and I was going to figure out any of the problems. And so much of being an entrepreneur is about figuring it out. You never have the answers. And I think if you have the answers, you're probably not moving fast enough.
But the board told you off.
I got a bit of a telling off. Yeah, well, I wouldn't say a telling off. There were just some dismissive tones, like, you know, it was like I was a genius at 9 a.m. and by noon, it was like, perhaps you're not, you know, best suited for this role. And I just completely dismissed that.
So how did you regroup?
In a really tumultuous way. I think, you know, I did what I know to do, which is when you don't know something, you ask somebody who does. And so I started calling around. I tried to information gather. I was calling competitors, I was calling retailers, I was literally visiting factories. And so in a way you could literally get on the ground and say how can I change this? How can you move this? But the simple fact was the fabric wasn't available because I hadn't had the foresight to get out in front of the calendar and know what I was, up against. But a new brand is a new brand. There was no data, there was no history, there was nothing telling me that this was going to be that successful. And so would I have done anything different? No, I don't think so.
What did you learn about yourself? Because a lot of chief executives will say, look, it's only by learning and failing that finally you have the posture to say look, I got this.
Yeah.
But you think I got this right from the start.
I really did. And perhaps that was naivety, but I knew I'd figure it out. In my head, I just thought this is just another problem. And my life is a series of problems as a leader and as somebody who starts companies and builds things from scratch.
Did you tell the employees or did you celebrate with them and figure it out by yourself?
I had no choice. The great thing about Good American at the start is that I'd chosen that initial team really well. So I had veterans in my business. The person, and thank God she still works with me now, but in a different company, but the woman that was really in charge of product had been in the denim space for 20 years. And the guy that ran all design really was so ingratiated in the denim community in LA that we were able to literally knock on doors and ask favors. And so I thankfully had surrounded myself with people who knew better and could help me open doors.
You talk a lot about, giving employees honest feedback. Is that
all the time.
radical honesty? How do you describe it?
It is radical honesty, but that's also so much about who I am. And so I've always thought to myself, I can just be honest with myself. I don't need to walk around with some, guilt on my shoulder and carrying stuff that doesn't serve me. So for me, it's just about honesty, take the learning, move on.
What does that look like when you talk to employees?
It looks very straightforward. Here's the thing. I don't think anybody in my organisations ever wonder what I'm thinking. Nobody's like, I'm trying to figure out how Emma's feeling. It's like, I am really firm and really fair. I have very, very, very high expectations for myself and for everybody around me. I give very, very clear feedback. And my job as founder and as a CEO is to have the vision, right? But it's to communicate that vision downwards. And so I'm in a constant conversation with everyone around me. I think I'm super repetitive. I say the same 3 things over and over and over again. And everybody in the organization should be able to know what our priorities are and know what we're doing. And so I think I'm a little bit of a broken record, but I think that there's an element of consistency that comes with that. And I'm bloody consistent.
And you've talked before about needing different people around you to go from 10 million to 100 million to 5 billion.
Oh, don't you just? It's not the same people. And, I kind of raised myself in business having an enterprise mentality. I learned that very, very on. I'm not here to do people favors. Business is business, and I do what's best for the company every single day. And often that is what's best for the individual. Nobody wants to be kept in a role that they're not best suited to, because that never works out for the individual or for the organization. So I've learned over time that, what is good for the company is ultimately good for everybody.
But what is that, ruthlessness?
I don't know that it's ruthlessness. I think that it is just being able to delineate what is right at the time. And, here's the thing. I think specifically as a female leader, you're judged on, how empathetic are you? And so I think the way that we work, and the reason that I think directness is always best, we all know where we stand all the time. I'm not waiting for an assessment moment or a 6-month mark or some kind of formal review. If you're failing, you probably know you're failing because we've probably spoken about it. It's not like a bolt out of the blue.
So how do you hire? Do you hire people that you think can take the heat in the kitchen, or do you expect everyone to just, take it?
Well, I hire differently for different stages of the business. But I think in the beginning, you want generalists. You want people that are going to have a, I'll do that, hand up mentality, whatever it is. I think as businesses mature, you're looking for more, category and subject and departmental expertise, and typically hiring for an enormous amount of experience. But for me, what I place so much value on is flexibility. You have to be willing to look and take your experience and do things a little bit differently. So I'm always trying to hire for people that are seriously experienced, but seriously flexible.
Is there a concern with loyalty? I mean, are employees still loyal if they feel that you can cut them off at any point?
I mean, I don't know about cutting them off at any point. And I think that loyalty is something that you earn. There's a trust in a business, and it really is about people learning to trust that what you say is what you mean and is what happens. And when you do that, you can be trusted regardless.
Do you think a lot about incentives?
Yeah, I mean, I think that is just the expectation. Incentives have to be built in for the best people. And that happens at all levels of the organization. But everybody has to understand how the incentives come to be, right? The company has to perform well in order for the incentives to be, created, but then for them to be paid out and to make sense.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg. You can't mention Emma Green without the Kardashians. In a way, they were her biggest supporters. She reportedly met matriarch Kris Jenner first and pitched teaming up with Khloe Kardashian for Good American. But was there actually a moment,
a meeting of minds? And how did she convince some of the most famous people in the world to go into business with her? Can you talk to me about the pitch when you pitched Good American to the Kardashians?
There was never such a pitch idea. You know, specifically with Good American, there was an idea that I had, and I really felt that the partnership would, you know, make this thing just accelerate. But it never is, you know, how people kind of see it in the movies. There was a relationship that existed and a moment in time, and the best things and the best businesses always work when what's happening in the culture chimes with whatever you're doing. And I think at that moment, when you go back 9 years ago, the idea of body positivity and what it meant to do real inclusivity in fashion just wasn't what it was today. And so I think that whenever you're starting something, it's like this melting pot and a smorgasbord of small decisions and the right thing in the culture and the right moment in time and you being the right person. And some element of magic has to happen. But there's never like this like bingo moment where everyone goes, yeah, let's go.
Don't you have to, I mean, you had to sell your idea, right? At some point.
Yeah, but you know, like
yes,
you never need to sell an idea that is like that good, you know? It's like there's an idea and then there are people that decide to jump on board. But, you know, again, I think it feels more like a fantasy to be like there's this moment of sell and this moment of yes, because the best partnerships, they happen over time and they come together because everybody has something to bring to the table. And I think that was one of those magical moments.
A lot of people have ideas, but then they don't really come to fruition. I mean,
well,
it's
a lot of
difficult to get it
people
made.
they have, you know, things that they want to do in their head, and an idea can live on a piece of paper or on your desktop for the longest time, but you've got to get out. The hardest thing is to just get out of the gate.
But what's holding people back? And I do see that a lot, actually. People are either too afraid or say they don't know where to start or they don't have the capital.
You know, I don't come from a background where I had either the capital or the network or like the educational background or any of those things. I just tried a lot of stuff and eventually one of those things happened to work out. And at some point, you've just got to take whatever it is that you have and try. And again, I think that we're in such a time where there's this idea that everything has to be like $1 billion brand, everything has to be a unicorn.
But you've managed to do everything at scale. Right, so it's smart.
Yes, I mean, everything that you know about.
Okay, what are the failures?
There's a ton of failures. There's a ton of things that I've done that didn't work. And when I think about my early businesses, I'd opened offices that didn't quite work out. I have, you know, grown companies and then had to downsize them. And those things are really painful. Right now, we only show the glossy side, the amazing things, the great headlines, the stuff we want to put on our Instagram. And the reality is anyone who is an entrepreneur that's done multiple things will have failed. And you have to get comfortable with this idea of not everything working out. It's not always that you did something wrong, so that this thing in this time, this situation didn't work for a myriad of reasons. So long as you figure out what are those reasons and what did I learn from it and what will I do different next time, then that has to be left behind. And I think that if you look around in the culture, that is way harder for women than it is for men, because women are held to an entirely different standard when they start things and they fail. And yet we have men that fail over and over again and close it down and go out and race the next day, and nobody mentions anything about it.
So once you have a failure, do you do a post-mortem to see what went wrong? Do you? With the whole team?
I tell you.
So it's like spreadsheets.
Absolutely. And you really have to understand, well, what did you do, right? Because I think it's easy to point to the market and conditions. It's easy to look at all of the things that were outside of your control. But often there's a pattern in these things, like that you are a huge part of. And so I really try to, you know, and I hate to go woo-woo, but you kind of have to go inside. You have to understand, like, what is it that I miss and what is it that I didn't see? And how can I change that for the next thing?
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
When news news breaks.
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
For a long time, Emma Green has been the brains behind growing other people's brands. But over the last few years, she's been making a visible effort to be front and center. Whether it's launching a podcast, high-profile TV appearances, or now her debut book, Start With Yourself, this new chapter appears firmly focused on building her own brand. But I wanted to know why now and what next. So in the past, you used to say you were a behind-the-scenes woman.
Yeah.
What's changed?
You know, I still feel like a behind-the-scenes woman. I still go into the office every single day. I'm like behind the scenes in front of the camera. I do a lot of things and wear a few hats. I think what I've realized as I've become more successful is that wherever I go, people ask me the same questions. They always say, how did you do this? And I don't think people are that interested in me. I think they want to understand how they can be successful for themselves. I'm really trying to lift the lid and demystify what it means to have a successful career and to start a business and to scale a business and what it means to sell or IPO a business, and specifically through the lens of a woman, because I believe that there is social conditioning that actually makes women avoid the exact behaviors that lead to wealth creation, that lead to success, that lead to leadership and opportunity for us.
What do you think actually doesn't serve female leaders? Because it starts from a very young age.
How long have you got?
We have a lot of time.
I need to get these girls when they're 10, 11, 12, because a lot of it is what we carry. I don't know that the idea of imposter syndrome even exists when we talk about male founders, male entrepreneurs. Why would we be talking about it so frequently for women?
I've heard male entrepreneurs.
You have?
Yeah.
Did any of them say, yes, I had it?
Yes.
Really?
Mm-hmm.
I've never heard one.
And then they say, look, I looked around the room and I thought, actually, if they can do it, I can do it.
I can do it. But the same sentence said by a woman carries a different weight. And I have seen, certainly in my own career, this notion of imposter syndrome can be planted as a seed, even when it doesn't exist. And that's what I want to stop. I want to stop us stopping ourselves getting out of the gates before we've even given ourselves a chance. Because my experience is that women are excellent at making money in the business, and they are excellent at just thinking about things in a really unique way. And I hire so many women that are brilliant, especially when they come back into the workplace after having children, because their time and the way they think about things and is so much more precious that they get really, really good at how to
get done.
Oh, they get
so quickly,
so much done, and they get it done so quickly with a different sense of urgency.
Do you see yourself as a retail mogul? No. As a conglomerate. You're all over the internet saying, you're trying to build the next LVMH. Does that feel good?
Oh, that's so fun. I mean, that's such an interesting headline. How flattering. I think that's like Instagram headlines. Oh, it's a good one.
It is a good one. But
it's a goodie.
What are you trying to build?
What's really interesting is that what I set out to do, I've kind of done. I wanted to create businesses that I could be really proud of, and I wanted to be part of businesses that I really enjoyed going in and working in every day. Like, I wake up on a Monday and I'm like, let's go. And that for me is winning, because where I grew up and where I come from, people dreaded work. They went to work to pay their bills, and that is not what I do. I do it, and I do it for a lot less. I mean, I'm glad it comes with what it does, but I'll be honest.
You see big, you dream big.
Yeah, I've always seen big and dream big, but I think that there comes, there's a level of responsibility that comes with that, because I think that, when I look at the landscape, specifically for women of color, I think that talent's fairly evenly distributed, but opportunity isn't. And so when I look at the ability that I have to create opportunity for other people, that feels like a responsibility for me. Not in a like super worthy way, but in a way where it's like, wow, there's a lot of great stuff out there. And I've done really well putting my money into other female founders. So I actually think there's this whole part of what I'm doing that is part lifting the lid, part giving opportunity, part bringing, you know, like a bunch of people into a conversation and into the business climate that might not otherwise be doing it. And really they should.
Are you good at, I mean, you seem very good at identifying brands.
I'm really good at spotting things.
That, well, are you, is this, I mean, that's a difficult talent, right?
It's a difficult
like
talent.
Magic almost.
And listen, I think there's a part of me that says, well, of course, that sounds easy now because my deal flow is so good. But I was good at it even when it wasn't. You know, I'm good at spotting opportunities. I think like a customer. You know, I am my own customer in so much of what I do. I have a terrific sense of value and what something is worth. If you buy a pair of jeans from me for $149, they're going to be worth like every $149 that you pay for them.
Is the customer of today radically different from the customer of 10 years ago?
Customers are so much more informed, and there are no barriers to what you can get, where you can get it. And brands have more responsibility to their customers than ever before. And that's fine, that's healthy, you know, may the best brands win.
Is it more difficult? It's just harder to sell.
Harder to
sell because of tariffs and moving stuff around.
Well, it's harder, and the media landscape is so much more fragmented.
Right.
Yeah, I think if you go back to when I started Good American, you could find all of these crazy unlocks, and that shifted into Instagram and shifted into TikTok. And now it's totally fragmented, and we're all like struggling and going, hey, where's our customer coming from?
Social media.
Yes, somewhat social media, but what channels in social media, and where are you spending, and how does that shift and change on a daily basis depending on the platform and the vertical even within those channels. So I think there's a lot to consider. The thing that I've learned is that good products will always win. And so what I don't let that side of things keep me up at night. What keeps me up at night is coming up with a new innovation, constantly delighting and pleasing our customers and coming up with things that they don't even know that they need.
Is there a brand that you admire more than others?
Oh my goodness, there's so many brands that I admire. We just spoke about LVMH, but like Louis Vuitton, you know, I always look at that brand because it's so hard to stay that hot all the time. And, you know, even when I think about a brand like Chanel, you know, it's like, it's a brand that I have always wanted since I was 10 years old, and I want it even more now. You know, I'm like constantly texting to figure out when I can get this latest collection. Like, when does it hit the store? How do I not miss it? And I really admire brands that have that type of staying power coupled with that type of heat. That's a really, really hard thing to do. And of course, I would say brands in fashion, but, you know, I don't know enough about like other spaces. I'm of course enthralled by what's happening in AI at the moment, and I feel like I'm like everybody else. I'm just trying to keep up and trying to make sure I understand and trying to make sure that I'm using everything at my disposal.
Do you think it'll change your business?
It is changing our business
Is
already.
It?
Yeah,
like
undoubtedly.
In terms of hiring or
I think mostly in terms of like how we're planning the business. So when you think about inventory, needs, customer data, the way that AI is able to get into those systems and read quicker than we've ever been able to. I think what's really interesting is how to think about businesses in the age of AI. You know, the way that I look at it is that you have to safeguard everything that requires a human touch, creativity, innovation, design, like all of those things should be done by people that understand other people's needs, and the rest ought to be AI.
Okay, I have rapid fire. You ready?
Born ready.
Working from home, good or bad?
Working from home is career suicide. And we only talk about the upside of working from home. And here we go. We know that people don't really want to hear this. Think about what's happening in the world. Declining birth rates, declining marriage rates, and loneliness epidemic. And we think that none of that is linked to the number of people that like don't see people, because they're like doing Zoom calls from their living room. Like, it's so crazy to not make that correlation. The key to a long and happy life is your close relationships.
Should the unpaid internship be brought back?
Listen, I did a lot of unpaid internships, and I did it while being somebody that didn't have a lot of money, and that was a real struggle for me. It was a huge unlock for me, the ability to go into an organisation and get under the hood without having any qualifications or right to really be there. I think that there have to be certain protections on it, but I'd like to lift the lid because there's so much to be learned.
MBA, worth it or waste of money?
Depends how much money you've got. It wasn't my path. Listen, I am a mother of 4, and so the idea that any of my kids would go and do an MBA would be an absolute dream. But would I force it on them? That's like an individual decision. And if you can, then do. But if you can't, don't sweat it.
Emma, thank you so much.
Thank you so much. What a joy.
That was so fun.
Thank you.
And it kind of flew by. It's 7:15.
I know. I'm like, what happened?
I'm like,
I was like,
so good.
Pew!
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. The United States and Iran are inching closer to a deal that would end the war launched 3 months ago. Senior U.S. officials say Sunday the deal will reopen the Strait of Hormuz, even as Donald Trump insisted he would not rush into an agreement. Iran's semi-official Tasnim news agency said the draft deal could still collapse because the U.S. is blocking several clauses, including Tehran's demand that its assets be unfrozen. And SoftBank plans to raise $1.6 billion through another sale of subordinated bonds aimed mainly at retail investors just 2 months after a similar offering. The move underscores the company's growing funding needs for AI-related investments. In prediction market, Polymarket has been banned in Indonesia, where authorities classified it as online gambling after a wager on the possible early end of President Prabowo Subianto's tenure spread widely on social media. The government said it will not allow any form of online gambling in Indonesia and has intensified a crackdown on online betting since the president took office in October of 2024. And U.S. Secret Service agents fatally shot a man near the White House after he opened fire with a handgun. The Metropolitan Police Department identified the suspect as a 21-year-old from Maryland. A bystander was also shot and sustained a non-life-threatening injury. And now a quick check on the markets. The sort of animating force within the markets this morning is the optimism that we are feeling clearly across the equity market and really across the world of the possible end of the war or some kind of agreement between Iran and the United States. You see that represented on the board there in European stocks. Stock 600 up almost 0.9% this morning. The DAX up about 1.5%. The CAC 40 in France keeps gaining throughout the morning, up 1.6%. And NASDAQ futures 1.4% higher is what we're expecting for the cash open when it returns tomorrow. That would send the NASDAQ to an all-time high. Yet again, we see something very similar on the S&P. If we switch up the board, we will also see the impact on the currency market, where the dollar is being sold off very widely. There you see against the euro gaining 1/3% against the dollar. And the rate story here in Europe, really the bet that the ECB maybe will not move in June, as has been widely anticipated. If you do see a resolution to the war in Iran, that is seeing yields across Europe falling down by about 9 basis points there in Germany. And Brent crude, of course, selling off at about 1.5% lower. And we'll send you back to U.S. tape programming with another live update in just about 30 minutes. I'm Oliver Crook, and this is Bloomberg.
We started a firm basically around what I learned in football and said private equity can be a place of abundance. And makes no sense because it should be just transactional. It should be zero-sum game. You get what you get, I get what I get. But great business, the greatest businesses are the ones that have that heart, that feeling, that there might be other ways to make some money. That's fine with you. But to me, that's the way to make money and make it legacy.
There's no one quite like Steve Young. The NFL Hall of Famer who won 3 Super Bowls as a scrambling lefty quarterback is now making moves in private equity. Alex and I caught up with him in his office at HGGC. That's the $10 billion firm he created almost 20 years ago. We talked to him about ownership, risk, and why he thinks the PE business needs a new playbook. All right, so Steve Young, we often start this show by asking people to introduce themselves. How do you introduce yourself these days?
Well, most of everything's at home. I still have one left in high school. My little daughter, Lila, kids in college, kids out of college, trying to get people launched. And so it's like I would introduce myself as an aspirational dad right now, see if I can, get people launched.
So not 3-time Super Bowl winner, MVP, Hall of Famer, co-founder of a private equity firm, just aspirational dad.
Well, I think if you have, all politics are local, right?
Yeah.
If things are good at home, then things are going to be good everywhere else. And so for me, it was my old mentor, Roger Staubach, who told me when I transitioned, I said, how do you transition? He goes, you run. I go, run where? He goes, run anywhere. Just get away from football, because football will never leave you, but you need to leave it.
Wow.
And so I thought that was great advice, because it's really true. Football never left me, but you need to leave the thing that's not, it's over. And I think that I don't want to drag it around. Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the 3rd floor or the lobby. You actually have to start in the basement and humanize yourself and have the humility to start from the ground up, just like you did in the minor leagues in baseball or football. And that's an interesting. I do have a question for you following up on what you just said. When you walk into an investor meeting or a company you're trying to buy, I find that sometimes being an athlete, the greater you are and even the more famous you are, that almost works against you. How have you dealt with that at all?
So it's funny, for the first 15 years of this private equity journey, I tried to avoid it. And I almost, and if it came up, I was fine. But I didn't, I wouldn't, if it didn't come up, I was fine with that too. And I realized over time that I was the one that was overwrought about it. I'm the one that's thinking about it, like no one else. And I think it was an investor, and I'm not going to name the investor, but it was a big investor in one of our funds. And it was a big deal for us to get them in. And we finish, he says, we're done. And he goes, you mind, there's one last thing I want to ask you. He's like, yeah. He goes, will you throw me a ball? Can we go out and have a catch? And I was like, I was taken back. Like,
Yeah.
I'm like, yeah, we go have a catch. And that's when I was like, stop. Let's just, like, I played. It was great. If it's helpful, if it's useful to you in some way, let's talk about it all day long. But if it doesn't come up, let's talk business.
Yeah.
Because that's what's fun.
And so let's talk business. Let's talk about private equity because, as both of you know, I love private equity. I'm fascinated by it. But private equity is not for the faint of heart. I mean, I think you would agree, Alex, that you and I look at this industry together a lot. There are a lot of easier things you could have done.
Yeah.
Why private equity?
I don't know. I'll try to give the quick answer to that. I'd gone to law school while I played. I went to 3 Super Bowls while I was in law school in the wintertime. But it was really around getting ready for the transition. And so because of that, I thought I'd be a lawyer. But then I was asked to be on the board of Power Bar, which at the time was a meal replacement for marathoners out of Berkeley, California. But for me as a young single guy, I was like, that's not meal replacement, that's dinner. And so we got famously friends, and he goes, look, join the board. On the board was Warren Hellman and Larry Sonsini, titans of Silicon Valley.
Founder of Hellman and Friedman.
And Larry Sonsini and Wilson Sonsini, the famous law firm. And I had a buddy who had started a business around an algorithm that back in the mid-90s, you could go in and fiddle around with URLs in the internet. And he said, figure out an algorithm that could localize the internet. Before everyone's time here, you remember when it's like you could put in Palo Alto or New York hammer and you'd get a USSR sickle. Like nothing made sense. And so I took it to him and said, look, this is not, and they realized, Steve, you're a businessman, you're not a lawyer. And so that transition, we built a business. And that's where I met Rich Lawson, my longtime partner, was building a business called Found.com.
Wow.
And we did it while I was finishing playing. And that's what started it. And one of our investors was Bain Capital and Bob Gay. And Bob saw what we were doing, and then he sponsored us, essentially sponsored me and Rich together to start a private equity firm. And that's how it transitioned. And so I started what is now HGGC, 5th fund, and, $10 billion later.
Here you are.
Here we are.
So, Steve, I mean, if you think about 40 years ago, when Henry Kravis and Steve Schwartzman, and you start Blackstone and KKR and Carlyle with David Rubenstein, and so like the big top 4, it was a very small industry.
Very small.
If you look 40 years now, you have
6,000
right?
middle market private equity firms.
So the competition is fierce. So when it comes to imposter syndrome, Hall of Famer, 3 Super Bowls, law degree, but now you're asking investors and institutions to invest in you and Rich, first-time fund, former football player. Describe how you felt when you were in this boardroom asking for money.
For early days.
The first days.
It was interesting. We all agreed in 2008 that private equity was broken.
Wow.
I'd seen enough of private equity for 8 years to say, I have that opinion. And then others that had been back in the KKR days and early Bain days in late 80s, early 90s, that like the middle market where the people are, Alex, it's like across the table is not some widget. It's you and me. Let's work it out. We got a business size that is really around, it's not a spreadsheet jockey kind of process. It's people. And we said, we've lost that. And so in 2008, we started a firm basically around what I learned in football, which Bill Walsh used to say. He wrote a book, my famous Hall of Fame coach, the score takes care of itself. In other words, yeah, we have to return money to you, but that score will take care of itself if we have those fundamental values of partnership and the athleticism to be great partners and use our intellect and our ability and our expertise. And so what I had to do, Alex, you say, as me coming out of a professional career and imposter syndrome, I need to get really smart people around me fast. Because I know it's not, if it's about me, we're in trouble. But the imposter syndrome sticks around.
Yeah.
I mean, I still think about sometimes I feel awkward and a little out of place. And I think that's my own weird insecurities. And I think in a weird way, insecurities drove me as a football player. And in some ways, I think some of the insecurities drive me here. Just be completely authentic about it.
Yeah, of course.
I mean, it's hard to say because I'd love to tell you I'm the king and get out of my way.
Right.
But I think to be honest about it, the imposter syndrome is something that is around, and I don't know that it's completely gone.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
You may not have an MBA from Harvard, and neither do I, but the MBA you got is 3 Super Bowls. To be in the middle of that huddle in a pressure situation in the Super Bowl with 150 million people watching, you're doing the same thing in a boardroom, right? Sending your message, here's the play, here's our strategy.
And it really is about people.
Mm-hmm.
And if you're not good at that, it does devolve. It will, football is won in relationship. I gotta go back to Bill Walsh. He used to stand in front of the team the first day of training camp and say, I don't care what play we call, I don't care what defense we run, we will win because we have shared common experiences together and an element of love for each other.
Mm.
Wow.
Powerful.
And I was like, we all like, what did he just say?
Yeah.
That's insane. And so I go back to, the boardroom, the things that you hit it right on the head, the things that I had viscerally experienced, the stuff that I went through. It's a different, it's not a field, it's not a huddle, but it is the same drama.
Right. I mean, I've gotten to know you pretty well. Like, you have an ability to go pretty deep with people. Where does that come from?
Maybe it's my own vulnerability that I feel to myself. Like, if someone says I suck, I'm kind of like, I wonder. Let me look into that. You know what I mean? And I think that vulnerability makes me interested in what's happening around me. And I think I watch closely when you play. And Alex, I don't know how you'd think about baseball, but football with the field, it's there's 80,000 witnesses. There's a clock. There's a score. There's a play clock that you gotta go. And if you pay attention on the field, the human behavior that happens and to you and everyone else is the truth. That you cannot lie. And so to me, I think whatever my vulnerability or my interest in it just got an expert jolt from playing all those years. Like I feel like every human behavior I see in the world today, I see the flaw.
I mean, did you have that experience? I mean, I'm fascinated by this idea of translation. Football's a different game from baseball. What are the things? What are the commonalities for you?
I mean, it's total transparency, right? Because every time you come to the plate, you're sitting in front of Yankee Stadium in front of 50,000 people. And all you got to look is that scoreboard. It's going to tell you what's your batting average, what are RBIs, home runs,
OPS,
everything. So you're either going to get cheered or booed, and it's immediate. And I think one of the advantages Steve and I have being former athletes is we have no problem saying, hey, that's my fault. That's my fault. And we get our butts kicked over and over again. In baseball, if you fail 70% of the time, you go to the Hall of Fame. So you almost have a PhD in failing. The key is that you have a master in getting back up. And I think we were talking a little bit about that earlier. A lot of people in business that all they've done is win, win, win. We're actually perfectly made for business because business is a sport of failure.
I love that because in a way, if I could get all the guys that are out there going through that and learn, it's intuitive, right? You can't get into the pros and not have that happen to you. And if you could just be aware, self-aware as it's intuitive, but you're not necessarily aware of it. And if you could become aware of it and watch it and become it as a talent, you could be easily hireable. Like if you really take it in and you notice it and you pay attention to it, it's portable, 100% portable over into the, another practice, because it's people.
All right, so I want to introduce an on-the-fly segment that I'm going to call Asking for a Friend, because I really am asking for a friend. And this isn't sort of like, I'm asking for me. I'm actually asking for a friend. Steve, asking for a friend. If you were to, say, have just bought a couple basketball teams in the last few years, you're taking on the role as an owner for the first time. You've been an owner of your firm. What's the best advice you could give him?
Fascinating. Treat your position as highly fireable, even though it's not. You get inevitably a little lazy just because I'm safe.
You're
like
in
I could
charge.
make mistakes and, you know, and screw up. Well, I might get embarrassed. Someone might write a bad article about me, but I'm not at risk. Like I just feel like I want to walk around without the hubris that I own the place.
Wow.
Right? I mean, it's like, because, and I think people will feel, because you walk around with hubris, you own the place, everyone else is like, you do, so I'll bow, but it doesn't make me feel like I want to go fight.
Wow.
And I think that's super powerful. The other thing is, one of the best things that ever happened to me when I was playing, I wasn't flailing around, I was playing pretty well, but Mike Shanahan, Kyle Shanahan, the coach of the 49ers today, is his dad. He was a great coach of the Broncos, and he played the coach of the 49ers for me. He turned to me one day and he said, you know, I'm a really aggressive play caller. And I think I spend so much time trying to make sure that I don't put you in a bad spot. I start to feel like I'm holding you back. So I'm going to flip the script. And instead of holding you back, I'm going to empower you. Me. Instead of me, coach, take care of you, you player, take care of me. I'm going to call as hard and fast as I possibly can. And if you know, if there's a problem, you deal with it.
Wow.
And I remember feeling like this empowerment, this feeling like, I mean, I can still feel it in the back of my neck right now. It's like, let's go do it. Let's do that. And then what came out of it was this acceleration. And so I guess my point is, trust, like empower people to run ahead, not by the side and not from behind, but to go. And I've done this in business and especially in our firm. You're young, you haven't done it before, well, you're about to. And you know what? It might cost us in the short run, but running out and forcing you to kind of do hard things that are ahead of your time, you're going to find out and we're going to find out really fast, and then we'll iterate.
Yeah.
And it doesn't mean that you fail. It's just like, let's get fat, and that's how you empower people. You have to empower. That my coach empowered me. That's what it felt like. And then I was like unstoppable. And if you can get a team full of empowered people, you can't stop them.
Thank you for that advice. And that really means a lot to me. And I think it's funny how much alike we think.
No, we talked for a few minutes before. I'm like, we're gonna turn to butter soon. We keep going around the circle.
I just want to take you to dinner and like actually like keep going because it was so good.
No, but I've loved what I watch you on baseball. I watch you in a lot of interviews and stuff. I know this is rattling around you're chewing on what I'm chewing on, and that's what I appreciate.
Trying to figure it out every day.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
From the world of politics to the world of business, Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Question for you is, I played for several amazing owners. 2 of them are George Steinbrenner and Hal Steinbrenner. They were both great, but very different. And both had big impacts in my life and my business life. Talk a little bit about DeBartolo and also Bill Walsh. What did they mean to you and what made them so good?
Eddie DeBartolo is in the Pro Football Hall of Fame as an owner. He's in there for a lot of reasons, but to me, the main reason is he was the first equity owner of a professional football team, for sure, that looked at the players as partners. Everything else, all I'd ever known was, and I'm gonna conflate it, but it was chattel. And so I think he saw us like, you're my partner, and we're in this together. And I think that's the empowerment, right? It's like, I own the team, and it's in a drawer somewhere. I got a piece of paper that says I own it.
Right.
But I don't pull it. I put it in the drawer, and I don't really pull it out. And you know what? Don't make me pull it out. because I want you to know that, and his question was always, I want you to be champions. What do you need? And so whatever it was, we'd list it, and then you know what he did? He held us accountable. Like, I gave you everything you needed. Where is it? And if we came up short, there's like, we didn't get it done. And so we'd have a little,
There'd be a discussion.
There'd be a discussion. But it was like, you talk about empowerment, I always felt like we were in it together. And I think that's a super powerful feeling from an owner.
Yeah.
That's unusual. And then Bill only accentuated that. He was somebody that was worried in 1987, 1992. He was worried about hydration and nutrition and sleep and mental health. And not only was the West Coast offense he was ahead of time in everything.
Wow.
They're both one of one.
Yeah.
And I ran into both of them. And it's a miracle. It's how many athletes that I know, they never got to a place that could be like that.
And just to chew on that, because I'm obsessed with like great coaching and great leadership. Bill Walsh, I've admired for a long time.
Yeah.
Back when you played.
He's all of that.
Was it that he was just a great visionary, a great offensive mind, great connector, EQ? What was his greatness?
Okay, all of that. But I'm going to give you, I joined the team. First meeting, he's talking about love and everything. Someone's over in the corner with a big camera filming it. And walking around, following him down the hall, out to the practice field. And I'm like, what is this? Are they doing a museum or what, what is this? Because he's already won Super Bowls. He's like, maybe there's, I don't know, a documentary. And no, it took me some time to figure it out, but he was developing what was a repository, like a physical box of everything that he was, to EQ, all the speeches, all the installation, all the offense, all this, anything that he'd ever done. I want it to be in a place where I could hand it to my assistant coaches, because my assistant coaches aren't getting head coaching jobs, and I want them to thrive. And so he handed it to Mike Holmgren as he went to Green Bay.
Wow.
He handed it to Mike Shanahan as he went to the Denver Broncos. And he handed it to many others. And he's basically saying at the height of his career, here's everything that I am. Here's all my proprietary knowledge. It's 3 generations ahead of everybody. We had a tactical advantage for 20 years.
Yeah.
Right? And he's handing it out. And both those guys told me that as he left, as they were leaving with this box of stuff, he said to them, I'll see you in the championship game. And we did.
Yeah.
Wow.
And then sometimes they beat us. Like, what are we doing? He goes, Steve, I knew I had a tactical advantage, but I knew it was going to be it's like a glide slope. It's not going to stay the same. It's going to wane. So as it settles, if I don't reinvent myself off of me, and I knew if I handed it to him, they'd sharpen my saw.
Right.
I was like, that's abundance.
And so, I know you think a lot about this, Steve, and Alex does too. What's the version of that you use in your current life? What is the spirit of abundance? What is
it's easy.
focusing on the
It's
transition?
really easy.
What does it look like?
Think about transaction. Think about the roots of private equity we're going to make a deal, right? And if the deal sits as a spreadsheet in front of you, but there is a way to now take that as a base of transaction and create a space where we start to look at the full measure of what you'd like to do and the full measure of what the restrictions and the abundance of what we can do, and let's see if we can find ways together. And it's aspirational. You have to do it every day. You have to talk about it every day. You have to believe it every day. You have to go into the relationship that way. When things get tough, you got to remind yourself that that's what it is. And so I've taken from my previous life and said, private equity can be a place of abundance, and makes no sense because it should be just transaction. It should be zero-sum game. You get what you get, I get what I get. But great business, the greatest businesses are the ones that have that heart, that feeling, that there might be other ways to make some money. That's fine with you. But to me, that's the way to make money and make it legacy.
As we wrap up, Steve, I did want to ask you, and this is very much of a piece with what we're talking about. Your dad, who I think just recently turned 90. Grit Young. One line that you've talked about many times that I never forget is you told him you wanted to play in the NFL, and he said, that's the dream.
That's a wonderful dream, son. Less than 1% chance, but everyone needs a dream. Hold on to it. but what's the plan?
What's the plan? So I'll turn this on you now. As you think about this point in your career, you know, you've got multiple partners now in this firm. As you think about this moment for you in this firm in private equity, what's your dream and what's the plan?
My dream goes back to my children. I think it's like I really do want to pay it forward. My dream is, and I think you know, I asked my dad the other day because he bothered me all my life. What's your dream? He told me 110. So I guess my dream is 110.
I'm sorry. What is 110?
110 years old.
Oh,
I believe.
I like that. I like that. I love
Sorry
that.
about that. You're not old enough to think about that.
Yeah, exactly.
In about 10 years, you'll be like, I know what 110 is.
Yeah, exactly. He's like 110%. I love that. I'll always give 110%. No, 110 years.
Old.
Yeah. All right, Steve Young, this has been a treat. I've been looking forward to this.
I can't wait. This is I feel like you guys came to talk to me. I want more conversation with you guys. Really.
Anytime.
I want to stay connected to you, Alex. I think you and I are chewing on a lot of the same stuff.
I love what you're doing. I have a tremendous amount of respect and admiration for you.
Me too.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with the close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and final approval could still take several days. Oil is falling on signs of progress towards a deal with Iran. Lower prices could mean a break for U.S. travelers. The Memorial Day holiday traditionally marking the unofficial start of the summer, a period where demand for gasoline, diesel, and jet fuel typically rises. And Pope Leo said artificial intelligence should be disarmed to protect humanity. In his address to the Catholic Church, the Pope called for making AI more human-friendly, shifting away from using it to achieve geopolitical or commercial gains. Pope Leo also warned against world leaders against not using war as a political tactic to distract voters from domestic problems. A quick check on the markets for you. We're seeing really that Iran story ripple through markets across the globe. You can see it represented here on European equity markets. The Stock 600 Europe up almost 0.9%. The DAX over in Germany up 1.5%. CAC 40 over in France up almost 1.7%. And of course, those NASDAQ futures trading higher there in the pre-market, expecting a cash open tomorrow that could very well be another all-time record high. The euro, for its part this morning, also catching a bid against the dollar. If you look at the yield story across Europe, its yields down. In Germany, you see they're down 9 basis points. Really sort of questions about whether or not the ECB will move in June, if indeed we do get a deal from the Iranians and the United States. We'll send you back to tape programming and bring you another live update in just about 30 minutes. I'm Oliver Crook, and this is Bloomberg.
I feel just to build upon what baseball's already doing is just to allow the authenticity to just flourish. Let's see these players behind the helmet. What is it they love to do? A lot of them are so good at other things in baseball.
Yeah.
Hunter Green is a great artist. Willie Adames loves architecture. Like, being able to tell those stories beyond just who they are as players, let's see that, let's understand that, but then also allow them to be who they are.
Welcome back to The Deal. I'm Jason Kelly.
I'm Alex Rodriguez.
Coming up on this week's episode, A.J. Andrews. This is a standout softball player who's now an MLB broadcaster, so someone you have a lot of questions for.
Yeah, Jace, everyone I respect, I want to ask two questions. Number one, how do we avoid a Major League Baseball work stoppage after the 2026 season? And the second one is, how do we build on this great momentum that Major League Baseball has built over the last 6 months?
Well, and she has built quite a career for herself and has, I think, a lot of opinions about what should happen next. Coming up in The Deal, A.J. Andrews. All right, A.J. Andrews, welcome to The Deal. We're so excited to have you with us. Lots to talk about across your career. We're going to talk a little LSU, a little softball, but I think we got to start with baseball.
Why not? Right?
Yeah.
Okay.
Take it away.
So, AJ, first of all, I love what you're doing. I'm a big fan of your work. I'm an admirer from afar.
Ditto.
Thank you. And we have a lot in common. You know, we're both from Florida. You Tampa, me Miami. We're both former Gold Glove winners. Okay.
Love that. Thanks for throwing that one in there.
And we're in the world of baseball and covering media. But you and I happen to be at the World Baseball Classic down in Miami. And it seems to me, and Jason, we've talked a lot about this, that baseball could be at an all-time high or is going through a great moment. How do you keep baseball going, and how do you see the world of business and baseball right now?
I don't know how you felt at the World Baseball Classic, but it was one of the most electric environments I had ever been able to experience within baseball, and being able to connect with so many different fan bases and watch the games. It felt like postseason baseball every single game. And so I feel like within WBC, I feel being able to allow the players to continue to have that much enthusiasm, excitement throughout the regular season, whether you be pimping it, the celebrations around the bases, the passion, the energy. I really feel like it was palpable. You could feel it through the screen. And so for me, I feel like in order for baseball to continue in that trajectory, seeing more of that, I think would be fun. I feel right now within baseball and even softball, there's a lot of playing the right way, whatever that means. I feel as if players should be able to express themselves how they want to express themselves on the field. So I see it growing if we can continue in that trajectory. And also players being able to wear their swag, the cleats. I don't know how you feel, you can now have a beard as a Yankee, things like that. Like just different things that we didn't really see in the past. I think moving, especially and tailoring more toward a younger generation, I feel like that is where baseball probably needs to go to continue to watch.
That. I mean, beard didn't apply to me because I'm still trying to grow a beard. And I can't.
Hey, listen, you look good, but not everybody can pull it off, right?
True.
Beards are makeup for some men. So
there you go. And so just on the WBC for a second, I mean, you were in the fan zone. You were doing some broadcasting from there, but this is about the fans at the end of the day. What was the fan vibe, and what did you hear from them, I guess?
Well, I don't know if you guys know, but I have been adopted by the Venezuelans.
Wow.
They love me over there. It was so fun.
Huge in Venezuela.
I'm huge in Venezuela. huge in Venezuela. I got to go. I just tried the arepa, so I understand the arepa power now. Like, I'm in it.
I mean, good pronunciation.
Yeah. Right,
wow.
the arepa. I'm in there. But I feel like with the fans, they just want to be represented. And because I was out there, whether it be the U.S. fans, Venezuela, Dominican Republic, it didn't matter. The pride within being able to see people that come from where you come from excelling on such a high stage in a sport that means so much to your country, whether it's the United States or where have you. It was so exciting to watch. And I feel like what the fans really want is to be able to feel as if they're being represented in a huge way.
Yeah.
So Dominican Republic, the energy and their pride in being able to be the instruments or being able to dance and celebrate, being able to see that on the field, it was as if it was like the pride on display.
Yeah.
Same thing with the Venezuelans. And so, in the same thing in which whatever it is within American pride, or the same thing, be able to watch Aaron Judge walk out with the flag, just being able to watch these things that really dignify or accentuate who you are as a country. That's what the fans wanted to see, but being authentic and expressed to the fullest extent.
So, AJ, I have a question. We had a debate before every game. We have the pregame show with Fox with Derek Jeter, Poppy, myself, and Kevin Burkhardt.
Mm-hmm.
And Poppy and I sit in the middle. And we were trying to explain to our cornermen that for countries like Dominican Republic or Venezuela, this is bigger than a World Series.
Right.
And they had a hard time really understanding that.
Yeah.
Where do you sit in that role?
I agree.
You
And I
agree?
mean, the players, they say it.
Right.
Like, this isn't an opinion, and right? This is genuinely how they feel, but it's because it's an opportunity where it's just a different feeling when you can play with individuals that come from where you come from, have experienced the same hardships you've experienced, that look like you, they understand to the fullest what it took for you to get here, the pride being able to represent your country. And there's so many people at home that would kill to be in Miami to watch these games, right? And I mean, I feel like you can relate it to the Olympics if you want to, right? The pride people have for competing for their country in that sense. It's the same thing with the WBC. And so I feel like it's fairly simple to understand why it would be a little bit more impactful to some people than a World Series.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Let's talk about you specifically and your career, because you hit college at a moment and at a school where softball, it felt like, from the outside at least, just was exploding. Did it feel like something special was happening in the game and in the sport when you were in college?
Yeah, I feel because it started getting more TV time.
Yeah.
And because of that, I went to the World Series twice at LSU. So I went my freshman year, I went my senior year. I believe my freshman year, they were really only televising the World Series.
Yeah.
Or maybe there was supers, but for the most part, it was the World Series. By my senior year, you had the regionals, the super regionals, and the World Series being televised. And because of that, you're able to then, you know, when you watch somebody in the regionals and maybe you get attached to a person or a player, you're going to watch them throughout the entire time. But being able to see these different stories and these different athletes compete, it only exploded and excelled or propelled what we see today, where now there's games on every single weekend, if not every day, with college softball. And I feel like that argument had been going on for so long between the chicken and the egg of, do we give these women the opportunity to be on TV, or do we wait till the viewership is there and then put them on TV? And it only proved the point that if you build it, they will come.
Yeah.
Give us an opportunity to be on television. The game speaks for itself. If you love baseball, you're going to love softball. It's faster paced. The depth is different. You have to have quicker reactions. There's slappers. It's a bunch of Ichiros running around. Like, there's just a lot of fun within the game of softball.
Now you're speaking his language.
Right. You know what I mean? Like, there's just a lot to softball that you don't necessarily get in baseball. Because of that, you're going to love both.
Yeah.
So, like, give it a shot. And I feel like at that time, especially my senior year, is when it started to explode. And now it's just a supernova.
You've seen what happened in the WNBA. What do you think softball can do to learn from that? And what is the future of softball with these numbers we just talked about?
Yeah, I think it's only going to continue to get bigger. I mean, Kim Ng is now the commissioner for the AUSL. And so that's
Athletes Unlimited.
Athletes Unlimited Softball League. Last year there were 4 teams. Now there's 6. So it is continuing to grow. And now they actually have cities. Before it was kind of a barnyard system where you would move and play them in different cities. But now they have homes, each 6 cities. And so I think that within what I've seen from basketball, WNBA, is a lot of it's the storytelling and giving these women the opportunity to be 1,000% who they are. I love it when you can see women in these positions of she's extremely powerful or she is dominant, talking about her as if she's just completely taking over the way in which she is. And I want those storylines to be built the same way within softball. This past year, Brie Ellis is someone that comes to mind. They were comparing her a lot to Barry Bonds. And so it being the conversation of, okay, well, build upon that, but hopefully making it her own, not necessarily like she's the female Barry Bonds.
She's the
this
X
is
of
Brie
this,
Ellis, who is XYZ, the best of the best, and have those stories where people, you pique the interest and then come in and want to watch more. But I think MLB is doing a good job. They have the partnership with AUSL now as far as trying to help with TV, also making financial help with the league. But I think we're moving in a good direction. This is going to be the 2nd year of AUSL. So my sister's on the Talons, so if you're looking for somebody to root for.
Yeah, okay.
The Talons.
Well, and the storytelling piece is definitely a big part of this. It goes back to exactly what you guys were saying about World Baseball Classic. It's like you've been saying this like for a long time, getting to know these players in a way that we do get to know NBA players. We do even more than we used to get to know NFL players, certainly. Baseball players are, kind of hidden from us, and softball players, I think, the same way. I don't know if it's the nature of the game or what it is.
Well, I like what you said, AJ. I think what WBC brings out, it takes the helmet off the player.
Yeah.
And it unveils the person of who and the why and where you come from. And the way you fall in love with players, both men and women, is knowing their backstory.
Yeah.
Where do they come from? Is there a relatability connect point? Like, we're both from Florida.
Yeah.
Gold Glovers. Okay, now we can connect on that, right? And I think WBC does it in such a beautiful way that I'm left starved for more. And I want to see more players being themselves, being unapologetic. If they want to wear pink, orange, green, wear whatever the hell you want.
Yeah.
Just play, Edgar Martinez, my great teammate, Hall of Famer for the Seattle Mariners, he used to tell me, Alex, you feel good, you look good, you play good. And I think the same is true for all sports.
Yeah.
Right.
No, I agree. I think definitely to your point, the storytelling would be a great piece, especially I feel like what's hot are the girls that come right out of college.
Yeah.
Right. So being able to tell more of those stories, allow people to really follow them into their teams, because then, of course, you're fans of them, but then you become fans of their teammates and the team. Like, to me right now, Nigeria Kennedy, who's a pitcher at Texas Tech, who knocked off the dynasty of OU last year. Right. And she's the one that has the first million with Mahomes at Texas Tech. And so being able to follow her, right, tell that storytelling, to your point, build that story, build it upon whatever team she's going to be with AU, and then us be able to build upon that. Same thing with a lot of different athletes that are going to be coming out. I think that's a good way to do it, to build the fandom and the stories.
So, Jace, I love what AJ's saying here, like a deal on a deal here, because I love riding off the wave and the momentum of a college, NCAA, the fanfare into the next level. Well, you create a Netflix show or a Bloomberg show or whatever, and you follow 6 of your favorite women softball players, and you do a journey about 18 months from the time their senior year to their first year, and kind of take us under the challenges, the travel.
Right.
I
what
would
it
love
looks
that.
like.
What it looks like, exactly.
Listen, I'll host if you guys want to fund.
There you go.
There you go.
All right, we're putting that out. We're putting that out into the world. There's a really cool moment, and I want you to share this story with our audience, where you obviously are interested in business. You're interested in the business of sports. You've got your mindset on being a sports agent, and Jessica Mendoza says, "What about this other path? Can you tell us that story?"
Yeah. So it was my senior year in college, and I had been asked a lot to do a lot of interviews. And so Jessica Mendoza was one of the individuals that would often interview me. And I remember it was after we had the SEC tournament was at LSU my senior year. And so she just asked me after one of the interviews if I ever thought about being on camera. And at that point, I was actually already on camera. I had a show called My Way with AJ at LSU, which is a YouTube show. I just competed against the different LSU athletes. So I told her, I was like, yeah, I'd love to. I just never envisioned a career in it. And so after she said that to me, though, I really just started thinking a little bit more of it. And I said, okay, yeah, that's actually something I would like to do. And so I went back to school and got my master's degree in mass comm and broadcast journalism.
That's incredible. My story with Jessica, I know her, Jace, I haven't told you this. We've known each other since basically teenagers, because first time I started falling in love with softball that I had real exposure was that Jenny Finch, Jessica Mendoza, U.S. Olympic team. And we did a little TV thing at the All-Star game. And we've been friends ever since. And then, of course, we worked together at ESPN on Sunday Night Baseball.
Yeah.
So she's fantastic. But my question is, what are the advantages of being a former athlete turned broadcaster? And is there any disadvantages?
I think the advantages are you're able to kind of see things in a different perspective when you're explaining, whether it be to the public, to the fans, or just having conversations with the athlete. Because when you're talking about maybe a play that happened, and in an ideal world, this is what could have happened or should have happened, you're able to explain why maybe that didn't go the way that it was supposed to go or could have gone. And then in the same conversation, if you're having a conversation with the athlete, you're able to explain or talk to them. It's like, no, I understand this, what happened. So why did you do this? So, because I would have done it this way, or I know so-and-so does it this way. Does it help you because of this?
Yeah.
And so I think if you being able to have the knowledge or the experience as an athlete, even if it's a different sport, of everybody knows that drive and the competitiveness it takes to get to from point A to point B. And I think being able to relate in that fashion allows conversations to flow in a different way, or for you to explain things that maybe might be a little bit different. I'm curious if you feel the same way.
I do. And I think one of the things that I really was really careful in my early days with broadcasting was, as a former athlete, you can talk above the audience a little bit. And I always thought my audience were my two daughters, right? When they were in 3rd and 5th grade, really kind of unpack it where it's really digestible. But also I think practicing empathy and compassion.
Yeah.
Because they say the further you get away from your playing days and the further you get away from the field, the easier it is for you. And you can't forget how hard the game is.
Right.
Because it is really, really difficult.
Right.
So I think explaining that and giving it its due justice, I think is equally as important as trying to make it sound like everything should be done or should have done it better.
Exactly. That's how I feel in regards to saying, yes, I understand that this is what should have happened. To me, it's kind of being like, listen, they know that.
Yeah.
There's nobody beating them up right now more than they are in their own mind as that athlete. And so what they're going to do, or what they should do, the adjustment they're probably looking to make is this.
Yeah.
And I think, to your point, that empathy.
I love, AJ, what you said about sometimes on TV, when you slow it down 500 times with 25 TV angles, it looks so simple at home.
Right.
But I think I like what you said. Yes, he should have made that play. He'll be the first one to say that. But think about it this way.
Or even the first thing that comes to my mind is the first time I transitioned from center field to left field. And if you have never been put in left field and had a lefty come up to bat against a pitcher that throws a screwball, the ball, you wouldn't know. If you didn't take reps, you would not know that no matter where you are, where it's placed, that batter is going to start here, but it will always end over here. So you have to know that no matter how much you want to take that step to your right, you have to go left, because it's going to go left. And if you haven't played that, even if you're a softball player, baseball player, if you have not gone to left field, because from center field, I'm not going to be able to tell you that. I only know that because I played left. So I do believe being an athlete in that regard, it really helps break down the game another layer.
Jace, I'm going to nerd out. But she's
You're
getting
going
me.
deep
Alex
on
said,
this.
I'm going
I love
deep.
it. I
You've
love
never
it.
heard me talk
I love
deep
it.
baseball,
Yeah,
but
I
AJ's
know.
getting the best out of me. When I went from shortstop to third base as a New York Yankee, a little bit like you going from center to left, very similar, is I had no problem with fly balls, because fly balls for shortstop, they're true. They stayed very true. And if it was way to my right, like, the third baseman had it. I came to Yankee Stadium and I played third base, and I would see balls that would start like in the upper deck, and I would just give up on it. And that ball would start coming back. And all of a sudden, it got into my head. I was terrible at fly balls the last 5 or 6 years of my career. If a ball went up, I would say, Jeter! Grab it! It was crazy. So I can relate with that. But how can someone at home like Jason know that? Like, he just says a fly ball's a fly ball.
Exactly.
But not all fly balls are created equal.
They're not created equal. And the sun is the biggest bully.
Yeah.
the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
So let's talk about Major League Baseball a little bit. You've got a show on the MLB network, Play Ball, Saturday mornings, right?
Yeah, Play Ball.
So this is fascinating to me because it's coming at this moment, as Alex said earlier, where baseball's in growth mode, maybe for the first time in a while, like really sort of feeling like, all right, we're going to bring new people in. Help us understand sort of the business case for the show and sort of how it came about and what you're excited about.
Sure. So I've been hosting Play Ball for the last 4 years. It's very much tailored towards kids,
Right.
but it is a highlight show that just kind of showcases what happens the week prior within baseball. And then it's a lot of giving instruction, or you'll have a lot of players talk about their favorite moments, their big moments, what it is that they did when they were younger, big inspiration. And then also kind of breaking down a lot of different plays, or maybe it was a good play that happened or a great hit. A lot of times they'll have me do demos. So I'll demonstrate whether it is a slide, a Turner slide, or if it was a catch from Judge, or if it was a great diving play somebody made. So it's a lot of different parts, a lot of moving parts, but it's tailored to try to be fun for the kid to get invested into it,
Right.
the child to get invested.
All right. So as we wrap up, there's one thing that I wanted to do with both of you, which is very of the moment when it comes to baseball. And Alex teed it up at the beginning of the episode, which is critical moment. What needs to happen next? I'm going to give you 30 seconds. What needs to happen?
Oh, God. Baseball needs
You can take
to...
more than 30 seconds.
Okay, thanks. Yeah, I felt the timer
You're a sprinter.
ticking. I feel just to build upon what baseball's already doing is just to allow the authenticity to just flourish in the biggest facets. I believe storytelling as well. Let's see these players behind the helmet. What is it they love to do? A lot of them are so good at other things in baseball.
Yeah.
Hunter Green is a great artist. Willie Adames loves architecture. Like being able to tell those stories beyond just who they are as players. Let's see that. Let's understand that. But then also allow them, once you see who they are, allow them to be who they are when they get on the field. And so, I don't know, I'm a big bat flip fan. I'm a big go around the bases loud as you can. The way in which they were showing off the Dominican Republic jersey, let them do it with their Rays jersey or Yankees jersey or whatever. That's, to me, I feel like that's the next move. I feel like kids love it.
More bat flips.
More everything. More, just be authentic. I mean, I think forever baseball was America's pastime, and it was number one above football and basketball. I'm dating myself a little bit back in the 70s and 80s. But I do think they need to just let it rip. More access in the clubhouse. Everything magical happens before the first pitch, but yet we lock that down.
Right.
And I think it's a great multi-billion-dollar media property if we unlock that and allow people to see, how does Ohtani prepare? How does Judge prepare? Adames, what's he doing? I think it's a great opportunity for baseball. More is more.
Do you think there's going to be a lockout?
It sounds like it.
Yeah.
It sounds like it. But you know what's great about that? I mean, it's not great, but you know what?
Please tell me.
What you can do if you are starving for a baseball, you can watch Athletes Unlimited Softball League and listen to my podcast where I'm talking all things women in softball and also baseball.
What is the name of your podcast?
It's called Dropping Diamonds.
Okay.
So come on and drop. I want you guys to come on. Come on in.
Jason would love to go on. He's
Drop
really
your
good.
diamonds.
If you were coming up now, would you play baseball?
No, I still probably play softball.
Yeah.
I think it's just different. For me, what drew me, I played a lot of different sports when I was younger. So I played soccer, played basketball, played softball, and everything else was it's sports, right? And from softball, I remember my first memory why I loved the game. I made a diving catch on it was really wet outside from Florida, dewy grass. And I slid like it was a slip and slide. And so I was hooked. And so for me, there's the aspects that you get with softball that you're just not going to get in any other sport, I think are what hooked me. So I think it'd still be softball.
All right. All right, let's do rapid fire. So it's just a handful of questions. Just first thing that pops to your mind, we'll bounce it back and forth.
Okay.
You're going to be really good at this. All right.
All right.
Favorite baseball player of all time?
All time. Griffey.
Favorite softball player of all time?
Josh Wally.
Favorite World Baseball Classic 2026 game or moment?
Probably moment was me celebrating with the Venezuelans when they beat Italy.
Most exciting MLB player?
I love watching Jazz. Jazz doesn't play.
Storyline you're most looking forward to in the 26 MLB season?
What the Mariners are going to do after last year.
What team do you want to see win a championship more
The
than
Mariners.
Oh, the Mariners.
I really wanted them to win last year. I did, yeah. I'm not gonna lie.
Wow.
I just think if we...
Explain this to me. You're a Tampa girl.
I know.
And you love my former team. What is that about?
I know. You know, it's not... I just think it would have been really cool to watch them win.
Yeah.
The first one.
They had a good run.
I'm a big underdog person, so...
And finally, what's your dream hosting gig?
That's fun. Probably get all the greats in every sport ever, and we just have one big show of who's the best.
Wow.
It's like a all
feats of
sports
strength?
Olympics. Yeah.
Whoa.
When do we show up?
Right? You too.
All right. I'll be there on the sidelines documenting it. AJ,
That would
this
be
was
fun.
really, really fun. Thank you for doing this.
Thank you. Thank you for having me.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's what's making the headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. Secretary of State Marco Rubio spoke to reporters in New Delhi.
We're still a work in progress. As I said, we thought we might have some news last night. Maybe today. I wouldn't read too much into it. It takes a little while to hear back. So we have what I think is a pretty solid thing on the table.
Turning to the Fed, BlackRock's head of global fixed income for Asia Pacific says the central bank may have enough reason to justify an interest rate cut rather than the much talked about hike under the new chair, Kevin Warsh. BlackRock saying, quote, there is going to be some pressure on the labor market that could suggest either doing nothing or a cut. And prediction market platform Polymarket has been banned in Indonesia, where authorities classified it as a form of online gambling after a wager on the possible early end of the president's rule spread widely on social media. The government said it will not tolerate online gambling and has intensified its crackdown since the current administration took office in October of 2024. And back in the United States, President Donald Trump will head to Walter Reed for a medical and dental checkup tomorrow. The White House has repeatedly said that the almost 80-year-old president is in, quote, excellent health, but some lawmakers and physicians have called for more transparency and independence assessments of his health. Let's check in on the markets very quickly. We are seeing the Iran rally very much taken with full stride and enthusiasm in equity markets really across the globe. You saw it in Asia this morning, the Nikkei closing down, up almost 3% over in Asia. Here you're seeing a similar story in Europe with the Europe Stock 600 up 0.9%, the DAX up 1.5%, the CAC 40 over in France up 1.7%. We should say the FTSE MIB over in Italy also broke its all-time record high briefly there, passing through a record it had not seen since the year 2000. And of course, looking at the NASDAQ over in the United States, the unstoppable tech rally in the United States likely to get another bid when the markets open tomorrow. You can see there NASDAQ futures up 1.4%. In the currency market, the euro is gaining against the dollar, up 1/3%. German yields down 9 basis points, and that is really the story you're seeing across Europe this morning. Yields down as some question about whether or not the ECB will have to hike rates if you do indeed have some sort of resolution on the Iran conflict. Brent oil down about 6%, and gold spot catching a slight bid this morning. We'll send you back to tape programming, and we'll bring you another live update in just under 30 minutes. I'm Oliver Crook, and this is Bloomberg.
MLB, NBA, NFL. Do you think in our lifetime, the three of us, there will ever be institutional capital that takes full control of one of those 92 teams?
Within those 3 leagues, it will happen in our lifetime, but there needs to be substantial infrastructure and real estate adjacency to justify these valuations. Otherwise, these valuations are going to turn out to be probably too high.
All right, Alex, we're back at Bloomberg Invest. Massive conversation on stage, live taping of the deal with Alan Waxman, co-founder, CEO of Sixth Street Partners. They own across lots of sports, but I know there's one deal you're especially interested in.
I am, and that's his acquisition of a minority stake of the New England Patriots. And I want to know how he cracked the code with Robert and Jonathan Kraft, who are in Mount Rushmore of my ownership groups.
He's also done deals across soccer, basketball, and baseball. So I have a prediction. You guys are going to fix baseball.
Okay, let's go.
All right, let's do it.
Please welcome to the stage Alan Waxman for a live taping of the deal with Bloomberg's Jason Kelly and Alex Rodriguez.
Alan Waxman, great to see you. I want to set the table a little bit and talk about Sixth Street, your firm, because I think it's hard to understand, Alex, the context of what you're doing in sports without understanding the context of the firm and even some of what's going on in the world right now. So 30 seconds, give or take. What's the Sixth Street investing ethos?
Complete flexibility. We invest across, from day one, built the firm to invest across asset classes, geographies, sectors. Where's the best relative risk reward? And we do that by having a team and a culture of people that are over themselves, no egos, no BS, no politics, no fiefdoms. We built our architecture to be an investor-first architecture. So we didn't build it to raise the bigger and biggest funds. We raised smaller strategy funds so that we raise those funds to the size of the opportunity. And then we have extensive capabilities. And that's how we built our firm from day one. That allows us to look across ecosystems and to find the best themes and the best opportunities.
Wax, you were one of the early movers in sports, and you saw this early. You made that early acquisition, getting into the San Antonio Spurs right after COVID. Yep. But as a co-owner today, I have my Mount Rushmore of owners. And 2 that sit right on top of that list are Robert and Jonathan Kraft. Yep. I am fascinated by this deal. How did it start? Do you call Robert? Does Jonathan call you? Walk us through it.
First of all, I spoke to Robert and Jonathan before this, and they speak so highly of Alex. So you've got some big fans there.
Thank you.
My name didn't come up, just for the record, but go on.
So, by the way, Jason's super talented, too.
Thank you. I really appreciate it.
I talked to a lot of people before this, so they said you're super talented, too. Look, this all starts, so we went through just context. The NFL didn't allow private equity or private capital, because we don't really think of ourselves as a private equity firm, but they didn't allow institutional investors. So the NFL ran this big process. Some might say it was a proctology exam. And you go through a process where they're trying to select, 2, 3, 4 people that have sort of a golden key to invest in the NFL. But coming out of that process, the CFO, I don't think I've ever told this story publicly, but the CFO of the NFL, Joe Sinclair, This is after we got approved. Basically sent me an email. He said, hey, and he was kind of the front lines of their due diligence on us and others. And he said, hey, have you ever met Robert or Jonathan Kraft? I think you culturally would get along with them. You should meet them. And they weren't, looking to do, minority equity investment. So he connected us. We got together, and I'm summarizing this, but literally instantaneously, it almost felt like family, where we had alignment on team values, team culture, and clarity of purpose, which obviously you see the results of what the New England Patriots have done, but what you don't see is all the little things, those micro things they did in terms of running the organization, and we just clicked right away. And that's, by the way, consistent. When you look at all the other sports teams we've invested in, they're all global champions. Real Madrid, Barcelona, San Francisco Giants, San Antonio Spurs, Boston Celtics. Like there's a theme here. But the one common denominator between all of them is alignment on culture, values, and clarity of purpose.
I have a quick follow-up on that for you, Wax. So once you get through all the hugging and family and alignment and pricing, do they say 9? Do you say 6? Does it go back and forth? Or is that more, here's what we're looking for, you agree?
The way that we do business and the way that I think the Crafts do business, both Robert and Jonathan, is this is a long-term relationship. And the last thing you want to do in getting a partner is a back and forth. It's you kind of know what's fair, and you're just trying to solve for fairness. And it was a very short conversation, and we agreed on it. We got in business together. But you can just tell, by the way, it's not just sports. It's any company we invest in. You can get a sense when you're in the meeting, you're watching the way they treat their employees, the way they treat junior people. You talk to different people in the company or the teams. Are they all saying the same things? Are they saying 7 different things? And you can tell by just meeting everyone what that culture is, what the values are, and obviously do they have clarity of purpose.
And so let's talk about investing in the NFL, because you rightly pointed out this was a long process. The NFL was really the last of the major North American leagues and almost any league in the world to really embrace institutional capital. But what was it about this particular deal financially? And as you figured out how to underwrite this and did the diligence, what was it about this franchise and this sport that made it a compelling investment? As a minority shareholder, no rights. I mean, this is, you're in it, but they're running it.
Look, the first thing is what's the durability of the league? What's the leadership of the league? They're A+. All you have to do is spend time with Roger.
Goodell.
Yeah, I mean, Roger Goodell. I mean, and the people below him, the owner, it's a world-class organization. Then you get into sort of the market, the Boston sports market. We're also the Boston Celtics. It's a great sports market. It's a great fan base. And look, I think with all these...
You are in New York, just as a reminder.
New York's a great...
Red Sox are next.
By the way, we're partners with the New York Yankees, and they're great fan base too. It's not exclusive. Everyone's got their own cultures. But look, I think at the end of the day, for us, the league itself, the durability of the league, the international expansion opportunities, the fact that just all these brands historically, if you go back 20 years ago, these brands were local brands. You have to get the local right. But once you have the local right, the global opportunity for all these brands, take Wemby, we're investing in the San Antonio Spurs. I went last year when they were playing in Paris. It was literally like an NBA Finals game. So you just turned on an entire country. And that's happening all over the place. And the NFL, those opportunities, the international opportunities are the same. So look, for us, it was pretty easy. But again, this wasn't a competitive process. It was a handshake. It was a set of relationships. And that's how almost all of our deals have happened in the sports ecosystem.
How do you think private equity, private capital has performed so far? Has it been about what you thought it would be in terms of the uptake from the teams, the uptake from the funds? Where is it now? Where does it go next?
I think it's happened about kind of what we'd expect.
Because it's been fairly minimal.
Yeah, I think about what we would expect. I think the challenge is, and this is why I think there's an important delineation between private equity and private capital.
Yeah.
Because a lot of private equity capital, the liability or the fund structures, you have to sell the asset in 5 to 7 years. That is a terrible idea for investing in a sports team, whether it's a control or minority. So our vehicle, we have very patient capital, which is why I think that really matters. You know, a lot of these guys owning these teams, they don't have to sell. Like, they don't have to do anything, and some of them just want good partners. So it's kind of happened what I expect. I would expect over time, if valuations continue to increase, it's just going to continue to grow. But, and this is really, I think, the next wave of sports, is there needs to be substantial infrastructure and real estate adjacency investment to justify these valuations. Otherwise, these valuations are going to turn out to be, in a lot of cases, not all cases, probably too high.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
I got one more on the NFL, just because it's such a juggernaut. Do you want to go first?
No,
okay.
I want.
I love when you guys flow.
Yeah.
I love when you guys
We're like a
flow
married couple.
this. Okay.
Anyways, Wax, when you think about the NFL is such a juggernaut, and when you look at just P&L and you dig down into just the thesis of an investment, right? Is it, when you look at an NFL team, is it the market? Is it scarcity, appreciation, cash flow? What are the things that excite you in 6th Street about deploying capital in football?
I think it's all those things. It's scarcity. Obviously, different markets matter. Ownership, culture, values, clarity of purpose, that matters. But again, you know, it doesn't take a long time. If you look at every youth in the world, everyone's picking up their phone all the time. AI is just going to continue to consume people's time. And I think the other thing is that the sort of exporting of sports, particularly global brands into other markets, is going to continue to increase. And I think that's an opportunity for the NFL.
It's interesting to think about your...
Can I ask you guys a question?
Sure.
What do you guys think?
Jason will take any question.
Flip that question around. How would you guys talk to a lot of smart people. How would you guys answer that?
Underwriting the NFL?
Yeah.
I mean, I'll answer because you prodded me into it. It's really hard to do. I mean, I think the point you made about the international opportunity, I think, is one that was underappreciated for a long time with the NFL. And I think even the NFL didn't quite fully appreciate what the market was. And I think as it's invested more and more, you know, I did a piece about Shad Khan of the Jaguars and Fulham FC a few years ago, and understanding through his eyes, he was obviously a pioneer with the London based games. I think that international piece, I mean, I know you've spent a lot of time with Roger Goodell and others. I mean, that seems to be the real growth market in terms of both fans and really the technology is such, and I think and we'll talk about this, I think, in the NBA section too, if you can truly globalize American football, I mean, good Lord.
Here's what I can tell you with fact. There's excess demand for sports teams internationally in cities that want to bring NFL games to their markets.
Yeah.
So not to dodge your question, so it's kind of the things that I talked about that I really like about the NFL is the market is very important. The scarcity. Now think about if you're in real estate and there's only 32 beachfront properties and you own one of them. So I would think about that. The combination of appreciation and cash flow, it's very rare in sports. And to have that like a moat that you can actually underwrite it and it's like A paper as A paper can get, because obviously the national TV deal is going to get probably richer here. And then I would say I would over-index in leadership. And I think Roger Goodell is best in class, as good as they get as far as commissioner. And then when you have a guy like Robert Kraft and Jonathan, that makes it. Because at the end of the day, forget what the numbers say, you still have to be in partners with families, like a marriage. And that's how I would look at it.
100%. And I'd say across the NFL, there's some great owners across the NFL.
All right, you want to talk some hoop?
Sure.
All right. The NBA is interesting, and you have such a fascinating lens here, Wax, because you went into the Spurs 6 years ago, five and change.
Yeah, 5 and change.
And then you go into the Celtics, a number of years later. The valuation differential alone is massive. How did the opportunity evolve? How did it change as you've sort of seen the NBA 5-6 years ago and the NBA today from a business perspective?
From an institutional investor standpoint? Well, first of all, we were one of the first. I think we're the first or the second institutional investor in the NBA where, the San Antonio Spurs, we just literally, they changed the rules and we cold called the San Antonio Spurs. So it was...
You literally just picked up the phone and like, R.C. Buford, what's up, bro?
To be fair, it's my colleague, Austin Bowers, picked up the phone, and that's what we do. Like, we just picked up the phone. I grew up in Austin, so we had a view, an Austin-San Antonio view, but that was different.
All these people are like, ooh, cold calling. Okay, I'm going to do that. Go ahead.
Don't be afraid. Just be really a real person and just ask good questions. You'll be fine. Sorry, that was unsolicited advice, so whoever was talking in the audience. But so look, I think back then, that was in the middle of COVID, so very different environment. These, revenue had gone to a zero for a lot of these teams, or significantly reduced. So very different environment. I would say it's maturing. There's more people that are obviously getting into it. So I'd say that the competitive landscape is different. So that's different. But on the other hand,
competitive landscape from an investor perspective.
There's just more which is a good thing. There's the gentrification of the asset class. Like we were always interested in investing in sports. Themes are only as good if it's investable. Maybe in public markets, you can express a theme, but in private markets, you could have the best theme in the world, but if it's not investable, then it's a waste of time. And COVID made it investable. So that really opened it up and started to gentrify. Today, it's very different. First of all, we're at the beginning of a new media deal. So there's massive re-rating. So that's different, but there's also a lot more capital. But again, the international opportunity in the NBA, it's massive. You look at the demographics, you look at the number of NBA players that are from different countries. And again, it takes one player on one team from one country to open up that country and open up that country in terms of possible engagement of new fans.
Was that similar to you? Is that what you guys saw in 20?
Yeah, we came in around the same time, right after COVID, which was a very scary time. I remember my mom saying, what are you doing? Like, you have the Disney bubble, these stadiums you're going to go crazy. Like, you shouldn't do this. I said, Mom, I think I'm okay. She made me think a little bit. But what's exciting about the NBA as we saw it, as you look at where we are today in 2026, the last 8 MVPs have been non-Americans. And then when you think about the global footprint that Wax is talking about and the opportunity, I think we're really in the early innings of where we're going to go as the NBA. So it's very exciting.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And
I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's interesting as we think back over let's just make it about us for a second. As we think back over the course of this show's history, one of our earliest guests was Brandy Chastain, one of your co-owners in Bay FC. And what was so interesting for us who followed this so closely as a business, your investment in Bay FC, an expansion team at the time, was radical and new because you were the first institutional fund that was allowed to become a control owner of a major U.S. sports team. Tell us a little bit about that deal from we sort of heard the Brandy perspective, sort of coming in as a player, but this is new territory at that time for a fund.
Never have we made an investment where people thought we were crazy, but from our standpoint, it's one of the most asymmetric investments we've ever made. So just for context, the last expansion fee before we bought BFC was, I think, $3 or $4 million. And we paid $53 million, I don't know, 2 or 3 years later. So people thought we were crazy. But what got us on the NWSL initially is my, at the time, 9-year-old daughter. She was on her iPad, and she was watching an NWSL game. And I was like, huh, that's kind of interesting. So look, through prodding, through a number of people around the ecosystem, like, you should take a look at this. So, and I'm summarizing, there's a lot, my wife was involved, so she was prodding me because she thought this was a great investment opportunity. She's much smarter than I am, by the way, applied mathematics major. But we started studying it, and we looked at the market, and at the time, like, a lot of the sponsorship revenue was in sort of the impact bucket. It wasn't in the CMO bucket, so the chief marketing officer versus the impact bucket. And that was just a major, major opportunity for us because we knew people were watching. And it's actually the only time in my entire investment career where I actually printed our investment thesis. I put it out there publicly. It's the first time and only time we've ever done that because I thought it was so asymmetric. And
you can find it on LinkedIn. I mean, it was a very popular LinkedIn post.
And I'm not a big social media, I don't even have social media, but we put it out there because we thought just for people to understand. And sure enough, now everyone's talking about it, and we're still at the early stages. But again, it's not going to be linear, the growth, but it's been a good investment for us.
Well, and to be clear, I mean, if you think about where the valuations have gone, where the expansion fees have gone, literally a year ago, we were sitting on the equivalent of the stage. I think we were actually downstairs with Melody Hobson. She paid substantially more for the Denver expansion franchise, I think 4 times more than you did to build in Denver. And obviously Willow Bay, who's been a guest in the show as well, she bought Angel City at a valuation of 250. So clearly it's going up.
It goes to anything. Ultimately, investing is about supply and demand. Like, it could be the best theme in the world, but if there's excess supply of capital, by the way, this might rhyme with private credit, excess supply of capital and low demand, that's not going to work out well. The thing, going back to what you said, Alex, is these are scarce assets. So there's valuable pieces of real estate, and as you start to sell expansion teams, there's less and less valuable real estate. And what I can tell you, and I'm going on the record here, is that what Melody and Willow, who are both 2 incredibly talented people, they're going to look very smart in about 3 or 4 years and what they paid, and you'll be having the same conversation to them, Melody and Willow, and you're going to be saying, people paid 4 times more.
Right.
That's my prediction. I'm going on the record on that.
Oh, I like when you go on the record.
Yeah.
Now we got it.
I guess we're live TV, so I guess we're already on the record, so there you go.
I'm following up a little bit on what Jason said, which I'm fascinated by this. Like Jason said, you're the first private institution, call it private equity institution of money, that's a control partner.
I think we're the only one.
The only one.
In the U.S.
My question is, on the big 3, MLB, NBA, NFL, do you think in our lifetime, the 3 of us, there will ever be institutional capital that takes full control of one of those 92 teams?
I got to be careful here, but I'm going to say within those 3 leagues, it will happen in our lifetime for the simple reason that if valuations continue to go up, which in order for that to happen, there needs to be hundreds of billions of dollars of infrastructure and real estate investment to make that happen. Just the size of these valuations is going to get to a point where there's only going to be a finite number of individuals. So again, there's no certainties, but probabilistically, if you sort of play that through, I think the leagues will look at it. Will it happen in our lifetime? I think anything can happen in our lifetime. So I'm going to say, especially we're going to live a long time, hopefully, knock on wood or something. But no, I think it'll happen in our lifetime. But if any of the commissioners of those 3 leagues are looking for it, I don't think it'll be probably probably a long time from now. That's what I would say.
You'll be mostly surfing and not investing.
I'm hoping I'm just surfing and not that. Yeah, exactly.
Costa Rica.
Yeah.
There you go. All right, you each have 30 seconds to tell me how we're going to fix baseball. Go, Alex.
Oh, boy. We're here at 30 seconds. It's a lot of pressure. So I would say I'm a contrarian, so I think the best time that I've seen in the last 15 years to invest in baseball is today because the amount of uncertainty. Uncertainty around the CBA, are they going to strike or not? I love that for an investor. The bet you're going to make is going to get better, not worse, because right now it's pretty, tight. And then the other one is that Rob Manfred is going to integrate all the regional rights into one and try to copy what Roger Goodell's done with the NFL, because the World Series showed us that if you have the right product, you have the right teams, you have the right stars, the right strategy, and good baseball. We had 53 million people watch the World Series Game 7 when you include the U.S. market, Japan, and Canada, and it was one of the best I've ever seen.
30 seconds. I'll throw it out there. I'm probably going to get some slack for this, but I'm going to throw out a straw man on just real quick, okay? So first of all, you got to get the minimum standards up, minimum salary across the league. I think you got to do that. And this is going to be a little controversial, but I think that each team, I think you should have a salary cap, but each team should have 1 or 2 designated players that can pay whatever they want. So if you want to pay someone $1 billion, they're worth Shohei Ohtani, worth $1 billion, you can pay them. So you get 1, 2, 3, something that doesn't upset the competitive balance, but allows teams for these superstars to make what they earn. And you put all that together, and then you get people like on the TV deal and media rights aligning interests. So they're trying to grow the pie together because, again, there's an international investment opportunity in baseball, and they've done a good job, but there's a lot more fruit out there. So I think getting away from the zero-sum game and trying to align interests, that would be my controversial, which I'll have 20.
And I jump on one because we're running out of time really quickly. I would say that from a union perspective, being a member of that union for almost 25 years, I think you want a union that, 70%, 80% of the revenue doesn't go to 10% of the players, but have a more democratic where everybody gets to eat a little bit.
Totally.
All right, it's all happening. Baseball's back. Alan Waxman, this is really fun. Thank you so much. Thank you, everyone.
Thanks.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and the final approval could still take several days. Oil is falling on the signs of progress towards a deal with Iran. Lower prices could mean a break for U.S. travelers as the Memorial Day holiday traditionally marks the unofficial start of the summer, a period where demand for gasoline, diesel, and jet fuel typically rises. And U.S. health authorities are planning a temporary bar for green card holders from re-entering the country if they've traveled to recently Ebola-affected areas. The interim rule will remain in place for 6 months or until the Health Secretary, Robert F. Kennedy Jr., determines that it is no longer needed. Authorities in the Democratic Republic of Congo had reported 867 suspected cases and 204 probable deaths as of Friday. And now a quick check on the markets. We're seeing really that optimism on the possible deal between the United States and Iran really sort of sending stocks higher really across the world. You saw it in Asia with the Nikkei closing up almost 3%. You see it there represented in Europe with the Stock 600 up almost 1 full percentage point. The DAX up 1.6%, the CAC 1.8%, and of course FTSE futures, and we should say the NASDAQ futures 1.4% higher, expecting an all-time record high for the NASDAQ on the cash trade tomorrow morning. Seeing it reverberate across other asset classes with the euro gaining this morning, and of course crude oil falling throughout the session today. We'll send you back to tape programming now. We'll bring you another live update in just about 30 minutes. I'm Oliver Crook, and this is Bloomberg.
This is a Sony Handycam. And about 3 decades ago, it featured an upgrade that changed the world. It wasn't the screen or the viewfinder, and it didn't replace this thing. It was the battery. The lithium-ion battery, to be exact, which was lighter and more powerful. And it was about to set off a massive change in consumer technology.
Suddenly, Sony had in its hand this product that was selling like hotcakes that it wanted to put not just in the one camcorder, but in every device it could find.
Over time, the price of batteries went down, and the power they packed went up.
And what we know from Wright's law is that the more you make something, the cheaper you can make it.
Fast forward to the 2020s, and batteries had improved in power and cost so much that they helped kick off another electronic revolution. This time, in automobiles. Now, just like with consumer electronics, batteries are helping make EVs more affordable, driving adoption around the world.
You're not driving a car, you're driving a battery. And China right now is the leader in batteries.
China's EVs are already cheaper on average than similar gas cars. And it's no surprise that 4 of the top 5 battery makers in the world are located here. Also, one of them, BYD, has been jockeying with Tesla for years for the title of the world's biggest EV maker. All that success means lots of competition at home, propelling China to look outward for expansion. And while some big markets like the US and the EU have resisted China's cheaper EVs, many emerging markets have brought them in.
They're kind of upsetting the chessboard of global power. No pun intended. Sorry.
That's okay. I love a pun. China's dominance in global lithium-ion has sparked companies worldwide to recharge their own efforts in battery technology, from new chemistry to production techniques, in an effort to disrupt the status quo. And with great power comes, well, a great opportunity for profit.
It sounds like distant thunder. It feels like the sound of money.
When you drive an electric vehicle, that car is powered by the movement of teeny tiny electrons, a clever bit of science that converts chemical energy to electricity. Inside a lithium-ion battery is a system built of layers. The cathode is on one side, often made up of a special combo of metals. And then there's the anode on the other side, usually made of graphite. In an EV battery, charged lithium atoms, called ions, move from one end to the other. And their electrons take the scenic route through an external circuit, creating the flow of electricity that makes the car go vroom, quietly. Between them is the all-important separator, because if the two ends touch, well, you get the picture. And the batteries are filled with a liquid electrolyte, which helps the ions flow between layers. But here's the thing. China's cornered the market on every one of these components. This is Sam Artem. He's a research analyst on the battery industry and knows a lot about the ins and outs of its supply chain.
A lot of people assumed that
we just dig up the raw materials and then we put them together in a battery cell, right? But in reality, this is a very complex, interwoven supply chain.
Let's take lithium, for example. I mean, it's in the name, right?
So things like lithium can be found in places like salt flats of Chile, the hard rock mines of Australia. Miners extract raw materials from the earth, and then those raw materials are shipped to refining plants, which are usually in China, to be processed into the refined chemicals and the powders that are actually useful for making batteries.
Lithium is refined into lithium carbonate and lithium hydroxide. And this processing step is where China has really created a bottleneck. Just look at how much China controls each part of a battery.
That battery cell gets grouped together into a battery module or battery pack that goes into your smartphone, your electric car, or into a grid-scale battery energy storage system.
In addition to that supply chain, the Chinese government poured hundreds of billions into subsidies for the EV industry.
Basically, as early as 2001, the Chinese government wanted batteries and other advanced technologies to become a bigger driver for the economy. And it was in 2015 when they came up with this Made in China 2025 plan, where they made batteries along with EVs and robotics as strategic priorities for the future.
They started out with public buses, making those electric. They had all kinds of sticks and carrots. It's hard to get a license plate for a new car, but if you buy an EV, you can get one faster. You know, things like that encourage people to buy electric cars. And all of that kind of state support that kind of created this stable environment in which new battery and EV companies could thrive, because they knew that long-term there was going to be demand for the product because the state was behind it.
That sustained support, combined with a vertically integrated supply chain and a talented pool of engineers, helped Chinese battery companies commercialize an overlooked bit of battery chemistry and crack the code on cheaper EVs. Just how cheap? Well, in China, one of the most popular EVs is BYD's Seagull. It's tiny and only has a range of 190 miles. Compare that to one of the cheapest new EVs in the US, the 2026 Nissan Leaf. It has a range of about 300 miles. The difference, though, is in price. You can buy about 3 Seagulls in China for 1 Leaf in the US. And part of that is because the Seagull uses a cheaper battery, lithium iron phosphate, or LFP. FYI, we're about to talk about a lot of initialisms. They may be a PITA, but they are the SOP in the world of EVs.
A lot of the innovation with lithium-ion batteries now has to do at the component level. On the cathode, there was the lithium iron phosphate cathode, LFP, developed by Americans but scaled up by China. It used cheap raw materials like iron and phosphorus, but it had a bunch of limitations. It couldn't store a lot of energy, whereas the nickel manganese cobalt cathode, or NMC, was a lot more energy dense.
Even though NMC packed more energy, the cheaper LFP cells showed promise.
And so chemists began making tweaks to LFP batteries with small chemistry changes, small structural changes, and every year the LFP batteries started to become a little more energy dense. And because China was the place where LFP batteries were finding its most development, they also lowered in price faster than NMC batteries did. So today, most electric cars produced in China are powered by LFP batteries.
And they're still improving. Last year, Chinese companies announced that their newest LFP batteries can recharge in about the same amount of time it takes to refuel a gas car.
That technical innovation goes hand in hand with the supply chain.
But they've hit some bumps in the road. For years, China was investing heavily in domestic EV supply chains. But thanks to overcapacity and price wars, 2024 was the first time Chinese companies invested more overseas than at home. But we'll get to that later. Meanwhile, other players are hoping to disrupt the dominant technology and compete on the global stage.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
General Motors, founded in 1908, is one of the OGs of the internal combustion engine. They also built one of the world's first modern electric cars, called the EV1, all the way back in the 90s. But GM cancelled the project after heavy losses. Since then, GM's made headway when it comes to EVs. And now they're trying to kickstart a new kind of battery technology.
We've got a chemistry that we think is going to be really competitive. It's a leapfrogging of what they've got in China.
This is Kurt Kelty. He's a Tesla veteran who's been working in batteries since Sony introduced lithium-ion to the world. Now, Kelty and his team are betting on a new kind of chemistry called LMR, or lithium manganese rich. Another initialism, I know.
So this is the final form of the LMR, cathode active material. It contains all the added pixie dust that is going to make it work optimally in a vehicle.
That pixie dust is a new cathode mix that boosts manganese, reduces nickel, and nearly eliminates cobalt. GM claims that the shift in chemistry lowers cost without losing too much range.
So with the Silverado, we're getting 492 miles. That's with a high nickel cell. If you end up using an LFP cell, you're going to get about 350 miles of range. Well, if you use LMR, you're going to get about 400 miles of range. So it's in between them.
GM hopes to launch commercial LMR batteries for SUVs and pickup trucks in 2028. They're also hoping to bring their supply chain closer to home.
What we've been doing over the last 4 or 5 years is trying to reduce our reliance on FEOC-based countries, including China. And the most challenging part has definitely been the cathode material. It's the most expensive part. The graphite has also been challenging. Our intention is to have this all outside of China by 2028.
GM has invested in several projects to build up a battery supply chain in North America. Shifts in policy have cost GM billions and can make it harder to establish a supply chain.
The problem is every 48 years, the United States does 180 and have a totally different policy. The government certainly didn't make it easier on them by changing course every so often.
Mr. President!
This sucker's quick. You know, they're having a hard time, the electric vehicles, and they want us to pay billions of dollars in subsidy.
I don't think the U.S. car companies can compete with China right now, but I think if they have a chance at it, they need to continue to innovate. It's definitely an uphill battle.
GM isn't alone in its experimentation. Startups around the world have raised billions to find the next best battery.
I don't think the future is at all settled, and there's lots of different chemistries. I like to think of them as ice cream flavors. Everyone's trying out different combinations to see what works best.
And it'll take a lot of trial, error, and money to see what new tech actually succeeds. Meanwhile, Chinese battery companies are expanding all over, even here.
So in 2006, Goshen was founded in Hefei, China. But today, the company has expanded into the U.S. market, with the first factory being here in Manteno, Illinois. We are going to be making LFP batteries, or lithium iron phosphate batteries.
Goshen is one of the world's largest lithium-ion battery makers. Its new Midwestern facility will make batteries for EVs, energy storage systems, or ESS, which are used to supplement the electric grid, and this thing.
Let's grab this bad boy.
Plug it in. That's it.
In the past few years, Goshen built several overseas facilities around the world. And now it's flipping the script on an old American tale.
What are the biggest challenges of setting up a factory in the U.S.?
There's a lot that goes into building a factory. And even a company that has built many factories before, it's not just simply a copy and paste.
When it comes to manufacturing, the U.S. is a bit rusty.
You have to build something from scratch that hasn't been here before, or it hasn't been here in decades. That know-how and technology and that manufacturing experience, that's things that the U.S. used to do. We decided it wasn't important anymore and outsourced it. And that's been the model for the last, 50 years or so.
Enter international collaboration.
It's perfectly possible to make batteries outside of China reasonably cost-effective. And one of those pathways is actually working with the Chinese companies.
Collaboration helped Chinese manufacturers get to where they are today. In the 90s, China implemented the 50-50 rule. Foreign auto firms could only operate through a joint venture with a local company. The car companies expanded their markets, and the Chinese counterparts got knowledge spillover. Goshen's Illinois factory has 300 employees, with plans to scale up to 750 by the end of 2026. This is the man responsible for pulling that off, Mark Krusel.
So I've been in manufacturing my entire life. So ever since I was 23, I see this as a great opportunity to bring this type of manufacturing to the U.S. I don't want to see the U.S. be left behind like we were being left behind.
A key part of the modern American factory? Lots of robots.
So this is a very highly automated plant. Goshen's most automated plant to date, we call it Generation 7. So they had Generation 6 in China, and we have Generation 7 here in the U.S. The first thing is you get better consistency, better quality with automation. And secondly, we get to reduce some of the manpower cost. So automation is a little more cost-effective in the U.S. than in China.
Goshen's expansion is part of a larger trend of Chinese companies setting up factories outside of China to capture new markets and avoid protectionist tariffs. But the company's U.S. expansion hasn't all been smooth driving.
Many people throughout Michigan came to today's rally, voicing their concerns of the company's ties to China and the environmental effects.
3 years later, Goshen's additional $2.36 billion battery materials plant in Michigan is temporarily on hold. The hesitation goes both ways. The Chinese government wants to keep the lid on its technology with stronger export controls on various parts of the lithium-ion supply chain.
China's battery-making technology, as well as their EV technology, is world-class. And they're afraid that the U.S. or Europe is going to be able to sort of use that technology for their own purposes, making China less competitive.
Needless to say, this is all very challenging for EV and battery makers seeking new shores. But they may not have much choice.
I always like to think about the U.S. economy and the Chinese economy as sort of like this, one is like the photo negative of the other. Like the U.S. economy is driven by consumption, and China's economy is driven by investment in production and R&D. They have all this capacity to make all this stuff, EVs, batteries, and they need to sell it in the rest of the world to keep everybody in China employed. Expanding overseas is really important for any of these Chinese companies because they need new markets to keep growing.
I would say that there's a lot of geopolitical uncertainty making companies a little bit hesitant. However, conservatively, our marketing research tells us that there will be over 500 gigawatt hours of demand for batteries just in the North America region alone. And Goshen definitely wants to be a part of that.
It's not just the US. Demand for batteries is growing globally, which means demand for raw materials. But what if you didn't have to mine all over the world to make your batteries?
The
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We have everything from a small hybrid battery to a large EV battery. Over there you have a shiny battery, easy to dismantle. Other models here are more corroded and more challenging to take apart.
We're doing the coolest thing there is. We are turning waste into important critical raw materials for new batteries.
In Norway, 1 in 3 passenger cars on the road is electric, making it a prime environment for recycling. That's where Hydrovolt comes in. Since the types of batteries can vary, Hydrovolt has to design a recycling process for each kind. Today, they're up to about 200 different batteries. The process begins with D&D. No, not that one. Discharge and dismantle.
Over on this side, we have 6 discharging stations. That's sort of the most critical step, getting the energy out of the battery. And then we move to the dismantling part. We take off electronics, we take off cables, we take off plastic materials. We're in the control room, the heart of this plant. These are battery modules falling into the crusher, ready to be crushed and shredded into pieces. First, a coarse crushing and then a finer crushing afterwards.
This mechanical shredding process, along with several drying and sorting steps, results in a material mix called black mass.
This is a really fine black powder, which contains the heavy metals like the lithium, manganese, cobalt, nickel oxides. So here we are conducting measurements, and the main components that we're looking for is the nickel and cobalt, which is most valuable, so that our customers will know how much is in the black mass when they refine it.
That black mass is sold to chemical companies, mostly in South Korea and Europe, which refine it back into battery-grade material, keeping those same metals in motion from old batteries into new ones in a new circular economy. Another benefit is that it bypasses the troubling human rights record and environmental damage that plague the global mining industry.
And the challenge now is to make the business profitable.
Norway requires producers and importers to pay to have their batteries recycled, but the economics are still tough. Black mass is priced at a discount based on the cost of metal components, which can be volatile. Plus, Europe's battery supply chain, which would form an important customer base for Hydrovolt, has been slow to develop. In fact, Hydrovolt was initially launched to supply Northvolt, a Swedish startup battery maker that was hailed as a viable counter to Asia. Unfortunately, Northvolt went bankrupt after it expanded too fast and delivered too many faulty cells. But as more EVs age and come off the road in Norway, Hydrovolt hopes the increased supply of EV batteries will help the company scale up operations.
We know we're at the very beginning of a very exciting journey. We see all the electric cars outside on the roads, and in 10, 15 years, they will be here.
It's hard to believe how much has changed since this unassuming battery was first introduced and unlocked a future we couldn't imagine at the time.
Batteries have changed the world once, and they can change the world again because the applications for batteries are many and growing, and the need for those applications to work is getting deeper because we have to meet climate goals, because we have to cut the cost of energy, and because we like cool devices.
The future is zero-emission vehicles. It's just a matter when.
That EV revolution has hit a fork in the road, and the pace of adoption is going to be uneven. The US government is betting big on oil rather than ions to move people and goods. And the EU has rolled back their 2035 ban on combustion engine vehicles. But long-term, any car company that wants to be globally competitive needs to make affordable EVs, and batteries are the key to unlocking that goal.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Television, and I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and the final approval could still take several days. Oil is falling on the signs of progress toward a deal with Iran. Lower prices could mean a break for U.S. travelers as the Memorial Day holiday traditionally marks the unofficial start of the summer, a period where demand for gasoline, diesel, and jet fuel typically rises. And U.S. health authorities are planning to temporarily bar green card holders from re-entering the country if they've traveled recently to Ebola-affected areas. The interim rule will remain in place for 6 months or until Health Secretary Robert F. Kennedy Jr. determines it is no longer needed. Authorities in the Democratic Republic of Congo had reported 867 suspected cases and 204 probable deaths as of Friday. And Pope Leo says artificial intelligence should be disarmed to protect humanity. In his address to the Catholic Church, the Pope called for making AI more human-friendly, shifting away from using it to achieve geopolitical or commercial gains. Pope Leo also warned world leaders against using war as a political tactic to distract voters from domestic problems. Now let's get a check on the markets here this morning. A lot of sort of optimism being breathed into this market across the board, whether it's in the equity picture or elsewhere. As you can see there, Euro Stoxx 600 up 1 percentage point. The DAX up in Germany up about 1.5%. The CAC in France 1.8% higher this morning. And we should say it comes as President Trump coming out on Truth Social in the last couple of minutes, a rather lengthy post in which he's saying that the negotiations with Iran are proceeding nicely and it should be mandatory for all nations, including Saudi Arabia, Qatar, Pakistan, Turkey, Egypt, and Jordan, to sign on to the Abraham Accords if indeed there is a deal with Iran. It seems that the President of the United States is now linking the Abraham Accords with a potential deal with Iran. He even said that the Iranians, if they should be willing to sign on to some of the conditions, would also be welcome to join the Abraham Accords. Across the currency market there, you see it, euro-dollar up 0.4%. The yields across Germany and the rest of Europe are falling, down almost 10 basis points. And Brent crude, of course, down 5% on that optimism we're seeing on the potential for a breakthrough between the United States and Iran. Gold spot there catching a bit of a bid there at 45.62 this morning, up 1.2%. We'll send you back to tape programming. We'll have another live update in just under 30 minutes time. I'm Oliver Crook, and this is Bloomberg.
This hand, this knee, and this head are all small feats of engineering, decades in the making. And together, they're about to take a massive leap forward. Oh dear. Humanoid robots have exploded out of the lab and into the real world of late. Not always on the best footing. But I'm not just here to show you funny robot videos for the next half hour. Even though I could. Easily.
What's up, Rizbot?
Because behind silly hats and dancing is a very serious, very expensive, and very unproven bet that AI-powered robots could one day transform labor as we know it.
The interest in humanoid robotics has been there for a long, long time. What's changed, of course, is now we see that it's viable to commercialize this and start really applying some good business models. AI clearly plays a large part in this.
The hope is in cracking the code of physical AI, taking specialized artificial intelligence and putting it in a body with sensors, batteries, and actuators. Very expensive and technologically complex actuators. It's a paradigm shift that could set humanoids up to become a multi-trillion-dollar market by 2050. But for these massive figures to be realized, it won't be about party tricks or dance routines. It'll be about work, in homes, in hospitals, in factories, especially factories.
When you really work with robots, you realize how challenging it is. There is a lot of what I sometimes call humanoid hype out there.
Like a lot of hype, coming from the most influential figures in the tech industry. But hype doesn't build a supply chain or rewrite the global labor market. To do that, you need, well, let's get into it, shall we? This robot runs on AI. Well, sometimes. For this demonstration, filmed in 2025, Neo needed some help from real humans and was operated remotely by a man named Turing. No, not that Turing. But don't worry, we'll get to that later.
You're looking beautiful today, Neo. Have you hit your head? You okay?
This particular humanoid is made by a company called 1X, a robotics startup founded by this actual human, Bernd Bornick.
So this is Neo. This is the Gamma version. So this is what we've been doing the in-home tests among employees with. This is the one that's doing my laundry. And this is the last, let's call it like the last engineering version. The version that we're working on right now that's about to go into production is the unit that will go into the first customer homes. Essentially, the entire behavior of Neo is AI, in the sense that it takes images, forces, tactile, and in general, all the information that it has about the world in. There's a big neural network, and out comes the actual motor commands, all the way down to the forces and torques that it's exerting to be able to do everything from balance and walk to doing manipulation.
Unlike a traditional robot that's programmed to do a specific task the same way every time, a robot that uses AI should, in theory anyways, learn to do things over time in unpredictable environments. It's sometimes called physical AI, a category that besides humanoids includes other general intelligence robots and driverless cars. Basically, it's anything that uses motors, sensors, cameras, and AI models to make sense of the world around it.
We are seeing a very clear correlation between the amount of data and how many different tasks we can do and how successful we are at these tasks. And that is really the beauty of how AI has changed robotics, because there is no longer this limit where you need to write some specific code for every task. Everything is just data.
Let me introduce you to our robot.
1X is just one of many humanoid robot companies that have burst onto the tech scene in recent years.
Mind taking this wet towel from me?
Sure, I'll get the laundry started.
The frenzy comes down to 2 little letters, which come with big checks. AI.
The past few years, we've seen explosive interest in development of and investment in AI. And a lot of people are seizing on this moment as a way to work on all kinds of related things, including robots.
It's a packed scene with billions of dollars in investments in 2025 alone, and companies globally racking up huge valuations.
People are betting big on humanoid robots because very high-profile people involved in the world of humanoid robotics are talking it up.
People like this guy, Jensen Huang.
There's so many humanoid robots here, and the AIs that they need are physical AIs.
Chip makers like NVIDIA are excited for their chips to power the brains of these humanoids.
It needs a brain, and NVIDIA has a chip for that can go into the robot itself. Then they have the software. NVIDIA has largely a monopoly for AI GPUs that go into data centers for training large language and other AI models. So they have a stronghold there because just like generative AI tools, humanoid robotics models, real-world models are also trained using the same technology.
We just announced a new deep collaboration with Boston Dynamics. They've got some very exciting robots.
Other AI and tech giants like OpenAI, Google, and Tesla are also betting big that there's a lot of money to be made by taking AI off a screen and bringing it into the real world.
And then you have Elon Musk, who talks endlessly about humanoid robots.
I think everyone on Earth is going to have one and going to want one.
His projections are even more, let's say, far-fetched. Elon Musk has said that Optimus, Tesla's own humanoid robot, will be a product that can bring in $30 trillion of revenue annually.
And with numbers like that, there's hype.
You increasingly see them showing up in ads. You see them at tech conferences. There are lots and lots of videos of them. Sometimes you'll see them operating in person, but they might be like tethered to something. So I feel like you're both seeing progress and you're also seeing this sense of it's not quite there yet.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is my students in our lab here. We call it the Auto Lab for Automation Lab. And so students are working on various projects, and we have a number of robots in here. Two-armed robot, we call it bimanual.
Professor Ken Goldberg at UC Berkeley has been interested in what makes robots work for a long time.
In the last few years, there's been a lot of excitement about the potential of artificial intelligence, specifically with the breakthrough of ChatGPT, which is a huge paradigm shift in the field of AI. And so that's the speculation. What is the GPT moment for robotics?
But here's the thing. Large language models, or LLMs, like the kind behind ChatGPT, are more book smart than a robot smart.
In ChatGPT, you're looking at a string of words, and then you're trying to generate what would be the next appropriate string of words that goes with that.
ChatGPT and other large language models run on, well, mostly language. Think of it like having access to a massive library of trillions of words, photos, and videos from the internet. But a robot doesn't just generate words. It has to create motion.
In a robot, what we need to see is a string of images, a video, and then we need to see a string of motions, of commands that go to the robot arms to get it to do the right thing.
To do that, it needs data to learn from. A lot of data.
When it comes to humanoid robots, data is so important. Without data, a system that relies on AI doesn't know anything. If you want a robot to do something like folding laundry, for instance, you're going to have a ton of information about how laundry is folded so that it can learn, see patterns in that data. How do you pick up a piece of fabric? Do you use articulated fingers, which are extremely difficult to build? And how do you also hold on to things without squishing them?
Robots learn from experience. And here's the problem. Almost none of that physical experience has been recorded.
No one has captured the motions of robots that go with the inputs that were generated coming from a camera. So we have a gap, what I call the robot data gap.
That gap is a challenge and an opportunity, especially for the ones betting on physical AI. More data means better AI. The need for data for robots is so big, companies are rushing to create libraries made of both real and artificial synthetic data.
So people today are trying to collect this data to be able to train robots. The first one is simulation, to be able to simulate environments and robots moving in them.
Think of it like creating a hyper-realistic environment the robot can learn in. Its superpower is scale. Thousands of robots in thousands of worlds, all learning at the same time. The problem is, virtual worlds and virtual robots can lack real-world detail. Another way to train humanoids is harvesting existing video of the real world.
We do have a huge amount of videos on YouTube and other places that show people manipulating things.
But
it's very difficult to get the full three-dimensional structure of a scene from a two-dimensional video.
there is one option for delivering real human interactions in real-world conditions: teleoperation, where VR glasses and stylish outfits can turn these robots into a very expensive puppet.
So there's someone behind the scenes, behind the curtain, who is controlling two arms, moving them around, and as that happens, the video images and the motions of the robot are recorded, and that provides data. But that's very, very slow. But there are farms, people out there doing that as we speak.
Teleoperation has been criticized for its use in demonstrations to drum up excitement and money. But it's also a powerful training tool. Beyond teleoperation, there's another option: to let the robots just learn on the job. Goldberg calls it the flywheel.
As it's working, it's collecting data from its images and its motions, and then use that data by filtering it to train a larger model. And eventually, that new model becomes better than the original model.
Nailing an AI model and a training data set that works is paramount for any robotics company hoping to make it in the humanoid biz. to train their humanoids, including teleoperation and human input. Hi, Turing. Since then, 1X says it increasingly uses something called a world model to train and run their humanoids, and it's pulling from many of those data gap-filling tactics. The video here on the left is generated by the model. It's almost like a future vision of what the robot should do. And on the right is the robot completing the action. Similar to other AI video creation tools, the world model pulls from a vast library of images and video to generate a visualization of an action. Each time it generates the prediction of an action, it can learn from the resulting real-world action, and, in theory, help improve those predictions with every generation. Kind of like a flywheel, remember? Of course, the actual goal of all these models and data is to get robots out of the lab and into the real world, where they can continue to improve. And when it comes to doing that, there's one place that's been faster than the rest. This is the first World Humanoid Robot Games, taking place in an old Olympic ice skating rink in Beijing. Look at all these humanoids. Running, jumping, dancing. Competitors here are gathered from all over the world to put humanoids to the mechanical test.
I think the games are really interesting. There's tons of really cool events that you don't really see normally. It's very different, very unique, very special. When I first met our robot, when I first interacted with it, it was a little scary because, you know, you have this like very heavy piece of machinery just running around and walking around next to you. Then you try to like keep your distance and stay away from it. But as I've gone to know it and work with it, I've developed a sort of like connection with it.
These games, which involve everything from boxing to football matches to, yes, work, are part of a large push in China to dominate the humanoid and AI robotics industry.
China's unique interest in robots has to do with the government for the most part. The fact that they see it as a strategic priority. Back in 2015, the Made in China 2025 plan had mentioned robots along with EVs and semiconductors as future growth drivers. So a lot of money has been poured into this area, and it continues to be so.
In 2025, China pledged 1 trillion yuan, about $140 billion, to promote the advancement of emerging technologies, a big part of that being robotics. That kind of support has helped produce 140 Chinese companies, all making humanoids, a number that has continued to grow so much that officials have warned of a potential bubble. Still, China is currently dominating the humanoid robotics market, much like they've done with EVs. Companies like Agibot, Ubitech, and Unitree, among others, ship the most humanoids out of any country in 2025. That's down in part to some serious chops when it comes to manufacturing cheaply and quickly, which is a good thing if you're trying to get robots out in the world fast.
So much of the electronics industry has its supply chain from the sort of circuit level throughout China. And they have scale. Scale means better economics, and it means ability to move quickly.
It's really vertically integrated, just like with EVs. They have a lot of companies that make components for these humanoid robots, whether it's sensors, AI chips, batteries. The fact that they're able to sort of supply the components for these robots.
That advantage in scale may come in handy. China already leads the world in the deployment of industrial robots as it races against a shrinking workforce. But for engineering, training, and investment to pay off, they're going to have to do something more than backflips. They're going to need to get a job. Sorry, robots.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi in Beirut, and this is Bloomberg.
I'm an economist, and I am studying the well-being implications of technological change. Technological anxiety and fear that technologies are going to take over our jobs is nothing new. What do we need to think about before deploying humanoid robots at scale would be worker involvement in the process. So how these robots will be deployed would have huge implications for the quality of work that people will have.
Robots aren't new. They've been in factories for decades.
They're very good at performing routine tasks and physical tasks.
Tasks like welding, painting, and assembling parts.
But they are not multi-purpose, and that's where the humanoids come in.
Basically, a humanoid robot is designed to do the tasks that humans can do. It's estimated that almost 2 million manufacturing jobs in the US alone might go unfilled by 2033. But if humanoids are going to be part of closing that gap, they need to actually, well, move and problem solve like a human, safely, alongside people. And right now, that's only happening in a limited number of very controlled pilot tests run by some very big companies.
For example, the BMW is currently running a pilot and is reporting early data.
Other big names testing these robots include Amazon and Hyundai. These trials are crucial when it comes to figuring out where humanoids work and where they don't. They also provide, yes, data to fuel development, while things like technology and regulation catch up.
We started with pilots in humanoids about a year ago.
This is Patrick Kelleher. His company is one of many testing out third-party humanoid robots in their warehouses.
We have been working with robots for the last 10 years, and we are at the forefront of piloting humanoids in our warehouse operations, and it really is fascinating to see the new technology take foot in production in the warehouse environment.
GXO has found some cases that humanoids might be useful for, like, say, working in a freezer.
We're able to deploy the humanoids in that environment where they can really work for an entire battery life, completing tasks, being directed by somebody who is outside of the freezer, and getting work completed without putting our teammates in an uncomfortable situation, working in that cold environment for a long time.
But there's still a lot they're not great at.
The humanoids so far are not perfect. They damage product, they drop product, they may put product back in the wrong location. It is so important that our teammates are working alongside of them to do that. There is corrective action and audits done to make sure that the activity done by the humanoid is done accurately.
Humanoids still face a number of engineering challenges that can create serious bottlenecks in a warehouse. They're slow, for one. They have limited battery life. And picking up a box or handling an object, things that we take for granted, require dexterity. It's something humanoids, which move using motors and actuators, have a hard time replicating.
We do not see humanoids in the next couple of years taking away many of the tasks that our teammates perform. The tasks are too complex and too important from a quality perspective to go entirely to humanoids. And it's not really understood yet what the return on investment is going to be based on the finalized technologies that are coming out.
Places where humanoid robots might be deployed first, like factories and warehouses, are already built for industrial robots. But putting them in environments for people, like hospitals and homes, might prove to be the bigger test.
In manufacturing, you have a very fixed production process. You can shield off human beings, and you can let the humanoid robot perform. While in a hospital setting, it's a semi-structured environment. There are protocols and how processes should be done and how patients should be cared for, but still there are so many uncertainties that can arise. In fact, it's about life and death type of situations, and the costs of making a mistake are very, very high.
So will humanoids one day overcome their technical challenges, recoup investments, and become indispensable companions, folding our laundry, watering our plants, and building our cars? Or just be a novelty, giving way to robots of other shapes and sizes?
I've been in this field for 40 years, and it is fascinating to me how much it has had a resurgence again and again over the years. I'm thrilled about that. I'm excited because I feel that this field has got many years of questions and research that needs to be done. So in some sense, I don't want to sound discouraging. I'm very actually optimistic about the future, but I think it's important, again, to just be realistic about the time frame.
In the meantime, I'll leave you with this. A humanoid robot waving to you from a balcony as a drone pulls slowly and dramatically away. That feels like a decent way to end. For now.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court that aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and final approval could still take several days. And meanwhile, President Donald Trump says negotiations with Iran are proceeding nicely and adds that it should be mandatory for nations including Saudi Arabia, Qatar, Pakistan, Turkey, Egypt, and Jordan to sign on to the Abraham Accords, normalizing diplomatic relations with Israel. Foreigners seeking permanent residency in the U.S. will now have to leave the country to apply for green cards, except in extraordinary circumstances. The policy could leave applicants stranded for extended periods of time and disrupt families and companies sponsoring foreign workers. Immigration lawyers say the move is legally questionable and needlessly chaotic, and warn litigation is likely. And the cause of an explosion in a mine in China's Shanxi province is under investigation after Friday blast killed at least 82 people. The accident just triggered a vast rescue operation, including hundreds of emergency workers and an intervention from the President Xi Jinping and senior officials. State media say early investigations suggest serious violations at the privately run mine. A quick check of the markets before we go. You can see here the optimism on the trade between the possibility of a deal with Iran and the United States, sending equity markets quite a bit higher across the world. The Stoxx 600 in Europe up about 1%. The DAX in Germany up 1.6%. CAC in France up 1.8%. NASDAQ futures ready to potentially open an all-time record high yet again tomorrow when we get cash trading back on the NASDAQ up 1.3%. We'll have another update in about 30 minutes time, and we'll send it back to tape programming.
We're entering the first of 4 factories.
This is one of the cleanest factories in the world.
How clean is clean? Even a single skin cell can actually kill one of our chips that we make here.
Chips like these. The smallest components on today's chips are smaller than the size of a virus, approximately 50,000 times smaller than the width of a human hair. And fragile as they may be, today's most expensive chips sell for upwards of $30,000 each and are reportedly transported in armored vehicles. We're talking about the massive, highly lucrative heartbeat powering the global economy.
1 trillion semiconductor devices are shipped every year. That's 100 devices for every person on Earth.
They are the foundation of economic growth around the world, and it brings together the best scientific minds to push progress forward.
The chip industry is projected to hit $1 trillion in revenue in 2026. And thanks to AI, everyone is talking about it.
Artificial intelligence boom.
My beat went from obscure backwater that people had sort of heard of to being the center of technology.
What is widely considered to be the most complex manufacturing process on Earth is facing the limitations of our physical world.
We're pushing the envelope of technology in multiple directions: software, hardware, chemistry, physics, in all dimensions.
Unprecedented market conditions.
Demand for AI infrastructure is absolutely massive. It appears to be insatiable right now.
Vulnerable choke points.
The modern economy is likely to collapse if something happens to Taiwanese chip ecosystem.
So just how resilient is the industry that requires this many layers of clothing to function?
See?
Right this way. Nestled among windmills and canals, surrounded by charming cottages and cyclists, you will find Europe's most valuable tech firm, well known for
lithography.
The lithography tools that they create are some of the most fabulously complex and difficult to perfect machines in the world.
ASML doesn't make chips. It makes machines that make chips and offers tech that no other company has been able to recreate. Lithography is a process that directs light through a series of mirrors, lenses, and a special blueprint to transfer patterns onto silicon wafers, essentially shrinking chip designs down to sizes invisible to the human eye and creating the electrical pathways that give a chip its function.
All of the manufacturers of the most advanced chips in the world, whether they say it publicly or not, use ASML's machines or are about to use ASML's machines.
The nano patterning machine is one of the most critical steps in the semiconductor making. People buy new phones because they got more capabilities for the same money. So you must find a way to print much smaller features, but at much higher productivity.
In order to make the next generation of chips even more intricate, ASML literally had to develop a way to generate a type of light that does not naturally occur on Earth's surface, called EUV, extreme ultraviolet. The system is as big as a double-decker bus, weighs as much as a blue whale, and will run customers $400 million per machine.
Why do your machines have to be so big?
That's a good question. First of all, as you want to print smaller resolution, you make the opening angle of the lens bigger.
Bigger lenses can collect more information to squeeze onto the surface of the chips.
The second reason is In order to have the speed, you need very fast-moving stages.
Litho machines can repeatedly copy a pattern onto a wafer hundreds of thousands of times within about 12 seconds.
The reticle stage can move about 20 G, 4 times more acceleration than the most advanced fighter jets in the world. In order to have that power to accelerate that fast, you need big motors.
The smaller or more complex the chip, the bigger the machine needs to be. There's no avoiding it. All of the world's most advanced litho machines come from ASML. It is one hyper-specialized link in this highly concentrated supply chain that is under more pressure than ever before. All eyes are on the companies at the top and whether they're up for the challenge.
We design the semiconductor products that really drive the leading edge of compute.
This is AMD. Advanced Micro Devices. Worth more than $300 billion, it's a place where engineers fill their thermoses with liquid nitrogen. Where stock prices have been known to triple, AI is hot.
You hear it sizzle all of a sudden?
And occasionally, employees appear out of thin air.
Well, you guys are getting first-hand view of how this works. We're delivering server chips that go into supercomputers, networking chips that connect the world together, on down to the consoles that you use to play your latest games. But the common theme in all of them is they require certain compute capabilities and energy efficiency.
The switches in chips are called transistors. They're sort of like nanoscopic light switches that control the flow of electricity and generate the classic ones and zeros that ultimately make up every piece of digital information in our modern devices. Chips are everywhere. It's how your phone unlocks, your robot vacuum navigates, and how your coffee maker somehow connects to Wi-Fi. Sometimes.
When you think about the modern economy, right, and you think about how goods are produced today, what you recognize is that chips have become ubiquitous. It's very difficult to find anything that you can plug in or that runs on a battery that doesn't have a semiconductor of some form in it.
The stock market loves chips. Sorry, I may be underselling this a bit. The stock market is going absolutely bonkers.
The latest blockbuster AI chips deal with AMD.
I mean, holy moly, Batman, the AI rally and the chip grab, it is on in a big way.
And AMD has turned the demand for AI chips into a new multi-billion-dollar part of its business.
All right, so this is a wafer. This is how we build our products. You can see where all of the various individual chips are printed. So this wafer probably has around 300 or 400 chips printed. And after you singulate them,
a fancy way of saying wafers are chipped into individual chips, which is actually the origin of the term chip.
you have products such as this. This is a chip that would run your PC.
Basic chips are called analog or essential, and they quite simply have more basic functions as sensors or power switches. More advanced chips are referred to as, well, advanced. This could be your run-of-the-mill CPU or GPU, the brains of the computer that are computing and performing more elaborate tasks. The most specialized AI chips are designed to not only run, but create software, to process droves of data in a matter of milliseconds.
Just to see a contrast, you know, this is a PC, this is a server, this is AI, and the amount of silicon is immensely higher. This central region here is actually many chips with some stacked on top of the other. And then the 8 individual chiplets on the outside are our memory, stacked 12 layers high. And so we're able to get more energy efficient AI compute.
Of course, AI is booming. AI chips accounted for more than 1/4 of all chips sold in 2025. That figure is expected to reach more than half by 2029. Chip demand is no longer dictated by which new iPhone or PC will have customers lining up.
What has changed over the years in the semiconductor industry is since we're seeing such a surge in the need to build data centers for AI deployment and applications, we're seeing a more sustained growth period in semiconductors as opposed to the old-fashioned cyclical when we used to have Intel come out with chips that everybody had to upgrade their computer for.
Spending on AI infrastructure, like data centers, is projected to soon cross the $1 trillion mark, so the demand for these chips is there. There's just one maybe not so nanoscopic problem. How concentrated is too concentrated for this supply chain?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Behind those pom-poms and smoke machines are employees for the chip giant TSMC, Taiwan's semiconductor manufacturing company. As fun as the annual company sports day looks, TSMC's role in the industry is serious business.
Creating semiconductors is the most complicated manufacturing process in the world.
To be fair, it does require a bit of choreography. Making a chip is like building a house of cards with thousands of people located on multiple continents. Everyone must place their card exactly right, delicately balanced at the perfect time, or, well, you know what happens. The majority of chip design happens in the US. Raw silicon wafers are primarily made in Japan and Taiwan, but a few other places as well. A lot of chip-making machinery comes from the Netherlands, of course, the US, and South Korea. Components within those machines are sourced from places like Germany, Japan, and the US. Then, all of those things join forces for manufacturing magic within fabrication facilities, fabs for short, heavily concentrated in Taiwan. TSMC manufactures over 90% of the world's most advanced chips, almost entirely out of its Taiwan-based gigafabs.
A gigafab is a massive chip-making site. It maximizes its output and optimizes its cost.
It created this idea of we can outsource manufacturing, give us your designs and we'll make the best chips. Doesn't matter who's designing them, you're going to TSMC and you're saying, please make this for me.
It's basically the bottleneck of all bottlenecks, smack dab in the middle of a very complex supply chain with no simple alternative.
What's called bringing up a fab, which is basically making a new factory or a new production line operational, requires a lot of experience. And so guess what? If you've got one next door that's already working, why not copy that? The logistics are very much favor building these things in what are called clusters in close proximity to each other.
These clever clusters are also, let's say, precarious.
There are a lot of ways that the supply chain for semiconductors and its broader ecosystem can be destabilized.
Taiwan's strongest earthquake in 25 years.
Disruptive side effects of the COVID pandemic. There is now a global shortage of computer chips.
A supply chain disruption in one place can cause repercussions in the industry far down the line.
To top it off, TSMC is located at the center of a decades-long geopolitical standoff.
Beijing has been ratcheting up pressure, staging its most expansive military drills in decades.
China claims Taiwan is a Chinese territory, while Taiwan maintains its independence. And that doesn't make things feel particularly stable.
There are some concerns about China's plans for the future of Taiwan and whether that could constrain the ability of United States companies to get those chips.
A February 2026 Bloomberg economics report estimates that the world economy could lose $10 trillion if a conflict were to erupt. With Taiwan hanging in the balance, global superpowers are making moves.
The government of the United States has said, hey, guess what? This is strategically important to us. It has massive security implications.
The defense industry needs very highly advanced chips that are impervious, for example, to space radiation, to power satellites and planes and things like this. So there's a defense industry motivation for governments to make sure that there are the right kind of semiconductors produced within their country's borders.
China doesn't feel that it can depend on the U.S. It believes in self-reliance and technological supremacy as well. But basically, it doesn't want to be left out. So it wants to develop its own homegrown chip industry.
And where does Huawei come in?
Well, Huawei is China's national tech champion. It's a company that's known for its hardware prowess. Back in 2019, the U.S. had imposed sanctions on Huawei, basically cutting off its ability to get the components it needs to make its products. And there was a feeling that Huawei was in a lot of trouble.
At the time, China was a late start into chip manufacturing. Less than 10% of the country's chips were being supplied by Chinese companies with less advanced tech than foreign firms, which is at odds with the fact that China is also the world's largest market for chips.
China has a massive middle-class consumer base that it can sell electronics to. So if it could make and develop these capabilities in the chip industry, then it's almost supportable on a domestic basis.
But China has been notoriously secretive about its chip industry.
No one really knew where China stood. We had heard that Huawei was building some chip factories in secret. We identified 3 factories deep in the bowels of Guangdong, and I got the location. And when I got there, I was surprised.
The site was evidence of China's major domestic manufacturing efforts underway to skirt U.S. sanctions.
We all thought that this wasn't possible because you need so much money in order to build these chip plants.
Estimates suggest building $1 billion in capital. Nonetheless, in 2023, Huawei shocked the industry with the debut of a China-made advanced chip that proved an unexpectedly rapid development in capability. China has also become the world's biggest producer of analog chips. But Chinese progress in advanced chip making has been stalled by fluctuating U.S. regulation around access to state-of-the-art Western chips and chip technology. ASML's highly coveted advanced lithography machines are among the technologies blocked from being sold to Chinese companies.
China's advantages, they're spending and investing a lot of money in creating their own chips. The Chinese government launched a $50 billion chip fund, allowing a lot of these local chip makers to tap into in order to develop their chip-making capabilities. You also have all these big private tech companies, Alibaba, Tencent, also providing money and support, backing a lot of these startups.
Money is the name of the game. The Chinese government is considering incentives valuing up to an additional $70 billion to support domestic chip making. Meanwhile, the U.S. is still doling out money from the Biden administration's $52 billion 2022 CHIPS Act in a major reshoring effort of its own.
Reshoring means bringing factories back to a certain country so that the physical ability to manufacture semiconductors resides in that country.
In 1990, nearly 40% of the world's chips were manufactured in the U.S. In 2024, it was only about 10%, so the U.S. has ambitions to send that percentage climbing again.
The United States has never been the cheapest place to produce semiconductor components. Our labor costs are high, our regulatory burden is high, but there is an incentive now under the current administration and another prior one, which involves subsidizing the creation of more manufacturing here in the United States.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
About 7,000 miles from the TSMC gigafabs in Taiwan, there is a site, or collection of sites, that have earned a name inspired by none other than the birthplace of chip innovation. Welcome to the Silicon Desert.
This place a few years ago, it used to be desert. And in a few years, we will have a little city here of fabs. Everything will start being like a science fiction, highly automated, producing thousands of wafers very soon.
On the one hand, the desert is good for chip fabs. Low humidity, decreased risk of earthquakes and floods, cheap land, and, of course, some tax incentives. On the other, the chip infrastructure has to be built up from scratch. To date, TSMC is committed to investing $165 billion in the Arizona fabs and is scheduled to receive $6.6 billion in direct funding from the CHIPS Act. As TSMC makes a splash with its first operations on U.S. soil, major expansion efforts are also underway by the OG American chip company. Do you know the one? Think back to your high school backpack.
There's a better way for everyone. From the company that invented the integrated circuit, Texas Instruments, the better way keeps getting better.
Everybody says, oh, the calculator company, right? And the reality is we do so much more than that. Our foundational chips are the backbone of essentially all modern technology as we know it.
Okay, so the calculators are cool, but this Texas Instruments story is about a different equation.
If it plugs into the wall or has a battery, it very likely has one TI chip in it. We have 15 manufacturing sites globally, and these manufacturing sites work together to provide tens of billions of chips every year globally to our customers. And for perspective, that's tens of thousands of chips coming out of TI globally every single minute.
That is a whopping 100,000 customers and 80,000 products. TI makes the kind of chips that perform more simple tasks, like sensing temperature to prevent overheating, or managing power as it moves through a device. The chips that keep our technology safe and running smoothly.
One of the most important things about the industry that you have to understand is its volume economics. Making a lot of chips as cheap as you can and selling them for as much as you can is the way towards victory.
Some of TI's chips sell for just a few cents each. They're cheaper and easier to make than today's leading advanced AI chips, meaning it's cost-effective to utilize lower-tier or even hand-me-down production equipment. But the company has made the countercurrent decision to invest $60 billion in advanced chip manufacturing tech.
We're actually in the subfab. The clean room will be just above us.
The details all come back to those shiny wafers.
Maybe you can come here and help me hold this, please?
This is a 200mm wafer, the size used by most analog chip companies. This is a 300mm wafer, primarily used for more advanced chip manufacturing. These are TI's big bet.
So going from 200 to 300mm increases the surface area on the wafer by 2.3 times.
Meaning 2.3 times the number of chips.
So when you look here, there's kind of a collection of different chips, and you can see everything from, really big products here all the way to the very small, tiny ones.
Pause. Now that's thinking. Those are chips.
Yeah, it's quite amazing, isn't it? I think if I picked it up, you wouldn't be able to see it. I think it's about the size of a pepper flake, and yeah, in fact, very glittery.
At that scale, 2.3 times the number of chips could mean a competitive advantage of hundreds of thousands more chips per wafer.
So from this vantage point, you can get a sense of scale of this site. This will be TI's largest mega site. Over 5.5 million square feet, the same square footage as 2 Empire State Buildings. Wow. It's a huge site, mega site.
While TI doesn't make AI chips, it's hoping the current landscape propels demand for its essential chip business.
I think what we're seeing in terms of the growth and expansion of the whole industry is a mixture. We always have the nuts and bolts chips, but we also have AI pulling along those nuts and bolts chips too, because you can't build a server for a data center without some lower end, cheaper chips that do some of the grunt work, if you like.
I'm bloody freezing.
All right, get into those warm bunny suits.
So we're going into the first part of the clean room that hasn't had equipment installed yet, is that correct?
Yeah, we're entering into the north side of the first of 4 factories here in Sherman, Texas. This factory is 100% automated. On the ceiling,
We will have over 15 miles of automated track. Each one of those cars carries material around the factory. Bringing up a 300 millimeter factory has the most advanced manufacturing equipment in the world.
Texas Instruments projects this site will soon produce hundreds of millions of chips every single day. If all of this investment pays off in the margins, TI will increase its lead as the #1 global supplier of analog chips and prove advanced manufacturing's value for even the tiniest ones.
A couple of decades ago, chips in general were servicing behind the scenes. Today, I would say chips actually define infrastructure. They define communications or people mobility or defense or AI.
From the chips powering our devices to the fabs where they're made, the industry is experiencing pervasive change. The demand from AI and our ever more technologically dependent world is forcing a global rethink of the fundamental building blocks. But one thing is for certain: innovation is underway.
We might be looking at the news and seeing politics take center stage or other disruptions. Be aware that companies are going to be focused on investing in the new product, in the new design, in how to save on costs. They're going to be focused on innovation if they're doing things correctly.
For years, this industry was mired in this win or loss brutal economics, trudged towards the future, and now we're seeing all kinds of excitement of people talking about chips in a new way.
Plain and simple, the chip industry is evolving to meet the moment, and it's...
Am I allowed to say the word sexy?
Why, yes, you absolutely are.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world.
Senior U.S. officials say the U.S. and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and the final approval could still take several days. President Donald Trump says negotiations with Iran are proceeding nicely and adds that it should be mandatory for nations including Saudi Arabia, Qatar, Pakistan, Turkey, Egypt, and Jordan to sign on to the Abraham Accords, normalizing diplomatic relations with Israel. And foreigners seeking permanent residency in the United States will now have to leave the country to apply for green cards, except in extraordinary circumstances. The policy could leave applicants stranded for extended periods and disrupt families and companies sponsoring foreign workers. Immigration lawyers say the move is legally questionable and needlessly chaotic, and warn litigation is likely. The cause of an explosion in a mine in China's Shanxi province is under investigation after the Friday blast killed at least 82 people. The accident has triggered a vast rescue operation involving hundreds of emergency workers and an intervention from the President Xi Jinping and senior officials. State media say early investigations suggest serious violations at the privately run mine. And Prosus is asking the EU to drop a requirement that it sell its Delivery Hero shares should the company be sold to Uber. According to people familiar with the matter, the internet services company, which holds about 17% of Delivery Hero, doesn't want to be forced to sell to Uber should the deal get approved. Delivery Hero shares today surging above that Uber's €10 billion takeover offer. And a quick check on the markets there. Across the equity markets, a lot of optimism that there may in fact be a deal signed at some point in the coming days between the Iranians and the United States. You can see that represented across European equities markets today. The Stock 600 Europe up 1%, the DAX in Germany up 1.75%. That rally really storming ahead there in France on the CAC 40 at 1.8%. And of course the Nasdaq there up almost 1.5%, expecting an all-time record open for the cash trade tomorrow. And of course across asset you see the euro gaining a bid. You see yields coming down across Europe on the expectation that maybe, just maybe, the ECB will not have to hike rates. We'll send it back to tape programming and we'll bring you another live update in just under 30 minutes. I'm Oliver Crook, and this is Bloomberg.
In a small town in Ohio, behind layers of barbed wire fence and many warnings of danger, there are about 11,000 holes in the ground. And these giant things, which are churning out an exciting new type of nuclear fuel called HALEU.
3 tablespoons of HALEU is enough to supply a typical person's entire use of electricity for their entire lifetime.
The private company behind this new fuel production wants to fill all those 11,000 holes with centrifuges. Right now, they've built 16. It's the kind of ambitious goal that only makes sense if an industry that's been on life support suddenly has a
nuclear renaissance.
Nuclear renaissance. Nuclear renaissance.
Big tech is bringing nuclear power back in a big way.
President Trump has laid out a target of quadrupling the U.S.'s nuclear capacity.
We're talking hundreds of billions of dollars.
We will build a reactor a year again. We will build them across the country.
This is no longer about just electricity. It's about India's future.
China is outpacing the United States by at least a decade.
And this new fuel may be crucial to power a new wave of smaller reactors that can be deployed in more places to help power the future of technology.
Amazon and Google, meanwhile, are investing in small modular reactors.
I think in the next 6-7 years, I think you're going to see a whole bunch of small nuclear reactors.
But supplying this fuel gets tricky.
Nuclear reactors run on uranium, and it's not just uranium you dig out of the ground. They have this very complicated process where they have to enrich the uranium into nuclear fuel.
And the need for nuclear fuel is growing. By some estimates, the global uranium demand is expected to more than double by 2040.
Far and away, the biggest company involved in the nuclear fuel ecosystem is Russia's Rosatom. They control almost 50% of the capacity to enrich uranium.
But due to sanctions against Russia over its war in Ukraine, the world's uranium market is transforming. And since the nuclear ecosystem is interconnected, Western countries are being forced to rewrite their entire nuclear supply chains, from mining, conversion, enrichment, and fabrication to building all those small reactors. Success at each link could mean more than new fuel. It could grow new industries and the potential to rake in lots and lots of money. And failure wouldn't just mean these holes in the ground stay empty. It could cause a crack in nuclear confidence that could take generations to seal.
All right.
So
yeah, push that, make it in. Oh, it might be hard.
Is it my nails?
Maybe. Try going sideways.
That's funny.
There you go. You're gonna drive rods in, and you're gonna try to keep that number close to that number. So go ahead. Now you're a nuclear operator.
This is a simulator of Reactor 1 at California's Diablo Canyon Power Plant. And the trainee working the joystick is a Brazilian fashion model turned nuclear influencer named Isabel Bemeke. Or for those deeply into the nuclear energy space on TikTok, she's known as Isodope.
This is a plant. No, not this one. This one. A small modular reactor.
What is my purpose?
I started making short 1 minute long videos that were very abstract, and I also try to make it very fun.
She's not alone. In the last few years, there's been a rise in so-called nukefluencers. Some critics note that this new wave of snappy, short-form social media advocacy can gloss over nuanced positions from anti-nuclear groups like Greenpeace.
We don't need nuclear energy. It's still dangerous and polluting.
But Bemeke is not your average nukefluencer. She's reportedly invested in a nuclear startup and is married to Joe Gebbia, co-founder of Airbnb and Donald Trump's chief design officer. The two have donated millions to nuclear causes. This rise in social media influence comes at the same time the nuclear power industry and some Silicon Valley startups are pushing the Trump administration to help kickstart development. And according to her own account, Bemeke was able to provide input on draft executive orders targeting the regulation of nuclear energy. This renewed push is a major change in the trajectory of nuclear power in the United States.
San Onofre nuclear plant is shutting down for good.
Crystal River nuclear power plant now set to close for good.
Closed for good.
Shut down for good?
For good. For good.
I've been writing about nuclear energy since 2019. And when I started, pretty much the only story, especially in the US, was which one is going to close down next.
From permits to labor to concrete, building and operating a nuclear plant can cost a fortune long before it produces a single watt. And the road to operation can be unpredictable. The two newest reactors built in the US at Southern Company's Vogtle plant in Georgia came online 7 years behind schedule and more than $16 billion over budget. At the same time, solar energy has gotten much cheaper to produce and a lot more reliable to build and operate. But then all these unmarked, windowless buildings started popping up everywhere.
The big tech companies started saying, we need to build out these huge data centers for artificial intelligence. And the thing about AI is those data centers need a lot of electricity. And so they started looking at nuclear power.
Meanwhile, the operating license for California's last nuclear power plant was about to expire.
So at the same time, Diablo Canyon in California was also on the chopping block.
This time, it was a confluence of economic concerns and activism pushing against the proposed closure.
We had a giant blimp rolling through the streets.
We're on a mission to stop all emissions!
To the surprise of literally everybody. The plant is open at least until 2030.
That's not all. Other decommissioned plants are getting a new lifeline, like 3 Mile Island. Now, Constellation Energy is actively working to reopen one of its reactors under a new name, the Crane Clean Energy Center.
Changing the name, really. You cannot erase history. You cannot rebrand a nuclear disaster.
But still, global investment in nuclear energy since 2020 is estimated to be around $300 billion, with ambitious plans in Europe, North America, and Asia to revive or kickstart their nuclear energy sectors. Every step of the supply chain, from mining to enrichment to building reactors, is highly regulated and controlled, because a single misstep could be catastrophic and erode the public trust nuclear has worked decades to regain.
It's a real shift from when I came of age.
Which makes energy. It's like activating a secret Rube Goldberg machine every time you turn on the AC. Oh, there's also the matter of radioactive nuclear waste, which we'll put off to deal with later, just like the real thing.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
For companies chasing the next big uranium boom, every link in this chain looks like an opportunity, starting from the ground up.
Now this sound going off is telling us we're seeing lots of counts per second here, very high counts per second at 65,000 plus. Now that is some high scale, high grade uranium mineralization.
Rook 1 is an underground uranium mining project from NextGen, targeting the Arrow deposit in Saskatchewan's Athabasca Basin.
The Arrow deposit is the world's largest, highest grade uranium mining project, and will be producing approximately 20 to 25% of the world's mine supply.
It hasn't begun production yet, but if you want to check out the site, Lee Courier, the founder and CEO of NextGen, is happy to give you directions.
It's 700 kilometres north-northwest of Saskatoon, 155 kilometres north of the nearest municipal and reservation of La Loche and the Clearwater River Dene Nation.
But even if you're lucky enough to find an underground treasure trove of uranium ore, you can't just grab a shovel and start digging it up. First, you need to raise a lot of capital. Rook 1, for example, costs around $1.5 billion. And then there's the paperwork, like licenses and permits and sign-offs from surrounding indigenous communities, which make up around 13% of Athabasca County.
You're looking basically from discovery of Arrow to likely first pound of production, 20 plus years.
But even before entering the construction phase, NextGen is already negotiating deals with utilities in the US, Europe, Asia, and the Middle East. Pulling uranium from the Earth is no small feat or small expense. But the real challenge begins when you try to separate those pesky U-235 isotopes. Uranium enrichment is also one of the most tightly controlled, capital-intensive processes on Earth. It's chemistry, physics, and geopolitics all in one spin cycle. This should look familiar.
We assemble the centrifuges behind us, then we take them down this transfer corridor.
And you got these massive doors?
Yes, we call them King Kong doors.
The speed demon behind the wheel is Matt Snyder, a former mechanic in the nuclear navy and a 15-year veteran at Centrus, the only US company licensed to make HALEU, a concentrated type of nuclear fuel.
They've got this enormous facility with 16 centrifuges running and then holes in the ground where they're going to have the rest.
They plan to jam-pack this place with 11,000 centrifuges so they can scale up their HALEU production to power a future market of new nuclear reactors.
It really struck me how this is starting to happen, but it's not here yet.
Standard nuclear fuel is called low-enriched uranium, or LEU, and has a U-235 enrichment concentration of 3 to 5%. HALEU is more potent. It's about 20%.
3 tablespoons of HALEU is enough to supply a typical person's entire use of electricity for their entire lifetime.
Right now, only Russia and China are making HALEU at commercial scale.
So if we were to expand our operations with those 11,000 machines, that's enough to meet the demand left by the Russian sanctions.
The US Department of Energy awarded Centrus, along with 2 other fuel makers, $900 million. But the centrifuge forest won't grow overnight.
With appropriate funding, we expect our full capacity plant to be built within the next 6 to 7 years.
How long does it take to enrich the uranium?
No, I can't go into that.
Because centrifuges can also make weapons-grade fuel, many topics around the technology are classified.
I can't really comment. I can't answer that. I can't talk about that. Can't really comment.
So let me try to get into this next part without revealing any national security secrets. Betting on HALEU also means betting on the next generation reactors that plan to use it, like many SMRs, small modular reactors, that can be built in factories, shipped and assembled on site.
If you are looking at some of the more ambitious SMR ideas, like placing small reactors in the wilds of northern Canada to supply power for remote towns, you want to use HALEU, as the thinking goes, so that the number of refueling trips out can be reduced, and that therefore would drive down the cost of operation.
We'll get into the economics of SMRs a bit later, though. Hang tight.
It's a chicken and an egg problem. They can't have the fuel unless there's demand. But there's no demand until they have reactors. But they don't want to build the reactors unless they know that there's going to be fuel. You can see where I'm going here.
The chicken and egg problem is being solved at a small scale right now. Urenco has committed to invest in new HALEU production. Orano in France has as well. The next stage is whether there are enough companies that can go beyond a first-of-a-kind SMR model and actually begin serial production.
One company outside of Seattle is looking to become that first SMR chicken, or SMR egg, or whichever one comes next.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
astonishing day.
Seek new sources of alpha. And I also think, really importantly, more thoughtfully incorporate liquidity where they need liquidity and where they don't need liquidity into their portfolio construction. Extending this, and I think continuum is the right word, is the way investors, particularly retirement savers, are looking at, retirement savers, I would say, who don't have allocations to private markets, and that's more specifically in defined contribution 401k type plans. Defined benefit plans have allocated to private markets for years for that reason, because it is the appropriate solve for the long-term time horizon.
You agree with the continuum, or?
Absolutely. A robust public market needs a robust private market, and a robust private market needs a robust public market. I think the fact that companies are staying private longer is a good thing. It's a good thing because when they do emerge as public companies, they've got a refined strategy. They're much more disciplined. They have a practice. They have done a variety of earnings calls in anticipation of that moment. And most of the time, in more recent history, they're either profitable or have a good path to profitability. But all of that needs to be incubated in the private market. So I think the fact that companies are staying private longer is ultimately a good thing.
Plenty more ahead from Bloomberg Invest as the global economy copes with multiple shocks and disruptions. Will the Fed respond with cuts?
The fact that the U.S. economy has been this resilient, given the stance of our monetary policy, tells me the neutral rate must be higher, at least in the near term.
This is Bloomberg.
You up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And
I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome back to our recap of Bloomberg Invest 2026. I'm Danny Berger. Just days before this event in New York took place, the U.S. began airstrikes on Iran, sending oil prices soaring and equities plunging. That added a new dimension of uncertainty to an already volatile macro outlook. It sparked conversations about the resilience of the global economy and how central banks may act to cushion the shocks.
The inflation data before Iran, I think, has suggested that inflation is running somewhere between 2.5% and 3%. I think housing inflation is trending down. I've got a lot of confidence in that. Core goods inflation has been trending up because of tariffs. Services inflation, I think, is slowly trending down, tied to the labor market. And the labor market is in a decent place, but showing some signs of softness. And so that's what gave me confidence that, hey, one cut later this year might make sense.
Now, the neutral rate, I don't know. Well, tell us where you think we are compared to neutral, because the question I have is every SEP says that the Fed will hit its target 2 years from now. I know. The next SEP says 2 years from now. Are you ever going to really hit it?
Well, we have to hit it. And I think my colleagues and I are committed for the credibility of the institution and for anchored inflation expectations that we absolutely have to hit it. But where the neutral rate is has been a big question mark. Over the last several years, we kept forecasting that the U.S. economy is going to slow down, and then it just powered through. I thought when we raised rates as aggressively as we did, that we'd be slamming the brakes on the economy. We weren't. The economy proved to be much more resilient. In the face of tariffs, it created a lot of uncertainty, created a lot of noise, raised goods inflation went up, but the U.S. economy proved more resilient. And so the fact that the U.S. economy has been this resilient, given the stance of our monetary policy, tells me the neutral rate must be higher, at least in the near term. And the thing about the dot plot, which is it's a very imperfect communication device, that long run dot is meant to represent where is the long run neutral after all of the shocks in the economy have passed and everything is settled back down to normal. That doesn't necessarily tell us that much about where is neutral today.
I think the market's reacting to every headline as it comes across. You're going to read, how long is this conflict going to last? And the longer it does last, the impact to oil production and energy transport could translate in terms of higher inflation or longer period of time. But our view still remains that, it's a K-shaped economy here in the U.S. and that the lower income populations is where you're seeing lower wage growth, increased delinquencies, unaffordability. And so we still believe that, the Fed should be in a position to be cutting rates rather than hiking rates. But it may take longer for that cycle to begin as we see what plays out.
I still think, actually, I would bet the Fed cuts 2 times. And I think they will look through this as long as it's contained to under, say, 3 months. But we'll see. I actually think they should also look through, in part, some of the AI boom, because whether rates are 50 basis points higher or 50 basis points lower, it's not going to impact the amount of CapEx that's going on there. And then under the surface, as I mentioned, financial conditions are tightening. I think the lower end consumer is struggling a bit, while overall consumer feels okay. And I think that's a hard dynamic to deal with.
What's fascinating is normally when people think, oh, there are going to be rate cuts, that's yay for risk assets, risk on. The scenario you're pointing is cutting rates for the wrong reason, which is actual weakness, true stress that you're seeing get into the market, whether it's a low-income consumer or whether it's these pockets of financial stress. Is that correct? Do you think that the rate cuts won't help add to risk appetite or could potentially be indicative of something more of a problem?
So a couple things on that. First of all, at a high level, I actually think the U.S. economy and the global economy is going to the recent headlines notwithstanding, is going to grow higher than expectations. I do think inflation is moderating. And again, I think rates where they are modestly restrictive. So I don't think it's necessarily like a rate cut into a disaster. I think the Fed has room to lower rates. And in the context of everything going on, I think it would be smart of them to do.
Still to come from Bloomberg Invest, candid conversations about AI's impact on markets, companies, and the foundations of finance.
We're going through a technology cycle and a platform shift in the world that, and people typically don't like change.
This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Welcome back to our recap of Bloomberg Invest 2026. I'm Danny Berger. For investors these days, AI is everywhere, driving huge amounts of spending, generating tons of buzz, and promising to transform companies and industries. It's inspiring excitement, but also skepticism. AI was a central theme of conversations at the conference.
We're going through a technology cycle and a platform shift in the world that, and people typically don't like change. And so when you go through a platform shift in the way that most businesses are going to operate and most things, there's going to be some level of disruption. And in this case, clearly the eye of the storm is software. And just like in almost every other cycle, I'd like to say that what I'm saying is new. It's not that new. MLPs had a really hard time in energy crisis. any sector that goes through a platform shift, if you're overexposed, asset managers in that feel tremendous amounts of pain, and you get exposed on the risk management side. And that's kind of what's happening, I think. It's early days. I don't, if the software, if the technology keeps getting better, I suspect it will not just be software, it will be services and other sectors that will get exposed. And one thing that's being missed by the private markets is we're doing stuff in funding the next 10, 15, 20 best companies in the world. Like it's not just all bad. We're funding 10 billion for SpaceX in terms of GPUs. We're funding Intel's fab. We're funding, Databricks. Like you talk about the single best companies that are being formed, and there'll be 10, 15 new $1 trillion companies. Credit is the centerpiece of that.
I think you want to be concerned about these hot markets. This does remind me of when the internet bubble was booming at the turn of the century, and everyone wanted to buy the same .com companies. We think that's happening with these AI companies. Everyone is so excited about it, and the data centers are all the rage. Everybody wants to own a data center. Every real estate person I know, many public companies are investing in that way. So that would be a sector that I would be really concerned about, things that are really tied to AI and companies that are sort of, jumping into new industries for the first time because they think that's where the economics are going to be really positive. So I'd be very cautious of anything AI connected, especially companies that are really not truly world-class at it.
We've talked about the opportunity ahead within AI, but what are you most concerned about? Where are we going to see, it could be a pullback, concerns, or where you might be either looking at more skeptically or avoiding?
It's interesting. A lot of people are worried about a pullback or hiccups. And of course, when you're early in a technological transformation, you're going to have that. But one of the other risks that isn't talked about as much is what happens if everything moves really quickly, and what are the ripple effects of that? In fact, with what we've seen in just the last 2 to 3 months of agentic coding, I wonder if 2026 will be a year where the rest of the ecosystem around some of these AI transformations isn't going to be able to keep up. Will all parts of the supply chain be able to keep up? Will shifts in the labor market that need to happen be able to happen as quickly as they would need to be? Will regulatory frameworks be put in place in time? So it's interesting when you're moving at lightning speed and a trend is growing exponentially, sometimes the ripple effects or hiccups come from other parts of the ecosystem that just can't keep up in the near term.
Yeah, I would agree. I mean, I think this is very real when I think about the big technology shifts over the last, my investing career. This is very, very real. The question is just time and distance, really, right? In terms of how does this all get absorbed? The market, I think, myopically focuses on specific questions and moments in time. Right now, it's about the return on all this CapEx, and the numbers are eye-popping, right? I mean, I think if we were sitting here 2 years ago and you said, we're going to be talking about $1 trillion of CapEx across a handful of companies, I think both of us would have said, you're crazy, that's never going to happen. But here we are. And the reason it's interesting now is because for a lot of these companies who are spending that capital, the threat is existential. If they don't win or stake out their place in this evolving ecosystem, there's risk to their core business in a very fundamental way.
Opportunities and challenges, risks and returns. A rich mix of information and insight flowed throughout the 2 days of Bloomberg Invest. To conclude our recap, here's what the CEOs of 2 major investment firms had to say about the conditions they and their clients are dealing with.
You expect bigger returns for taking bigger risk. And there are times that feel like a better time to take more risk and times when maybe not so much. How do you characterize the moment we're in right now?
So I think it's probably the most trying time to be a long-term investor. It really is, because if you're trying to invest for the long term, you're trying to invest through market cycles, and nowadays with the disruptive forces out there, what exactly is the cycle for your business model? Are you continually transforming your business model for that? And I think a lot of it depends on the industry, the company, the psyche of management and things like that. Even we as a shareholder, an investor, pushing for companies to continue to always be on the edge of transformation. And I think that is the biggest issue for us, as a long-term investor.
It feels like there are 4 simultaneous existential shocks and risks happening right now, whether it be how AI transforms our world, fears over credit, trade fears continue to crop up, and it's now war too. What is an investment committee like at KKR right now? There must just be so many risks that you're having to grapple with.
We're very calm. I think we're actually enjoying this period. Okay, so you got to focus on what you can control. Markets. Actually, let's go further back. Human beings, and therefore markets, hate uncertainty, right? It's absolutely the case. And it's also the case that a number of people, most people that are investing seats for a long while, have PTSD from the financial crisis. And so everybody's trying to figure out what's going to trigger the next big downfall for the space, for you name it, for the economy, for the markets. We don't see a precondition for that as we sit here today.
That wraps up our look back at Bloomberg Invest 2026. You can find more of these conversations on Bloomberg.com and Bloomberg Live's YouTube channel. The Bloomberg Invest series heads to Hong Kong next in June. Thanks for watching. I'm Danny Berger, and this is Bloomberg. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and the final approval could still take several days. President Donald Trump says negotiations with Iran are proceeding nicely and adds that it should be mandatory for nations including Saudi Arabia, Qatar, Pakistan, Turkey, Egypt, and Jordan to sign the Abraham Accords, normalizing diplomatic relations with Israel. And Prosus is asking the EU to drop a requirement that it sell its Delivery Hero shares should the company be sold to Uber. According to people familiar with the matter, the internet services company, which holds about 17% of Delivery Hero, doesn't want to be forced to sell its share to Uber should the deal get approved. Delivery Hero shares today surging above Uber's €10 billion takeover offer. And Pope Leo says artificial intelligence should be disarmed to protect humanity. In his address to the Catholic Church, the Pope called making AI more human-friendly, shifting away from using it to achieve geopolitical or commercial gains. Pope Leo also warned that world leaders should not use war as a political tactic to distract voters from domestic problems. And in entertainment, The Mandalorian and Grogu won the weekend box office. The film, which is the first in the Star Wars franchise in 7 years, made $102 million in ticket sales in the U.S. and Canada over the 4-day weekend. Although it would be considered a strong start for any other big-budget release, it's among the lowest debuts for a Star Wars movie since the franchise owner Lucasfilm was acquired by Walt Disney back in 2012. Those are your stories. Here are your markets. As we head out to the close here in Europe for this session in equity trading, the Euro Stoxx 600 is up 1 percentage point, really closing out the day at an all-time sort of session high here for the Euro Stoxx 600. The DAX up 1.9%, and the CAC 40 over in France up 1.9%. NASDAQ futures readying for another big open tomorrow morning when cash trading goes back underway in the United States, up 1.3%. And you see there at the bottom of your screen the FTSE MIB in Italy, which broke today for the first time over its all-time record high for the first time in 26 years. Elsewhere outside of the equity market, we look at the currency market. The euro bid against the dollar this morning, or this afternoon, I should say, up by about 1/3%. We see yields across Europe falling. We see that across the globe. You can see there the German 10-year down about 9 basis points. Some real questions as to whether or not the ECB will have to raise rates if indeed there is a deal with Iran and the United States. This is Bloomberg.
Hello and welcome to special coverage of Bloomberg New Economy, thriving in an age of extremes. I'm Eric Schatzker. It's time to rethink some long-held assumptions about trade, technology, and investment. At the New Economy Forum in Singapore, we brought together CEOs, investors, and government leaders for candid conversations about how to navigate and prosper in this age of uncertainty. The strategic shifts reshaping our world are accelerating, with profound implications for businesses, for countries, and for societies.
We are living in an age of extremes. Hard power is back in vogue. Weapons are smarter and deadlier. Alliances have fractured. Anger is toppling regimes. Pillars of the global economy are under attack. Climate is sliding down the priority list. Intelligence is becoming a commodity. These extremes mean dialogue matters more than ever. The world is at an inflection point. The choices we make now will echo for decades. So we must choose well.
Few places epitomize the challenges these changes present more than Singapore, a nation balancing deep ties with China, its largest trading partner, and the United States, its biggest investor and key security ally. We'll start there with Bloomberg editor-in-chief John Micklethwaite speaking to Singapore's Prime Minister, Lawrence Wong.
The intense competition and rivalry will continue, I'm sure. The mutual suspicion and distrust remains. But the guardrails will ensure that the rivalry does not slide into a full decoupling or worse, confrontation and conflict.
You also talked about a post-American order, which sort of interested me because it implies that America's move towards isolationism and protectionism is not just Donald Trump. That America no longer will be a champion of globalization, no longer be a sort of partner that you can rely on in the same way as you did. Do you really think that America has gone?
We hope not. When I said post-American order, I was referring to the forces that are driving us towards a more multipolar world.
Yeah.
So the unipolar moment where America was the leader that helped to guide, underwrite the global system, that moment I think is over. So the old rules do not no longer apply, but the new ones have not been written. But as we transit into this new multipolar world, it's not as though every pole remains the same. America is still the biggest, most powerful country, and still maintains, America's leadership remains vital.
Do you think in the end, a country like Singapore will have to choose between China and America? You've managed to avoid that so far.
Yeah. And the pressures will always be there. The great powers say we don't want you to choose, but of course each one wants us to be a closer friend to them. And that's always, the tension is always there, the pressures will always be there, but at the end of the day, we don't have to choose, really. We have to, I mean, it's not issue by issue. There will be some instances where we look at the issue, and we so happens that the particular position we take is the same as the US, for example, or as China, for example. But it's not from the lens of choosing one versus the other. It's from the lens of Singapore's national interest.
The administration seems surprised by the rare earths flex, or at least maybe not ready for it. Were you surprised at how aggressive China was in that moment?
I'm not surprised because I think the Chinese have been preparing for, Trump 2.0 for quite some time. And I think that they knew that they had certain points of leverage that they would be deploying. And so, no, I'm not surprised at all. I'm not surprised that they thought that that was a flashpoint of leverage that would allow for the conversations to be, perhaps more balanced. I think it's great that both sides determined to try to buy some, de-escalation. I wouldn't have high hopes for 2026 being the year that those
Kumbaya.
Those issues get resolved. But I think domestic politics on both sides are playing a role, and I think having a little bit of a détente is a good thing.
I was surprised. Actually, I was the other way surprised. I wasn't at all surprised China played that card. I was surprised that the administration seemed surprised that it happened and didn't seem to have a plan for it. I mean, that's a huge amount of leverage that China had. It seemed kind of obvious they would go there. And I think we're foolish if we think they won't. There's so many points of leverage, which is why I don't think there's going to, I think this US-Chinese relationship over the next couple of years will be sort of the way it is now, status quo, because neither side wants or can afford escalation.
What are the risks of ongoing and existing disputes, even among these other nations? We have the ongoing China-Japan diplomatic spat, for example, throwing a wrench to the ongoing efforts to build a different system on the sidelines.
Well, I think, the point was made earlier that we don't have this kind of strategic trust. And I think I'm very glad that the US and China have reached some agreements and understandings, but it is a kind of cold peace. So we have to recognize that that's the landscape. And in that landscape, you're seeing some deepening between countries and their frameworks. What's happening here in Southeast Asia is particularly positive and I think forward-looking. But you see Europe developing new frameworks with Latin America. You're seeing new corridors between the Gulf and Asia. And I think, some of these commitments that have recently been made are going to see both increased investment in the United States and some de-risking from the United States.
What's important here is to realize that there's been major shifts. So 20 years ago, you could summarize global trade by saying China manufactures, the US consumer buys, and that's global trade. Subsequently, China's been manufacturing for the world. What we're seeing more recently is Asia buys Asia.
Do you see, Georges, a world where you could also have competing financial systems, actually, or splitting off in different networks? Or is that a step too far?
So the short answer, Francine, is no. Now, there are some countries, some jurisdictions that have been excluded from the financial system for, many for years, some for decades. Those countries have been excluded for various geopolitical reasons, and they're not in the financial system. Everything else, we see it as a cohesive financial system. I want to give you some illustration, Francine. 60% of our largest customers, wholesale customers, in mainland China are US companies. And mind that these are not US companies who are looking to manufacture in China to sell back into the US. The vast majority of them are actually manufacturing in mainland China for the China domestic market or for the Asian market opportunities, right? Now, they are very successful. They're making very good revenues and very good profits from this business, and they're paying very large dividends back into the US for the US shareholders. So that is not going to go away. That is the reality of how this world is integrated and how the financial system is integrated.
Jacques, where are we actually in this global realignment? Are we 60% there? Are we 70% there? Or is it ever evolving?
Right. I guess under this theme of realignment, there are several threads, right? Let's say on trade. With the tariff and all this adjustment, it's not really the fundamental, right? Because the fundamental has to come down to investment savings imbalances across countries. It's a very difficult rewiring of that. Essentially, I think the Chinese need to increase their consumption. The Americans need to reduce the consumption. But that's a very difficult sort of balance to achieve. Trade, in a way, is a symptom of that.
Coming up, the world of investment is being remade before our very eyes.
Why does the world need the next $5 or $10 billion public company when no one cares?
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
You're watching special coverage of Bloomberg New Economy thriving in an age of extremes. I'm Eric Schatzker. Today, we're witnessing more than just seismic shifts. The old rules of investing no longer apply. From geopolitics to disruptive technology, global capital is adapting to a new reality. Supply chains in flux, tariffs and trade wars, and the promise or threat of AI. In Asia, and especially in Singapore, this building storm has huge implications. Strategies must be re-engineered for a hazy future.
And my worry is that we are going to be unable to deal with the global commons. It means climate change, pandemics, the challenges from AI. We won't be able to respond adequately to it because the two key players either are disrupting actively or are spoiling for a fight and are certainly not willing to restrain themselves with multilateral rules imposed by Lilliputian countries, big and medium and small elsewhere. There is still a majority of countries, and even I would say the majority of global GDP, that still wants to operate on supply chain efficiencies, on economic integration, on rules-based globalization. The only thing is the enforcer in chief is no longer there. And there is a need, therefore, to assemble a coalition of the willing. So what you're watching now, all that scurrying around by medium and small economies, is to keep globalization alive, reform what needs to be reformed, and there's a lot that needs reformed, but to work together in a more collegiate way, knowing full well that the underwriter, the enforcer, is not going to be doing the heavy lifting. So that's where I think there is a glimmer of hope.
We've made a massive change to the financial system in 2008. We collectively stared over the abyss and decided to reform. But while we were focused on the banking system, which was the focus of almost all reform, we really haven't kept pace with what's happened in our markets. So our markets have undergone massive shifts since 2008. So think about the following. 80% of trading, S&P 500. 10 companies, 40% of the S&P. Almost all the return in the market, 7 companies. Really 2 companies. And sometimes I jokingly say we levered the entire return of the US retirement system to NVIDIA. It's not clear to me that that was the purpose. Why does the world need the next $5 or $10 billion public company when no one cares? And what's happened is other markets, private markets in particular, have grown large enough to be able to provide companies debt and equity for a really long period of time at large scale. Stripe is private, SpaceX is private, OpenAI is private, Mars is private, the NFL is private. It will not surprise me to see 50, 100 really large companies that have elected to stay private because they can. So is that good or bad? I don't know. But it certainly is different than the world that we grew up in, where everyone worked to get to the public markets to be able to raise capital.
Businesses need certainty, right? And so that's what they foreign companies are asking, well, what do you think about tariffs? What do you think is going to happen with this? And I think as Americans, we've had a pendulum swing approach from one administration to another that I think is very dangerous long term. And what I mean by that is, Oklahoma's heavy oil and gas, as you know, and we've got great pipeline companies. And, in the one administration, they kill the Keystone Pipeline, and the next administration brings it back, and then the next administration kills it. And we just can't have it. And finally, the businesses are just saying, hey, no more. We're not gonna keep investing these dollars.
There to date have been very few restrictions, but some beginning on capital flows. So if you think about sort of the hierarchy of tariffs, if you will, it's goods, it's services, it's capital flows. And so I think the trend that we're seeing, you heard a little bit of this on the stage this week, of some of the large asset owners from other countries limiting their investment in the United States because they're unsure about that. But what I'm seeing around the world is friendshoring, if you will, of capital flows. In other words, people who are increasingly putting capital into their own country or their friends' countries, and they are increasingly pulling their capital back from countries that are perhaps not on the friends list. And I think that's a huge change for the capital markets that we're seeing today, and will be long-lived.
Well, I think we understand all the objective of the sanctions. And I think in the context of the Russian-Ukraine war, I think the objective was very clear. But I think one thing that often politicians do not always understand is the long-term implications of those sanctions. In the short term, I mean, it makes a lot of sense. But, there is an erosion of trust, which is really driven by those decisions.
Is Europe really going to stomach the reforms that it needs to do to be able to compete? Honestly, how many German entrepreneurs ended up in the U.S. because they'll say, I can get capital there, I can get innovation there. It's not that the talent isn't there, it's just that the market isn't there, and the mechanism and the regulatory environment isn't such that people can be successful there. And so if you look around the world, I mean, it's really U.S. and China that has the great innovation that's happening.
What we see is that China to U.S. traffic is down because of, especially as a result of the de minimis going away. However, China intra-Asia flows are up. China-Europe flows are up. China-Latin America flows are up. So, and then the intra-regional numbers is, also now starting to change as well. So this is a much more complex question than just China plus one at this point. Like I said, there's a new equilibrium state being formed in these new supply chain patterns, and they're much more regional in nature. And like we said, the mix of China's exports are now fundamentally shifted away from the United States, primarily in the B2C now, perhaps more in B2B later, and then they're moving into other lanes.
Are these disruptions permanent, or are we looking at them lasting through President Trump's term?
I think disruption doesn't follow election cycles. They follow actually fundamental changes in the markets. So I think these disruptions, they will stay.
Coming up, how to tackle the disruptive forces of AI.
When we had the previous digital revolutions, people even in the US and the UK were very positive about the technology, and they are not in the same way today. They are more fearful.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
You're watching special coverage of Bloomberg New Economy, thriving in an age of extremes. I'm Eric Schatzker. In the 3 years since ChatGPT burst on the scene, AI has become a disruptive force, reshaping business models, balance sheets, and the employment landscape. Most leading AI developers foresee a future in which AI doesn't just match human intelligence, it goes way beyond it, redefining what we thought possible. For businesses, the question isn't just where do we invest, but how do we protect what we have while preparing for what's next? For governments, the challenge is managing both opportunity and disruption. The same AI wave that promises productivity also threatens jobs, social structures, and competitive positioning. We'll begin that part of the conversation with the former Prime Minister of the United Kingdom, Rishi Sunak.
We're living at a time which is both paradoxically the most dangerous of our lifetimes, but also the most transformational. I say dangerous because the old unipolar world order that we were used to is gone. We're not quite sure what's replacing it. Great power competition is back. Technology is obviously a part of that. But also this is transformational because AI, I genuinely think will be a general purpose technology like electricity, like steam, and these things don't come along that often, and when they do, they have the potential to transform societies, economies, and that's really exciting.
What kind of grade would you give generative AI in terms of how useful it is today, with A being the best and F being it's a total flop?
I give it an A.
Okay, and why is that?
And I would tell you why I give it an A. It's not because of what we see today, but what might come. We got to truly believe that our artificial intelligence is going to create a new age of innovation. There is so much capital being invested. So when I look at the potential today of artificial intelligence, not just generative intelligence, you have industrial AI, artificial intelligence coming in, and all of the things that are currently in development and the amount of capital that are being deployed, we are only witnessing the beginning of a new innovation age. I truly believe that. And the last time we saw that was 25 years ago.
Amongst Western countries, and particularly the Anglosphere in particular, there is actually an enormous amount of fear and skepticism about AI.
There's a lot of fear.
And that is interesting, and it's different in two respects. It's different to what you're seeing in countries like China or India or the Gulf or here in Asia more generally, where people have just a different view about it. They're more positive about it, impacting their lives. They feel good about using it. You are not seeing that in the West in the same way. And secondly, it's different to the past, because if you look at the last digital revolution, you didn't see that. And so when we had the previous digital revolutions, people even in the US and the UK were very positive about the technology, and they are not in the same way today. They are more fearful.
This is actually something that is really important. We have to make sure as we're building AI that we're thinking about the global implications of this technology. Part of this means how do you develop the models as well with the world in mind. It's not something that we can think about as an afterthought. AI is not a technology where we have national borders. You launch a model and it's available worldwide. So we have to think about everything from access to literacy to actually making the models easy to interact with. Things like making it multimodal from the beginning, which we've done with Gemini, which is you can talk to it, you can type it, you can take a picture, and being able to do that in many different languages, being able to transform that output. So you're lowering the barrier for people in general to use it.
Very few countries in the world will be able to have all the elements of an AI ecosystem that are desirable, that are good. It's a given, it's a reality. I don't think it's going to change. But I also think we are not without agency. Within each of our own countries, we do have the ability to reshape things. And some of the areas that are worthwhile reshaping in order to be more ready for an AI future is investing in infrastructure, making it happen. You may not be able to do it on your own, but there are organizations like the World Bank, IMF, even the United Nations Development Program that are very alive to this problem and leaning forward to help.
And for young generation, it is our responsibility to ensure they must understand AI and they study AI because the future is there. It is also time for us to redesign how human and machines build the future together from data and machine learning. The intelligent economy is not only about technology, it is about preparing people. I believe that there will be more jobs and more opportunities to come.
That's just some of the discussion and debate from Bloomberg New Economy, thriving in an age of extremes in Singapore. You can find much more at Bloomberg.com and on the Bloomberg Terminal. I'm Eric Schatzker. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is Bloomberg Television. I'm Oliver Crook in Brussels, bringing you a quick live update. Here's a look at what's making headlines around the world. Senior U.S. officials say the United States and Iran are closing in on a deal that would reopen the Strait of Hormuz. U.S. officials told reporters that nothing is ready to be signed as negotiators work through precise language on key issues, and the final approval could still take several days. President Donald Trump says the negotiations with Iran are proceeding nicely and adds that it should be mandatory for nations including Saudi Arabia, Qatar, Pakistan, Turkey, Egypt, and Jordan to sign on to the Abraham Accords, normalizing diplomatic relations with Israel. And oil is falling on signs of progress towards a deal with Iran. Lower prices could mean a break for U.S. travelers as the Memorial Day holiday traditionally marks the unofficial start of summer, a period where demand for gasoline, diesel, and jet fuel typically rises. And foreigners seeking permanent residency in the U.S. will now have to leave the country to apply for green cards, except in extraordinary circumstances. The policy could leave applications stranded for extended periods of time and disrupt families and companies sponsoring foreign workers. Immigration lawyers say the move is legally questionable and needlessly chaotic, and warn that litigation is likely. Those are your top stories. Here are your markets as we approach the closing bell. Here in Europe, the Stoxx 600 up 1%. The DAX over in Germany up 2%. Similar story over in France. The CAC 40 up 1.8%, and NASDAQ futures up 1.3%, primed for a record opening tomorrow at the resumption of cash trading in the United States. The euro trading a little higher this morning, up about 0.4%, and the yield story across Europe down 9 basis points in Germany, down across the board. Those are your markets. We'll send you back to the tape programming. We'll bring you another live update in just under 30 minutes. I'm Oliver Crook, and this is Bloomberg.
Chris Cox says playing Dungeons & Dragons taught him a lot about being a CEO.
Being a dungeon master is basically being a collaborative storyteller.
Building worlds as part of a team informed his views on building a company.
I think, being a CEO is equal parts head as well as heart. And when you understand game design, you understand systems that underlie how people behave. And then the heart part of it is, how do you tell a good story? How do you get people believing in the mission?
Soon after Cox became CEO of Hasbro, the company that now owns Dungeons & Dragons, he needed to hire a CFO. He decided that person should play not one, but 2 critical leadership roles.
Were you looking for a joint CFO, COO? Was that already the position?
Yeah, that was ideal.
Cox picked Gina Getter to be his teammate in Hasbro's C-suite. She says heading up operations and finance puts her ahead of the game.
I did tell Kristen, I'm like, when we do these traveling ones, we should figure out who else to go on stage besides just me and Chris and Holly. I don't see it as 2 separate roles. Every single decision, every single action that you're taking links back into the financial statements. We are really only working on the things that matter and ultimately lead us to delivering our financial commitments.
Everybody I've talked to about you says you're an operator expert. Is that your role here?
I am not an accountant. I love accountants. I hire fantastic accountants, but I am a finance person. I gravitated to more of the roles where you're embedded in the business, and it's where I find myself at Hasbro.
You get to the execution phase, and that's really where I think